Testing. Are we live? Wait for it. Wait for it. Wait for it. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hi chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watch This in main channel. First link for the Scream Alerts Bootcamp and Real Estate course. But today's going to be another interesting Powell day. We got Jerome Powell. He's going to be coming on actually in about 15 minutes, right when the market opens. So we have him. You got a couple of earnings. Bank stocks kind of continuing the trend of what they've been seeing here, kind of a mixed bag. Most of them dropping on trading revenue and stuff like that, loan interest, all of those things. So you got some move there. UNH beat on both top and bottom line, but they went down. You got a couple of deals, AIG and Honeywell. So you got a few things, but it looks like the market is going to be looking at Powell. You did get some China data today as well, too. But overall, it's looking like we're going to get another Powell day, and before you know it, you'll be good, baby. You'll be good. We'll be good. You'll be good. So get ready. We are starting a little bit late here. Somewhat clapped, but it will be good. It will be good. I think we're going to have a good day. So good morning. How are you? How are you? How are you feeling? Oh, how do you feel on this wonderful day? Zeyak ya basha. Zeyak habibi. Zeyak ishkorak. Ishkorak. I hope you feel good today. It's going to be a good one. It's going to be a good one. Apple will carry tech today. As long as it is up, we will see. We will see. Blessed, baby. Blessed. I feel blessed. I slept a little funny. I woke up tired as hell, but I said, I said, good morning, Josh. That's what I said. I said, good morning. How are you doing? That's what I said to it. Worked. It worked. It worked. I mean, we got, we're going to get Powell. So Powell's going to go easy on us here today. Let's see. Where is it? What was I looking for? So I got a couple of news pieces for you. It's very, very simple today. Let me see here. But I want to do something else. I like to keep you guys on your toes. You know what I'm saying? You never know. Keep them guessing. Keep them guessing, baby. Keep them guessing. Keep them guessing. Huh? Let's see. I'm just going to go through the watch list. Don't forget. Don't forget about the beautiful watch list, baby. Second link every single day. We got the recap. We got everything you need to be flying these streets, baby. Let's see what we got. Buying UMC Archite tomorrow. Not as bad as I thought. Square, Roblox, Qualcomm. The bill is huge for Tesla. Welcome, feeling blessed. Say humble. Some will come out tomorrow. Visa, Netflix. Open up, brother. I love you. God bless you. Let's go, baby. Drive mode. Hey, man. Keep the Chad safe. Send to the Jets. Fine words. Papa Powell. Tomorrow I'm buying the dip on Zach. $3 trillion budget means continued long-term inflation. Bold title. Let's see the statistics. We will find out. Let me see if I could even get you this, too. Here, let me Jeffrey Bezos, CEO, entrepreneur, born in 1964. Jeffrey Bezos. It's a good one, right? I'm telling you, it's a good one, I think. I think it's a good one. Jeffrey Bezos. Bro, I saw a video of Jeffrey Bezos getting bullied. Bro, there's a video of them bullying Jeffrey Bezos. You know that? Bro, there's a video of Jeff getting into his car, right? He's getting into his car, and these two kids are bullying him. These two kids, they start recording. They're like, hey, Jeff, do you ever feel bad when people die? And then someone called. Then this chick made fun of his lazy eye. I was like, what? How you gonna do that to Hefe? Right? Oh man, it was crazy. It was crazy. Bam, but I'm still here, baby. New Off-White Air Forces. Josh and Funny Chad, baby. God bless you. Confirmation bias. Netflix, Apple continuation. Coin. What do you think about Neo? I don't really think about it. Love thy Chad, baby. EDM. God damn it. Long forward Apple, SNDL, MMLP, short BA, BAC, Wells Fargo, QQQ. So the ghetto spread got back in. Netflix in the money. Ooh, Netflix is going to be good. They got that what's it called? That gaming news. So we will see what that is. Here are your pre-market movers organized. You got a couple of moves. Honeywell's doing at least very good. No government. Government said, F it, we're spending it. Continuing the Trump doctrine. First this time, placenta water. What? See, I just that's a weird comment. That's a okay. We gotta go. It's morning. It's early. So here's a list of some of the pre-market movers here. Let's see. As far as big market movers this morning, you got AIG up 5% after agreeing to sell 9.9 equity stake in life retirement business. They sold that to BlackRock. Casper Sleep, CSPR. Shares climb 9% after announcing a U.S. partnership with Bed Bath & Beyond. Cinedigm Corp, CIDM, rises 26% after the company posted preliminary fourth quarter revenue. GameStop dropped 6% after Netflix hired former EA and Facebook effort to lead its expansion into video game. Oh, I didn't even think about that. So GameStop got the reversal. Damn, off of Netflix. Oh man. Morgan Stanley slumps 1.3% after the bank's second quarter fixed income trading revenue fell. Came in below by $200 million. Netflix shares jumped 2% after Bloomberg News reported that the video streaming company is planning to expand into video games. SCPL rises 11%. Scientific Games, after they offer to buy the remaining 19% equity in the digital games developer. That's it. Again, pretty slow so far. Again, you have Powell at 9:30, but usually there's a lot more market movers with some of those headlines. I have not seen too many upgrades or downgrades yet. The base consensus is that we are falling today. Again, they're assessing the growth slowdown with China. You got the bonds moving. Everybody is waiting for Powell and that dovishness. You did not change too much. Netflix is in the eye of the top news, believe it or not. The British pound rose after the Bank of England policymakers said withdrawing stimulus may be appropriate soon. So now the EU wants to taper. China's second quarter growth slowed largely with expectations. So you got that data. We also had jobless claims, I believe, here too. Or which one was it? Dang, today is Thursday. Yeah, you had jobless claims come in. They came in slightly below, which is good. That's what you want. And then you're going to be getting import prices, or I think those came in slightly below expectations. Yeah, everything else, industrial production, all of that came down. So nothing too crazy. Yeah, Powell speaks today in front of the Senate. So yesterday he was speaking in front of the House. So today he is going to speak before the Senate. Seasons of wither. The banks are getting clapped. Again, really about Powell. There was some stuff, Europe and how that's playing out. So we'll see. Let's see what else we got. Oh, it's already 6:25. See, that's what I'm saying. We started late here today, but it was also very kind of warranted. Yeah, he speaks literally in like 5 minutes. Powell is going to come on. So you guys are probably going to listen to him as we're looking for the opening trades. Going to be a beautiful day, baby. Amen. Amen, Boomer. Tell him. Tell him. Let him know. Going to be a beautiful day. It's a beautiful day. You know what it's a beautiful day for? Oh, it's a beautiful day to be an American. It's a beautiful day to be alive. It's a beautiful day to chase opportunity. So, ladies and gentlemen, before we do anything here, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever will in our lives, and that is the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, we want to give a special shout out and salute to all the veterans, active servicemen, past servicemen, anybody who has served this country. We love you. God bless you. Thank you for doing what you're doing. Again, it means a lot. Hopefully you guys look around, you see what's going on in other parts of the world. You got something, and you got a lot of people who have fought for it that you've probably never even got to thank. So I would like to thank you, and God bless you. We love all of you. Shout out to the police officers, the firefighters, the doctors, the nurses, the teachers, all the public service out there, baby. We love you guys as well. So God bless you. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send it the Jets! Oh, it's game time, baby. Horn! Let's Powell. Let's go. You got a Powell day again. You got a Thursday. The week is almost over. Jeffrey Bezos. Born in 1964. Something entrepreneur. Jeffrey Bezos. Jeffrey Bezos. So, at open here, I'm going to be looking at Netflix, Honeywell, Morgan Stanley, Casper, Bed Bath & Beyond. They're doing that deal with Casper, AIG, and Qualcomm. Everything else is going to be monitoring some of the other plays. We still got that Bank of America. Again, there is going to be activity with the banks. I do like UNH. That moved a little bit, but we will see how it plays out. Again, statistically, we should see a lot of movement here with the bonds, and then depending on what we see with the S&P, we will go from there, baby. So I hope you're ready. Keep it positive and respectful. We appreciate you if you liked the video. Even if you didn't, we still appreciate you. We're concerned about your decisions. It's beautiful. Powell is going to be right here at open. Yes, Lebanon Saad Harari steps down as prime minister. That just came through right there. They're not going to load again. So you got about 1 minute. Call them out. Let's see some of the China stocks. They look to be on the high right there. So we will see how that plays out. Keep it positive and respectful. We're glad you're here. And yeah, we're going to have Powell on. There's already updates ready to go. And then Fed Bullard today already spoke. That was another one. Fed Bullard said that they are ready to taper. So we will see what happens. We will see what happens. TSM, yeah, you Taiwan again. Nothing too crazy. I think, yeah, 3%. We'll see how that plays out. Call out any of these. We love all of you. And get ready. Yeah, Bullard said that we should taper. He said we could start tapering. We've met all of our goals. So according to Bullard, he's like, yeah, we in the game. 10 seconds. Get ready. Get ready, ladies and gentlemen. All right. Ding, ding, ding. Round 1. Fight. Let's see. Not stepping on Powell's toes. Nah, they all have their opinion. That's the whole point of having like the Fed and a lot of different people on the board in general. Delta, remember Delta did good yesterday, so we're opening up pretty even here. I mean, NASDAQ is actually hanging on. It's not down too much. Dow Jones is the leader on the downside, or even the small caps. Let's see. TSM down 3.5. Morgan Stanley down 0.5%. Yeah, Powell's going to be starting now. I can pull it up here in a little bit. We'll see. I already have the... Let's see. UVXY up 3. KR Kroger. Who else got one? Someone else got a deal this morning. I forgot. I think Honeywell. Honeywell signed a partnership. Again, I wanted to look at that one, but they're up another 1% there. Bonds are crazy. Good morning. Netflix 1.4. Again, the video game news, I thought that was already priced in, believe it or not. I feel like I heard about that news before anything even happened. GM 1.2. Archite down 0.75. Snap. Netflix going up there on the top. Honeywell still going. I want to see what those plays. Yeah, the Honeywells are up 160 now. JPM, I'd give it like an hour here. Wait till the banks kind of wash through, and then again, I think people will get very, very quickly over to this one. Jeffrey Bezos.
Small businesses are reopening their doors. Workers are safely going.
So again, it's starting now. I'll put it on right when Powell gets there. So I have it up and running here. We could even get the live transcript if you want to see, but we're gonna be bouncing through some stocks here. Bank of America 1.2, Gap down 2. The Honeywell plays up. I mean, that's the one I was looking at. It's up 160%. Netflix is still going. SPY making a move here. NASDAQ did slip up a little bit there. Surprisingly, in that 2 minutes, you had a lot of flip-flop. Remember, TSM, they're dropping. That's another 1%. Not UWMC. What's the other one? UNH. United Health down 0.5%. That one could be interesting. SGOC. I think that's one of the hype names from the other day. Thank you, Riley. Thank you. Yep, 15. Thank you. Good work. Amazon down 1/4. Yeah, Honeywell's probably going to do good. Like I said on the watch list, I think they might have the ability to be it reminds me of Oracle, especially with the DOW. Oracle's up. Where's Facebook? Facebook's down. Microsoft. All of them are down except Netflix. Netflix is the only one with the news. NASDAQ is now the leader on the downside. Small caps are leading more, but we will see. LGVM, McDonald's. I want to see McDonald's. Oh, McDonald's down 0.4. That could be interesting. SPY hitting a new low here. Myrna 1.7. AMC 34. Let's see, where's Apple? Where's our leader? Oh, even Apple's down. All of them are. Let's see, what is the breakdown right now? Walgreens red to green. So here it is. Right now, you have 372 names that are down. So the S&P has 375 names down, 125 that are up. Let's see the Dow. Dow, only 10 names are up, 20 are down. So mostly everything is looking like it's weighted to the downside here at the open. JD Pop. I think Baba started getting some movements too. Yeah, JD's up 1.8. Baba's up 1.1. Bank of America, Wells Fargo. AMD low of the day. You said Walgreens red to green. Oh, that's nice. Again, they raised the dividend news was the key. Baidu, will Honeywell hold? It depends. It's up a lot here. It's definitely, I think it's outpacing. I think it's your leader on the Dow. Yeah, literally right now, Honeywell is leading the Dow Jones right now. So if the Dow Jones was going to slip, it would be because of Honeywell. So usually you get kind of one of these big moves. You saw it yesterday. Yesterday's a good example. You know, it had a big move. It'll chill out for a little bit, but then as long as it keeps reacting on its own and not really, you know, and kind of plays its own trend versus reacting to the market, will be good. Jeffrey Bezos. AMC Wilhelmina down 7. Pandemic low. Again, Powell is not on yet. The thing has started. We're just waiting for him to get on there. Again, I don't know if, I think he had his prepared statements. You made the Honeywell free. Good work, baby. Good work. It was a good play. Even then, it's still in there. It's nice. I like. Walgreens making some moves. Let's check TSM again. Damn, 4.7. That's crazy. Let's see. If that bounces, that will be good. Otherwise, you might get a lot more pressure there with some of the other chip stocks. QUBT IPO. There's a F5, F45 as well, too. Honeywell has big spreads because it's a slow mover. It's not one that really moves a lot. Is that a 30-cent spread? Oh, my God. Yeah. So on the Honeywells, there's literally a 30-cent spread. That's 50%. So your bid is at 60, and then your ask is at 96. So that's a good sign, though. That means there's, I think there's volatility in that, too. DAL pop. Someone said that in the morning. Delta's coming up. Remember, they were down yesterday. They have a lot of ground to make up. I think, was it AAL, UAL as the leader? Airlines are actually doing really good. Airbnb sold off to 130. Netflix just switched gears there, so that was the leader there. NASDAQ is down almost 0.5% now. Jeffrey Bezos. Overstock dumping. Yesterday was its worst day in 2 months. I mean, it's down 0.07. That's right. Is that 8.7? No, that's 0.07. Yeah, it's good for now. They really led any downside yesterday. Who else? I think it was Beyond as well, too. Sophie, options alert, $15 call. Oracle's still green. TLT making a bounce right there. Let's see what we got. What is the Reddit stocks been? I mean, Jim Cramer this morning, he said that they need to put in new cash. And then he said he hopes that people don't spend the child tax credit on there. But then he said, y'all need to come in with new money. So I thought that was very interesting, to say the least. Oh, wow. The Honeywells are up 200% now. That's not bad. I don't know at what price, though. Kind of like giving them an idea. It was funny. The way he said it, I was like, wait a minute. Huh? So much for the stats about the day after Powell. My guy, what time is it? It's been 9 minutes. It's okay. Relax. It's been 9 fucking minutes. Okay, you got Powell today. You got a lot. Y'all just 9 minutes in. This is why we can't go anywhere. This is why we can't go, and that's it. I'm not taking y'all anywhere. This is why. Every time it's a 7-hour trip. We are driving from San Diego to further than Vegas. We got 7 hours. We will see. We've seen a lot this year. We've seen a lot. No, but it is, what's it called? You are, I think the bond volatility is there. I mean, moving 0.75, but you also get the earnings. I mean, again, that's why I'm kind of banking that the market is going to ignore, unless you get a real snapping, the market is pretty much going to ignore a lot as we get ready for earnings. But the bank earnings didn't help. Taiwan Semiconductor didn't help. Let's see. So everything's starting to slip right there. NASDAQ down 0.6. Biogen been getting a lot of back and forth. Watch Taiwan Semiconductor. If that drops again, that's already down 5. What was it? Biogen, they got a lot of the back and forth with the FDA. That's been lately. Again, I think yesterday there was a statement. I think the head of the FDA said that we did rush it. They said that they did rush the whole thing. Or they said that there was some, I forgot the exact quote, but there's been updates all week. All the memes getting volume. Is GME still down? GME, yeah. GME was down off the Netflix news. Netflix still green, but it gave up some of those earlier gains. They're still going back and forth. Powell has not spoke yet. In the EV news, Not that I'm seeing even this morning. I mean, a lot of the pre-market recap, you didn't really get too many things. There was just slight pieces of news. Again, a lot of it was focused on earnings and Powell. So it's a very again, I think we're going to trade a lot like yesterday to a degree, depending on maybe during Senate day 2, Powell could come up with something, but we'll see. Born in 1964, Jeffrey Bezos. Jeffrey Bezos. I'm telling you, it's a good one. Where are these? Did you finally watch this special? No, I just keep hearing the song. And then I saw, bro, they bullied Jeff Bezos, man. It was crazy. I was like, man, that's it. Imagine being Jeff Bezos and you walk down the street and you get bullied. That's insane. Nordstrom down 2.6. Wasn't Gap up? No, Gap was down. TSM hitting another low. How's UNH? UNH only down 1.3. Carver is up on the high. Baba making a move back up there. Baidu is leading 1.6. I think JD is up another 2%. I notice UWMC correlates pretty heavily with the average rate on 30-year. Yeah, it's just the bonds because, mortgage, 30-year bonds, 30-year mortgage, even the 10-year, 20-year plus too. But a lot of times any industry based on that, any of the finance mortgage stocks, they will. Bond rates, fixed income can do a lot. There's work to do, baby. Let's get hyped. Let's go, baby. Amen. Amen. Just wait till Powell. You're going to have, again, the market's going to make this move here for maybe another 5 minutes, 10 minutes. And then once Powell starts speaking and then after into the first questions, we should see. But again, the market will get pretty bored with Powell, but watch him pretty closely in a weird way. Carve halted now. Oracle coming up. Look at TSM, man. That one's surprising. Bank of America is still holding up. That's great. The premiums, though, I'm down on the Bank of America, even though it's right at the money. News on AHPI. I could check, but I have not heard much. Jeffrey Bezos. TSM at the money, short vertical. Ride going crazy. No, there's not any news for Allied Healthcare today. They just had nothing came up on my thing.
Increase in decades.
So Powell is speaking now,
at an especially rapid
but I'm pretty sure it's a prepared statement. TBT on the high. The hell is that? So there you go. So watch if the bonds start moving here. Again, this could free us up a little bit. NASDAQ recovered somewhat. Dow Jones is still the leader. Honeywell is literally, without Honeywell, Dow would have been clapped. Carve, halt, workhorse moving. How did, what's it called? OSK. That's still up. Affirm on the high. A lot of bond movement out there. Actually, let me see. I don't know if Powell said. He shouldn't have said anything. And you have Morgan Stanley earnings right now. So, yeah, last update was Powell. Laura, or no, who was it? Tom Toomey says it's very difficult to get inflation genie back into the bottle once it's out. UWMC, it's probably moving. Is it moving there with the bonds? You pay attention to the VIX. Haven't watched it in a long time. Yes, pay attention to it when it's kind of more telling. You know, the VIX it's there every single day. It's understanding the fundamentals of it, but it's not. You know, lately the VIX hasn't really done anything in the sense that it's kind of been, you know, when it's in one of these states, it's not really highlighting anything in that sense. So I do during volatility, it holds some more weight, and then we even talked about the what's it called, the VIX and the other one. I'm blanking right now. South Africa declares force majeure amid riots. Junko Solar rises 8.3. Arlo is up 13. Arlo, that was from yesterday. No, not the skew. Yeah, that's what the skew. So there's the VIX, which is, you know, the VIX is a put to call ratio. It's showing, you know, that's how they determine the VIX. That's why they call it a fear gauge, because if the at the money put to call ratio, if there's more puts than calls, more open interest on puts and calls, people, you know, that shows sign of fear or not. Apple's picking up now. Apple's positive. A firm is on the high, and then the skew is like the VIX, but for out the money puts. Oh, South Africa is crazy right now. South Africa a couple days ago, they jailed one of the old presidents. Was it Kuni? I forgot to say his name. But they jailed him, and then it just led to a massive riot. All like it's crazy actually. If you haven't taken Zuma, that's who it was. Yeah, it is crazy. Actually, like if you look at it, it's like they're lighting freeways on fire. It's just like the malls are just like y'all thought you saw riots here, y'all ain't seen shit. It was crazy. No, President Zuma, former president, they jailed him for corruption, but a lot of people reacted a certain way. Oh yeah, I would not forget about Cuba as well. Dude, Cuba's insane too. I encourage a lot of you to look into that because that's a travesty more or less. It is crazy. I saw a lot of people. There's been a lot more Cuba articles coming out. I live in Johannesburg, and you're right. Y'all ain't shit. Thank you. Cuba's a little bit. Cuba's a lot more, sadly, in the sense that, and kind of fortunately, Cuba's a lot less violent than the South Africa one. It's crazy. You jail for not showing up for court. Oh.
That progress will continue. We will continue
Powell
these
still
discussions.
giving prepared statement. Yeah, high ticker flying. I mean, NASDAQ did recover a lot right there. Again, if Apple, Netflix, let's see, Facebook, Viacom on the high. Yeah, Facebook's hanging out there. Viacom up 0.5%.
Thank you. I will look forward to our discussion.
Thank you, Chair Powell, for your testimony. Our economy looks a whole lot better today than it did last year. We still have a long way to go. Yet, many of my Republican colleagues.
Yeah, well, all right. I think they're about to start the questioning. Your wife is Cuban. Oh, yeah. No, I mean, I think the Cuban situation is a lot of people, I think it's based on lack of food. is what I would, in my personal opinion, what I would bring the first. That's what I think it is. So you guys could go research the situation. There's a lot. I am shocked though that you don't have the same people who are vocal a lot about a lot of atrocities are not vocal on that matter. It's lack of There's a lack of a lot of things going on there. It's honestly quite the social paradox that I've witnessed. Lost his voice at the Uncle concert.
Chair Powell, my question is, you've supported Vice Chair Quarles as the Vice Chair of Supervision, his efforts to weaken capital.
All right, let's see. I think he's gonna start getting questions here. So let's take a listen. I'll be scanning through. I'm gonna be quiet here for a little bit. I can pull up the transcript, or if anything happens, I will alert you on it. Born in 1964. It's still muted.
The Minneapolis Fed are outspoken on the need for the board to keep its eye on financial stability. Weakening financial safeguards doesn't help working families. It just increases the risk of a financial crisis, wiping out everything they've worked so hard for. We're finally making progress, as I said earlier, and workers are getting a better seat at the table. We can make the economy safer and fairer with higher capital requirements of the biggest banks. My question, Mr. Chair, is why have you been against stronger capital requirements and using the countercyclical capital buffer in curbing runaway executive bonuses and stock buybacks?
So I guess I would say with the stress tests, the severity of the stress tests has very much been maintained. The effect of the stress capital buffer overall was to raise capital requirements for the largest firms, and they did manage to get through the recent pandemic and the acute phase of it and the recovery, and did their jobs during the so I think that by and large our financial institutions are well capitalized. We limited their distributions during the pandemic, and their capital levels actually rose quite materially during the course of the pandemic. So the financial system is strong and the banks are strong. I have felt, and I've said on a number of occasions, that the level of loss-absorbing capital in the system is about right. I think the experience of the pandemic bears that out. I would be prepared to deploy the countercyclical capital buffer if I thought that the conditions we laid out were triggered, but I haven't so far felt that way.
Every time the Fed is, thank you for that answer, every time the Fed's taken action to lower capital standards, it claims that doing so would increase lending in the economy and otherwise promote economic growth. That hasn't been what's happened. Instead, buybacks, dividends, executive compensation have continued to go up even during the pandemic. We empower workers by maintaining tight labor markets and strong financial regulations. I believe strong financial regulation enables the Fed to be more aggressive in helping workers, and that should be
High
your
ticker
mission.
is gassing.
It's time, Mr. Chair, respectfully, you change the way you think about regulating the biggest banks. One other question, Mr. Chair. In addition to adopting pro-worker financial stability policies, the Fed can further help communities of color by leading the push for a strong update to the Community Reinvestment Act. We've seen some good developments there with a different controller of the currency. Last year, the Fed unanimously released a framework for modernizing CRA that was well received by representatives of the civil rights community and by banks. My question, Mr. Chair, is the Federal Reserve still committed to full, not piecemeal, full CRA modernization with an interagency approach, and what is the timing?
We're very much committed to that outcome, and I actually feel good about where we are on this. We're resuming our interagency discussions on it, and I'm optimistic that we'll come out with something that has broad support among the community of intended beneficiaries, and by the way, also among the financial institutions, and that it will be a good, solid updating after many years into the more technologically enabled era that will help the intended beneficiaries quite a bit.
And the timing, Mr. Chair?
Working on it now. I think you'll see we're reacting to a very large, analyzing and reacting to a very large quantity of comments and discussing that with particularly with the OCC, but also the FDIC. It's not clear what their role will be at this time, but we hope they'll join in. I think we'll be making visible progress in coming months. I can't give you a finished date yet, but I think we're moving now.
Okay, thank you. We will be watching. Senator Toomey.
Thank you, Mr. Chairman. Chairman Powell, in your testimony, you said that substantial further progress is still a ways off for the economic recovery, and I think you cite that as a justification for the extremely accommodative policy that you have. I don't think you're referring to the need for substantial further progress in GDP growth. I think it's employment that you're thinking of. The unemployment rate has declined dramatically, but it hasn't reached the pre-pandemic
This is actually
lows.
a big key. This is what we talked about on the watch list.
And I think you've also made references
Let's see
to
what he
the
says
workforce
about the
participation
third
rate. I guess
signal.
my question is, isn't it entirely possible that for a variety of factors, not the least of which is legislation that we've passed, the labor force participation rate may not get back to the record highs that we recently saw, and we've made it more difficult for the unemployment rate to get back to the record lows that we were at before? And do you take that into account when you determine how much progress we've made towards full employment?
So what was happening toward the end of the very long expansion, longest expansion, was that people were staying in the labor force later into their careers. And so labor force participation consistently remained above all estimates of where it was going to be. Then what happened in the pandemic was a lot of those people retired. So there have been really significant amounts of retirement. So the truth is, we don't know where that's going to settle out, and it'll take a period of years for us to really understand what the new trend is. I don't see that as a problem for the standard we've set forth for tapering asset purchases, which is substantial further progress. We're not going to need to know the answers to those questions to make a decision that we've made substantial further progress. It will be more of a consideration for raising rates where we've set a higher bar.
Okay, I just hope there's a focus on the distinct possibility that we're just not going to get to those levels anytime soon. Let me turn to housing prices a bit. The Case-Shiller Home Price Index showed housing prices across the U.S. as a whole increased in May by more than 15% from the previous year, and that wasn't a base effect. There was no big decline in May of last year. 15% clearly is making housing less affordable.
Damn, he called that out. No base effect on real estate.
A number of voices within the Fed seem to be increasingly concerned about this. The St. Louis Fed President James Bullard said just this week that he is, quote, a little bit concerned that we're feeding into an incipient housing bubble, end quote. Dallas Fed President Robert Kaplan said that the Fed should begin tapering to begin offsetting, quote, some of these excesses and imbalances, end quote. The Boston Fed President Eric Rosengren raised alarms that the Fed's mortgage-backed security purchases may be contributing to the current boom in real estate prices, citing the potential financial stability implications. I guess, you know, I've been clear for a long time, I've been very skeptical about the ongoing mortgage-backed purchases. Are you at all concerned about the unintended consequences that are associated with $40 billion worth of mortgage-backed security purchases that continue month after month?
So housing prices are going up, as you mentioned, around 15%. This is a very high rate of increase. A number of factors are contributing. Monetary policy is certainly one of those factors. There are also other factors. People have very strong balance sheets, so they're able to make down payments. There are also supply factors that are constraining the supply, at least temporarily. So, you know, my best thinking is that the difference between Treasury purchases and MBS purchases for this purpose is not a large one. Probably MBS purchases are somewhat more supportive of housing. That's not their intent, but that may be the effect. Really, the larger point is that monetary policy is supporting this, and that is something, that's a discussion we're going to be having on an ongoing basis. We talked about some of these things at our last meeting, and we'll talk about it at the next meeting in a couple of weeks.
I think that's important. Let me close with a question on a central bank digital currency. During your testimony yesterday, I sensed what I wasn't sure but thought might be a change in your tone about the virtues of a central bank digital currency being issued by the Fed. One of the things you said yesterday is that one of the stronger arguments in favor of a CBDC is that, quote, you wouldn't need stable coins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. Of course, isn't the reverse also true? If you have stable coins, cryptocurrencies in use, then maybe there's no need for a central bank digital currency. I guess my 2 points. One is, it's my view that the development of a central bank digital currency by the Fed would require congressional authorization. I'm wondering if you share that view.
Yeah,
And
the questions
secondly,
are really, this is
it is
Senate,
still not
so
clear to me
questions
what
are a little
problem
better.
a central bank digital currency would solve, and I wonder if you think there are problems that only a central bank digital currency can solve.
So first, I'm legitimately undecided on whether the benefits outweigh the costs or vice versa or on a CBDC. Yesterday, I was answering a direct question about a particular argument. I said, in favor, that would be one of the stronger arguments.
Okay.
I would agree that the more direct route would be to appropriately regulate stablecoins, which we don't do right now, and that's going to be a very important thing that we do. So in terms of congressional authorization, there are different views on that. I've said publicly, and I think this is right, that we would want very broad support in society and in Congress, and ideally that would take the form of authorizing legislation as opposed to a very careful reading of ambiguous law to support
Chad
this.
is
It's a very,
posting a
very
deal
important
reporter
issue,
on
and
Gap. I
do
haven't
think we
confirmed, but the
should
stock's moving.
ideally get
Gap,
authorization.
GPS.
In terms of what the problem is to solve, I think that is exactly the right question. And I think our obligation is to explore both the technology and the policy issues over the next couple of years. That's what we're going to do so that we're in a position to make an informed recommendation. But again, my mind is open on this, and I honestly don't have a preconceived answer to these questions.
Thank you, Mr. Chairman.
Senator Menendez of New Jersey is recognized.
Chairman Powell, as the Federal Reserve seeks to fulfill its mandate of
I don't see
maximum
anything on
employment,
Gap on my
I
scanner.
want to discuss with you the tremendous impact
So watch
that
out.
immigration
It may be on
has
Twitter or
the labor
something, but it's
force.
not showing up here.
Isn't it true that over the past 10 years, the immigrant labor force participation rate has been consistently higher than that of native-born workers?
I believe that's right.
Yeah. And let me help you verify that. The St. Louis Fed noted in their study that as of June 2021, the foreign-born labor force participation rate is 3% higher than the native-born rate, and that gap hasn't ever been lower than nearly 2% for the past 10 years. And an important but often overlooked characteristic of these immigrants is their youth. According to the Bureau of Labor Statistics, 71.8% of foreign-born workers are between
Be careful on the Gap
25 and
news.
54
I don't
years
have
of
any
age, compared to
confirmation on there.
62.2%
And then even then, they're saying
of
they're
the
notable.
native labor
They're
force. So,
investing
as the
potential
American
market
labor force
circulation
ages, will immigrants
or market
and therefore
speculation
immigration
circulating.
policy play an increasingly important role in maintaining a healthy U.S. labor force, therefore a healthy economy?
So, Senator, I'm going to stay away from making any recommendations on immigration policy. It's not in our wheelhouse. I will say that labor force growth is one of the two things that can drive the top line, the other being productivity growth. And, in recent years, immigration has been a significant part accounted for a significant part of growth in the workforce.
Well, I appreciate that. I'm not asking you about immigration policy. What I am saying is that one of the newest studies shows that nearly 1 in 4 Americans is projected to be 65 years of age or older by 2060. So while America gets older, the overall population is growing at a slower rate than it has in almost a century, leaving unfilled job openings in a future American economy. And I think we should be looking at our immigration policy, whatever that might ultimately
Beyond
be.
Meat launching, what's it called? Beyond Meat launches e-commerce on JD.com.
Let me continue on the question of the labor
Beyond
market.
launching
One part
on
of the Fed's
JD.com
dual
e-commerce.
mandate is to maximize employment and understanding what factors inhibited people's ability to work as a key to helping achieve that goal. On page 7 of your monetary policy report, and I'll quote directly from it, the effect of the pandemic on employment was largest for workers with lower wages, for workers with lower educational attainment, and for African Americans and Hispanics. And these hard-hit groups still have the most ground left to regain. And the pandemic seems to have taken a particularly large toll on the labor force participation of mothers, especially Hispanic mothers. That's very much true. So have disruptions in childcare due to the pandemic had a negative effect on employment?
Yes, they have, and also schools being closed. Caretakers generally are having a hard time getting back into the labor force for that reason.
The Federal Reserve's data shows that the pandemic's effect on childcare caused 9% of all parents to be unable to work late last year, and an additional 14% of parents had to decrease their hours, and this effect was especially pronounced among Black, Hispanic, and low-income households. So is the effect on childcare on employment isolated only to the COVID pandemic?
Sorry,
Is the effect of the availability of childcare that is affordable on employment isolated only to the COVID-19 pandemic?
I'm going to guess really that the answer to that would be no.
Yeah, and it is no. Studies have shown that working families pay for childcare ending up 35% of their income on average, 5 times more than what the Department of Health considers affordable. So it seems to me that increasing the availability of high-quality, affordable childcare, like what President Biden proposes in the American Families Plan, has a positive effect on employment, enables businesses to more easily find qualified workers, and ultimately helps address supply bottlenecks. The same Fed study I just cited notes that reducing or offsetting the cost of childcare has a particularly strong employment effect on Black, Hispanic, and low-income families. The pandemic showed all of the inequalities in our nation, highlighted in a way so dramatically, and particularly communities of color. Now, the employment challenges, we all talk about wanting to get people to work, the employment challenges that people have in being able to work, and they, as I have shown in the Fed's, St. Louis Fed statistics, more gainfully employed than native-born. It seems to me we should be working on making the pathway easier so that businesses can have qualified workers. Thank you, Mr. Chairman.
Senator Rounds of South Dakota is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, once again, it's good to see you, sir, and I have most certainly appreciated the time that you spent trying to not only educate us, but also to work with us. I understand that clearly you've made it your mission to adhere to the guidance for the Fed in which you work to maintaining 2% inflation over a period of time, as well as full unemployment or full employment. And when we talk about it, it's always a combination of which one you're more focused on and how you maintain that, while at the same time responding appropriately in a non-political way to the actions of Congress and the administration. I'm just curious, with regard to today's position, we're coming out of a pandemic. We've put a lot of fuel into the economy with direct payments and so forth, and people are trying to get back to work right now. And yet we've got inflation, which right now in this current state seems to be above a 2% rate. Can you talk a little bit about the measurement time period that you believe is appropriate for shooting for a 2% goal? And if there is a concern that you would express or that you follow up with when we talk about overinflating or perhaps putting fuel in, what concerns you would have and how you would respond to congressional activity?
So the inflation that we have today, what we said is that if inflation runs below 2% for an extended period, we want inflation to run moderately above 2% for some time. This is not moderately above 2% by any stretch. This is well above 2%, and we understand that. And it's also not tied to
you hear that?
The things that inflation is usually tied to, which is a tight labor market, a tight economy, that kind of thing. This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And of course, we're not comfortable with that. In terms of the test that we articulated, we said we wanted inflation to average 2%.
Oh, you said that before? Okay.
We didn't tie
it hit
ourselves
different.
to a
It hit
formula.
different.
We just
That's how he said
what we really want is
moderately.
inflation
He said
expectations to be
moderate.
anchored at 2%. Because if they're not, there's not much reason to think that inflation will average 2%. So that's really how we're thinking about it. What's the challenge we're confronting is how to react to this inflation, which is larger than we had expected or than anybody had expected. And to the extent it is temporary, then it wouldn't be appropriate to react to it. But to the extent it gets longer and longer, we'll have to continue to reevaluate the risks that it would affect inflation expectations and will be of a longer duration, and that's what we're monitoring.
You've been very careful, and I've appreciated the fact that you have done your best to be apolitical in this regard, and yet, at the same time, we're going to have a debate about whether or not we need to add additional fuel to the economy in terms of additional payments to individuals. And as we make that discussion, recognizing that you're going to do your best to be apolitical and simply to respond based upon your goals of the long-term goal of 2% inflation and full employment, how do you see this right now with inflation right now being the focal point, and yet the possibilities of more dollars being put into this economy in this recovery stage? What concern would you express, if any? And I know that your job is not to give us advice, but rather to respond to. What are the tools available for you to try to maintain that long-term goal of 2% during a time in which Congress may very well be adding additional fuel to the fire, so to speak, for inflation?
So the way it works is we watch what Congress is talking about, and then ultimately, and there reaches a point at which our staff will say that looks like it's got a good chance of happening, and then we'll put something into the staff will put something into the forecast, and all of us will make our own judgment about whether that was the right thing to do, whether it's too big or too small. And we never then take that into the public sphere and say, you know, please don't do that for this reason or that reason. It's really not up to us to play a role, as you know.
But the tool that you would use would be within monetary policy of the price of money.
Always, the tools we have are, you know, in monetary policy is to raise interest rates, to tighten financial conditions more broadly, to slow demand down, and that's how you get control of inflation, and that's what you do. At a time like this, though, policy is so accommodative. You know, it'll still be accommodative after we slow asset purchases, ultimately stop them, and then raise interest rates. It'll be accommodative for quite a while, but that's what we do, and that's what we will do when and as we need to. In the meantime, we're trying to understand this particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy with lots of fiscal and monetary support. We don't, so we're just trying to be, we're humble about what we understand, but we're trying to both understand the base case and also the risks.
Mr. Chairman, thank you very much for your response, and Mr. Chairman, thank you.
Thank you, Senator Rounds. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. And Chairman Powell, it's great to see you. Thank you for your good work. You know, one of the issues that you and I spent a lot of time talking about over the last year plus has been, access to capital issues. And as we know, COVID disproportionately hit communities of color. We lost 440,000 black-owned businesses last year. And as we've discussed in the past, I've been a big advocate with many on this committee on both sides of the aisle to promote investment into minority depository institutions, into community development financial institutions, and actually working with former Secretary Mnuchin, we got $12 billion into the relief package back in December. Some of that will go into, as you know, Tier 1 capital into the CDFIs, which could actually increase their lending capacity by about 50%. But getting that access to capital to low and moderate income communities is really, really important. Is there more that the Fed can do? Let me give you a two-part question. The Fed can do to support CDFIs, and is there anything similar to programs like the Fed's Paycheck PPP program liquidity facility, which could also potentially be used? I know, again, we've discussed some of these things, but I'd like to see if what your current thinking has been on this issue.
So we do see, and we saw particularly during the pandemic, the good that CDFIs and also minority depository institutions can do and we're doing. And we try to provide whatever resources we can, and a lot of it is just engagement and things like that, and also including the CDFIs in the PPP liquidity fund and doing everything we could to incorporate them in a way that was useful to them. So all of those things are good. I think if we could think of more things to do within our mandate, given our
I sold
authorities,
half
we
of
would
the
do them,
Honeywells.
because we do see the good that they do.
Half of
in
them at 80
reaching
cents.
communities
We
that
bought
are
those at
not
like what?
necessarily reached by other banks.
We bought them at
And I do
25
hope,
cents.
you know,
Sold half
beyond
at 80. I
CRA
still
that
have
we
another
can,
$1,000 in there almost.
Look at, I've got a lot of community banks as well that want to try to get into this market, and got some ideas I'd like to come back to you and the Fed on, because I think sometimes there's a feeling that there's not enough regulatory discretion if they want to kind of lean into lending into low and moderate income communities. I wanted to raise one other issue. I think we all know housing prices are up dramatically. Matter of fact, the Federal Housing Finance Agency's House Price Index showed that house prices were up 13.9% over the 12 months ending in March 2021. I know a lot of discussion around inflation here. Obviously, if the housing market is overheated, that poses a huge issue. Is there, how overheated do you think the housing market is at this point? And what kind of tools do you have that could help deal with that problem?
Price increases are very strong in housing, and it's right across the country, and we see that, we hear that everywhere. And there, as I mentioned, there are a number of factors at work there, both demand and supply. There's a lot of demand because household balance sheets are just in the aggregate, in very strong shape. Monetary policy is clearly supportive of people who want to get mortgages now, although most of the people getting the mortgages have very high credit ratings. It's very different than it was before the global financial crisis. There are also, both their supply constraints and this predates the pandemic, and this problem is still going to be there when every other problem is solved, which is difficulty in getting zoning, in getting trained workers. The raw material shortages and high prices and bottlenecks will probably abate over time, but it's not. I've heard from many of you that this was a problem before the pandemic, and I think that's probably going to remain the case.
Well, I agree. I think the supply issue is something we have to address, and Chairman Brown has been working on this. I've been working on some ideas. I also think one of the things we've got to grapple with, if we
Bro,
go back
Powell
again to
has
the
been
kind of
clapping
wealth gap
lately.
issues,
He's been subtly fighting back, if you
racial
notice
wealth
his
gap,
tone.
10-to-1 black versus white families. A lot of that goes to home ownership. But I think it's also a challenge not only for black families, but for first-generation home buyers anywhere. I've been working on an idea that somebody else brought to me that would say, can we in effect, using Ginnie Mae with a slight interest rate subsidy, almost provide for the same payment you would have on a 30-year mortgage, a 20-year mortgage product. We've called it the Lift Up program, and I think my time's expired, but I'd love to share more of that with you, and as I'll share with my colleagues. Thank you, Mr. Chairman.
Thanks, Senator Warner. Senator Kennedy from Louisiana is recognized for 5 minutes.
Mr. Chairman, I want to begin by thanking you once again and your colleagues, some of whom are sitting behind you. We all remember well spring of 2020 when the world economy almost melted down. It didn't in substantial part because of the actions that you and your colleagues took. You kept this thing in the middle of the road. Now, some days you had to do it with spit and happy thoughts, but you kept it in the middle of the road. I remember particularly your currency swap lines. You didn't read a lot about it, but I can understand when the world's melting down if other countries seek out treasuries, but when they don't like treasuries, they want hard, cold American dollars. That's scary. So I want to thank you. This is my question. We have spent, not just during the Biden administration, but during President Trump's administration, we have spent an enormous amount of money. I mean, it's breathtaking. And now some agree with it, some disagree with it, but some say you shouldn't have done it. Some say we had to do it. It's probably a little bit of both. A lot of it
Just
wasn't
don't
paid
Google it,
for.
Snapchat Evite. Just don't Google it.
And I look around, and President Biden is asking us in the next, I don't know, 6 months to spend, what, another $5.5 trillion? And there's a lot of talk about pay-fors, but it won't all be paid for. We know that. At what point do these deficits matter? Are we living in a different world? I mean, I know you'll probably say, well, deficits always matter, but at what point does the marginal benefit of the extra deficit spending become less than the marginal cost?
I don't think there's a precise point that I can identify. I will say that we're not on a sustainable path. We actually haven't been for a long time. That just meaning that the debt is growing substantially faster than the economy, and in the long run, that is not sustainable. We're going to need to, that the laws of gravity have not been repealed. We will need to get back on a sustainable path at some point. I think the time to do that is when the economy is strong, unemployment is low, taxes are rolling in. That's the time to do it, and to do it, with a longer-term plan that matches up our spending needs and our revenues. That's what we're going to need to do. We will eventually have to do that.
When do you think that will be?
I wish I knew. I mean, I would say, the dollar is the world's reserve currency. People are buying our paper around the world. I don't think there's, any issue of being able to fund our deficits in the near term and the medium term. There's no evidence that there is, but, we shouldn't wait until the urgent need arises.
Yeah, it's too late then. Well, I mean, everybody seems to be a Keynesian now, and that's fair. Dr. Keynes was brilliant, but some people forget about that chapter in one of his books where he said, okay, you deficit spend and you borrow to stimulate your economy, but when it's better, you pay it back. He said that very clearly. You pay it back. The other thing that none of us wants inflation. But it's not just inflation, as you know much better than I do. It's inflation expectations. And I worry that if we spend this extra $6 trillion or $5.5 trillion that President Biden wants to spend, that the private sector is going to say, we're going to have more inflation. I don't care what they say at the Fed. We're going to have more inflation, and we're going to start raising prices. I mean, you don't have to be Einstein's cousin to figure that out. Don't you think that's something we have to consider?
Well, I would agree with you that inflation expectations are really central to what we think are central to what creates actual
Guy's all
inflation.
dramatic.
We
He's
see
like,
them now
maybe.
They've moved up.
Maybe.
They moved down at the beginning of the pandemic. They've moved back up roughly to where they've been in recent years, so they're not at a troubling level.
Okay.
But it's something we'll be carefully watching.
All right. Last point, I'm not expecting a response. Resist the pressure. You're going to be asked by a lot of people.
This guy always gives him some motivational
get
speech.
involved
I
in
love it.
social policy,
I love it.
in cultural matters, and in what some will call economic policy that really has nothing to do with the Fed's mission. And it's not just happening here, it's happening all over the world. Don't let us become Turkey, where the whole central banking system is politicized. Please resist it.
How about Cuba? Oh,
Thank you, Mr. Chairman.
damn,
Senator Kennedy.
don't
Senator
get
Smith
Turkey,
from Minnesota
really?
is recognized for 5 minutes.
Thank you, Chair Brown and Ranking Member Toomey, and thanks so much, Chair Powell, for being with us. I appreciated the chance to have a longer conversation with you earlier this week. I want to try to touch on two issues that are important to me. The first is just following up briefly on Senator Brown's questions around the Community Reinvestment Act, and then I want to go to the systemic risk that climate change poses. So earlier this week, you and I had a chance to talk about this, and I see the Community Reinvestment Act as the main rules that govern how banks provide services in low and moderate income communities and communities of color, which have experienced a systemic and severe lack of access to capital and lending and financial services due to discrimination. I'm glad to hear you think that you'll be seeing some updates in the coming months, and I wonder if you could just tell us a little bit more about what the Fed has learned from all the comments that you've received from the CRA proposal that you released last year.
So quite voluminous comments, as you can imagine, from all corners. And I think we're learning a lot, and we're going to incorporate improvements. But broadly speaking, this proposal, this approach, has the support of the intended beneficiary community, and also, to a significant extent, the support of the banks, who want, they want CRA to be effective. They want it to be well measured. They're committed to having it being an effective program, so I believe. And so generally, we're in the middle of setting up to try to write something that reflects those, the appropriate comments, and then we'll publish that again. But it'll take some time, and we do hope to get all of the banking agencies on board for that. So as I mentioned, I'm optimistic that this is going to a pretty good place.
That's great. I'm glad to hear that. I think that a well-functioning and modernized CRA is just absolutely crucial to making sure that all sectors of our economy, for all people, are growing and working. And as Senator Brown says, that we fulfill that promise that we all do better when we all do better, which I think is at the heart of the CRA. So thank you. Let me just move to this question of the risks posed by climate change. Yesterday in your testimony before the House, you indicated that the Fed is in the beginning stages of working on a program that will engage with financial institutions on climate risk. And the last time you came before the committee, you said that you believed it was important longer term for firms to publicly disclose their climate-related risks. And since then, the SEC has received hundreds of comments. Vice Chair Quarles has highlighted the importance of climate risk disclosure, and I believe SEC Chair Gensler has signaled his intention to begin rulemaking around climate disclosure. So can you comment on how you see the role of the Fed on climate risk disclosure for financial institutions?
I guess I'd start by saying that really the foundations of all of this are that we need to get good data on the implications of climate change and how to think about that in terms of the risks that the financial institutions and other parts of the economy are running. And so that's a very basic exercise, and we don't have that yet. Once you have the data, then disclosure is going to be important, because markets are going to work. Markets are going to be very, very important, and the world investor community will be very interested in this. So those two things, and those are, the Fed can help with research and data collection, things like that. The disclosure issues are really squarely in the province of the SEC, and I know they're working very hard on those. And around the world, there's a lot of progress and focus on these things, and I just think they're quite central to anything that we are ultimately able to accomplish here.
So I think it's fair to say that the European central banks have led the way here. What can we learn from the approach that they've taken?
I think one thing I would point to is the climate stress scenarios that have been developed by the Network for Greening the Financial System, and a number of the major European central banks are running climate stress scenarios, very distinct from stress tests. And what they're really trying to do is with financial institutions, look at what the effect over a long period of time on their business and on their business model could be from, reasonably plausible climate, outcomes for the evolving climate. And it's proving to be, I think, a very profitable exercise both for the financial institutions and for regulators. So that's one thing. Now, we haven't decided to do that yet. We're in the process of looking very carefully at that. My guess is that's a direction we'll go in that we're not ready to do yet.
Thank you. Mr. Chair, I realize I'm out of time. I want to just note that I think that some would say that climate risk is a political issue. I see it as a systemic financial risk, just like other systemic financial risks that big banks and small, medium-sized banks have to address. So I think that it's extremely important. I urge the Fed to continue to look at these impacts and to move with alacrity, because I think, as you say, Chair Powell, I believe that the markets are looking for clarity about how to measure and how to assess these risks for the good of investors and for everybody. Thank you.
Thanks, Senator Smith. Senator Haggerty of Tennessee is recognized for 5 minutes.
Thank you, Chairman Brown and Ranking Member Toomey. I appreciate your holding this important hearing that has to do with our critical job of overseeing the Federal Reserve. And Chair Powell, I want to thank you for being here with us again. Today, I'd like to talk with you about inflation. Inflation is the insidious tax that the Biden administration is imposing on everyday working people here in America right now, and it's of great concern. Back in February, I discussed with you about how the U.S. economy at that point was forecast to see 6% growth this year. And at that point, I expressed serious concerns about the Democrats' nearly $2 trillion of additional partisan spending on an economy that was already recovering very rapidly, thanks to the effects of Operation Warp Speed, and also thanks to the policies that have been in place during the previous 4 years that have put our nation on a solid footing in terms of tax cuts, fair and reciprocal trade, and deregulation. The Federal Reserve's challenging and dual mandate is to realize price stability and maximum employment. But runaway Democrat spending and policies that they are imposing are making your job harder than it already is. The bill that Democrats rammed through in March spent roughly 10% of our GDP. And now they're looking to spend maybe another 20% of U.S. GDP on a purely partisan basis. They're throwing around trillions of dollars like it was simply monopoly money, when really what it's doing is taxing Americans' hard-earned paychecks. It's very irresponsible. It's creating inflation outcomes that many of us haven't seen in our adult lifetime, certainly not since Jimmy Carter was president. Echoing what Ranking Member Toomey has said, the concerns that he's raised about inflation, I worry too that things may spiral out of control if we don't show some restraint. At the same time, President Biden and the Democrats are imposing policies that work against maximum employment. They're giving away employment incentives. They're raising taxes on job creators, throwing away our energy independence, and freezing American investment. The Fed has more direct control over inflation and price stability than it does over employment. Businesses create jobs, and price stability allows American businesses and families to make business decisions and to plan their everyday finances. But now, Americans have a sense of scarcity, and I believe a sense of panic over inflation. The policies that are being imposed are causing families in my home state of Tennessee and all across America to make financial decisions with soaring inflation in mind. Price stability is not a 12% annualized inflation jump like the one we just saw from May to June. People in Tennessee are seeing their buying power eroded like never before, and they don't see this as transitory. And I'm sure people in Chairman Brown's home state of Ohio and Ranking Member Toomey's home state of Pennsylvania are feeling exactly the same way. As you know, inflation expectations can be self-fulfilling. Inflation and price instability at this level is bad for America. Chairman Powell, this environment suggests to me that the emergency posture that I understand the Fed adopted back during the depths of the pandemic seriously needs to be reconsidered right now. And I'm very worried that the Fed's continued level of asset purchases and balance sheet expansion is facilitating this runaway spending that the Democrats are imposing upon us and adding to the inflationary pressures that these trillions of additional dollars are going to continue to add to our economy and continue to add to the debt that our children are going to continue to bear. And it's amazing to me that not one Democrat in Congress is willing to speak out about this. So, Chairman Powell, why is the Fed maintaining its emergency monetary policy posture right now, and why do I understand that it may continue well into 2023?
So where we are is we're watching the evolution of the economy. We're noting that there's still an elevated level of unemployment. We note that inflation is well above target, and we've discussed that. And we've said that we would begin to reduce our asset purchases when we feel that the economy has achieved substantial further progress measured from last December. So we're in active consideration of that now. We had a full meeting last month to discuss that. We've got another meeting coming up in 2 weeks. So we'll be making that assessment. And as we assess the progress of the economy toward that goal, we will begin to reduce our asset purchases. We've set a separate test for raising interest rates, which is a higher test. And so that's how we're thinking about this today.
The policy positions that have been undertaken by this administration go far beyond the transitory nature that you described. And again, if I think about the expectations of the people in my home state, they're very, very concerned about inflation, so I'd like to pass that along. I'd also like to ask you just a very simple question. Does continued government stimulus spending at this point make your job in terms of sustaining price stability more difficult?
So we're not in the business of giving Congress advice on fiscal policy, and I just have to leave that to you. We take whatever you do and we put it into our considerations of policy, but we don't comment on it one way or the other.
Thank you, Mr. Chairman. Thank you, Chairman Brown.
Thanks, Senator Hagerty. Senator Warren.
So the chairman of the Federal Reserve has two basic jobs: monetary policy, which everybody likes to talk about, and regulatory oversight, which is often way down in the weeds, but keeps our economy safe from another banking
Get ready.
meltdown.
This one's going to be fun.
You've been chair for 4 years now and have gone through the process of what you describe as, quote, tailoring the regulations put in place after the 2008 financial crisis. Now, there were a lot of changes, but I want to talk about a couple in particular. To prevent taxpayer bailouts, banks are required to have living wills. This means that banks must be able to show every single year how they could be shut down without wrecking the entire economy. In 2019, you changed the rules so that the 13 banks with $250 billion to $700 billion in assets could submit full living wills only once every 6 years instead of every year. So that test is now weaker. Chair Powell, has the Fed done anything over the past 4 years to make living will requirements stronger?
To make living will requirement, we've done a lot of things to strengthen regulation and capital, but I think
on living wills, I'm just.
No, I mean,
Okay.
I can explain what we.
So let's move to another regulation, the Volcker Rule, the rule that works sort of like Glass-Steagall Light to separate commercial banking from Wall Street risk-taking. In 2019, you exempted more short-term trading holdings from the rules, so banks could take on a little more risk. Now, that weakened the rule. Then in 2020, you eased up the rules to let banks invest more of their assets in high-risk private equity and hedge funds. So the Volcker Rule got weaker again. So let me ask, Mr. Chairman, during the past 4 years, has the Fed done anything to make the Volcker Rule stronger and limit risky trading for the largest banks?
I think by clarifying it, we made it more effective at what it's supposed to do, which is just what you said.
Well, I have to say, it's whether or not you did anything to make it stronger, not just whether or not you made it clearer. It's whether or not you made it stronger or harder for banks to engage in speculative trading. So I'm taking it that the answer here is no. I've highlighted 2 examples of weakening regulations, but there are a whole lot more. Reducing capital requirements, easing liquidity requirements, shrinking margin requirements, scaling back on supervision, weakening the stress test. It's a long list, and I realize that you think these are good changes, but I'm trying to look at this from a regulatory perspective. Is the chairman of the Federal Reserve making banking rules stronger or weaker? So tell me, Mr. Chairman, is there a big rule change that I missed? Can you name a change that strengthened the rules and made the actual rules tougher?
Well, let me say we did not weaken capital requirements for the largest banks, and I actively resisted any move in that direction. And in fact, the stress capital buffer, which we implemented quite recently after years of consideration, raises capital standards for the largest banks. By the way, stress tests, they're really bound by the stress tests. We maintained the very high stringency of the stress tests through this period.
So, but what I was asking about anything tougher, look, what I'm looking for is that the Fed's record over the past 4 years, I see one move after another to weaken regulation over Wall Street banks. And that worries me. There's no doubt that the banks are stronger today than they were when they crashed the economy in 2008, but that's the wrong standard. The question is whether or not they are strong enough to withstand the next crisis, and whether the Fed is tough enough to protect the American economy and the American taxpayer. In 2020, the giant banks that are the beneficiary of these weakened rules made it through the crisis. But the researchers from the Minneapolis Fed found that the banks would have faced up to $300 billion in losses if not for fiscal stimulus from the government. In other words, the current Fed rules were not strong enough for the banks to withstand the pandemic without, once again, calling on American taxpayers to back them up. And that's the heart of my concern. I understand that the next crisis may feel far away, but like the pandemic, it may come at us fast and from an unexpected direction. It is the job of the Federal Reserve, and specifically the job of the chair of the Federal Reserve, to use the regulatory tools that Congress has created in order to make sure that banks remain strong and that taxpayers will never be called on again for a bailout. Thank you, Mr. Chairman.
Thank you, Senator Warren. Senator Tillis from North Carolina is recognized for 5 minutes.
Thank you, Mr. Chair. Chairman, thank you for being here. I wanted to go back and maybe give you an opportunity to respond to one question. You were going to explain the work on living wills. Would you like to explain what the work you've done there?
I would just say that's was an incredibly labor-intensive and taxing issue that we went through cycle after cycle after cycle, and really the marginal gains from doing it every year diminished quite a lot. And so we concluded that for the largest banks, we wouldn't require a full resubmission except every other year. But they have to anything that's material, they must resubmit. I don't think in any way we've weakened our understanding of their resolvability or anything like that. I would also say we raised capital standards on the largest banks, full stop, in the stress capital buffer. They're higher now than they were. So I would say that.
With respect to the Volcker rule, you were talking about clarifications. I mean, is the Fed fully enforcing the Volcker rule based on congressional intent?
Absolutely. Look, I think it's important. It's more broadly, I would completely agree that our job is to maintain the strength of these large financial institutions so that we never have to worry about bailing them out again. And I'm strongly committed to that. We need them to be very, very strong so that they can perform the roles that they're supposed to perform, even in a severe crisis. And I think they by and large, did, admittedly with a lot of fiscal support and a lot of monetary support too. We can always do better, but we are committed. I am committed to that.
Thank you. I've got to beat the inflation drum for just a minute here. The FOMC members insist inflation is transitory, but it hasn't inspired a lot of confidence in me. There was a couple of statements by President Mary Daly. In February, she declared the pressures on inflation now are downward. In May, when inflation readings were at 3.9%, she said the higher inflation readings would mean 2.4 to 2.6%. In June, she was predicting that inflation could go above 3%, and despite months of relatively low ball projections, and in response to Tuesday's high inflation readings, she confidently declared, "We expect a pop in inflation like this." So I hope from our perspective, you could see that we're skeptical about some of the inflation projections. And I've spoken with a number of people in the financial services industry, and when I ask them the question about transitory, I'm getting more of a response now of transitory-ish. So can you give me a reason why you believe the Fed's position on it being transitory, that it will snap back, why that's still well-founded?
Sure. So let me start by saying that no one has any experience of what it is to reopen the economy after what we went through, and so all of us are going to have to be guided by data and our views are going to have to be seasoned with
Chairman,
a lot of
let me interrupt you for a second. I'd also like for you to answer that question in the context of the flow of money that's been passed in the prior COVID relief packages. And we heard an announcement this week from the Speaker of the House and Senator Schumer that they have an agreement on another $3.5 trillion. I'm a part of a working group for infrastructure that could add about another $600 billion. So answer the question in the context of how that future, according to the leadership of Congress, outcome is going to occur. How does that all fit into the credibility of future inflation projections?
So when we look at inflation, we look in the basket of things and we say which of the 100+ things in the CPI basket are causing the high inflation reason. And it comes down to really a handful of things, all of which are tied to the reopening. It's used, rented, and new cars. It's airplane tickets. It's hotel rooms, and it's a handful of other things. And they account for essentially all of the overshoot. And we think that those things are clearly temporary. We don't know when they'll end, but they'll go away. So we don't know when they'll go away. We also don't know whether there are other things that will come forward and take their place. You know, what we don't see now is broad inflation pressures showing up in a lot of categories. The concern would be if we did start to see that. We don't see that now. We'll be watching carefully. And we won't have to wait, a tremendously long time, I don't think, to know whether our basic understanding of this is right. We will know because we'll see other more, if we see inflation spreading more broadly, that'll give us information.
I just want to get one more in. I appreciate that, and I listened to your responses from some of the other members. With the LIBOR transition, do you still view, I think you publicly stated, Ameribor as a reasonable choice for regional and community institutions. Do you still stand by that?
You know, we don't like to bless individual rates, but I would just say market participants have the freedom to choose the rates that they want to choose. We're not forcing them to use. This is for just use.
But I am
the thing
confirming,
they can't use is LIBOR.
in sub-public comments, you have said it's an appropriate rate for banks and funds through the financial exchange, American Financial Exchange. You still stand by that statement?
I saw that. I don't remember saying that, but it was in a letter, I think. So
Okay.
I must have done it.
Thank you, Mr. Chairman. Appreciate your work.
Thank you.
Thank you, Senator Till. Senator Tester of Montana is recognized for 5 minutes.
Yeah, thank you, Chairman Brown. I want to thank Chairman Powell for being here today. A lot of chairmans around here. But look, I have appreciated you and I've appreciated your work during your tenure. And especially as we look back over an incredibly difficult period of time where you were having to take a lot of issues that we hadn't seen in, 80 years under consideration. Getting attacked, trying to politicize the Fed. I just want to thank you. I appreciate it. I think your expertise and your knowledge has shown through. The cream has risen to the top, so to speak. So, thank you. Look, there's a lot of talk about infrastructure needs, and I think that you would probably agree that China is trying to take over our role in this world of being the economic superpower. And I'm one that believes that infrastructure and investments in infrastructure is critically important if we're going to maintain our position as a worldwide economic power, the worldwide economic power. My question for you is you look at infrastructure investments and how that affects our economy, where would you put your focus?
I don't have any. I mean, I would just say that well-spent, well-invested infrastructure money does have the ability, and it's really up to you to make those decisions. But it's the kind of thing that can actually raise the growth rate, the potential growth rate of the country over time. But I guess I need to leave the details.
So I think that there's several proposals out there. There's proposals to invest in roads and bridges and broadband and a grid, which some of us in this room are a part of, that I think is really, really important. I think there are other proposals that are also very important, but they're investing in a different kind of infrastructure like childcare and workforce housing and those kind of things. I don't mean to put you on the spot, but I do value your opinion. Where do you think those things fall? Are they equally as important, or do you think that the economy is fine without any investment in those kind of things like housing and child care and that kind of stuff?
I don't want to get into. I wouldn't get into the debate over whether those are infrastructure or not. But
right. No.
I'm
just from an economic standpoint.
From an economic standpoint, take child care. We used to have the highest female labor force participation rate among the advanced economies. Now we're close to the bottom of the pack. And one of the differences economic researchers point to, there's a lot of research on this, is just a different approach on child care. And it's really up to you to look at that and see whether that makes any sense in the U.S. context. We don't have an opinion on that, but okay. That's a basic economic trend where we used to lead and we don't anymore.
Okay. So let me ask you this. I don't know. I know that many in the Fed have done some work on issues in Indian country, and one of the issues in Indian country is housing. They have a different situation because of their sovereignty and as of you know, not having the kind of collateral that folks who own property have, that land on the reservation I'm talking about. Do you have any thoughts on that, on what we could be doing outside of the whole infrastructure conversation? Just what can we do to impact Indian country when it comes to housing? Because, man, it's woefully bad.
That's a hard question, and as you know, we have 4 or 5 reserve banks that are involved, particularly Minnesota, Minneapolis, in Indian country issues. You know, we're not allowed to spend. We don't spend taxpayer money on things directly like that. But I think we would agree that there's a significant housing issue in Indian country, and I'm not sure I have the answer.
So if you have, look, if you have any ideas that pop into your head about how we can, I don't know, incentivize is the right word, but how we can engage the private sector to do some housing so that they would be more inclined. And look, I get their point of view. It's not traditional. You know, they don't have the kind of collateral that they would have with fee property. So it is an issue. Look, I appreciate what you're doing. I'm about out of time, but I just want to thank you for your work. I appreciate you being in front of the committee today, and good luck.
Thanks, Senator.
Thanks, Senator Tester. Senator Shelby from Alabama is recognized for 5 minutes.
Thank you. Chairman Powell, we've been talking about inflation, and it's not going to go away, I think, for a while, so we're going to continue to talk about it, and you'll be concerned with it. In June, U.S. inflation accelerated at its fastest pace in 13 years. Consumer prices increased by 5.4% from a year ago. Americans are now paying higher prices for many of the goods and services that they cannot do without. The buying power of the dollar has diminished over the past 40 years. I'll give you some examples. You know all this. According to the Bureau of Labor's Consumer Price Index, $1 today is 7 times less valuable than it was in 1970, 3.5 times less valuable than in 1980, half as valuable as 1990, and 1.5 times less valuable than 2000, which seems like yesterday. Recently, the price of commodities, as you know, has increased swiftly. The price of agricultural goods, commodities, has increased. Corn by 50% from a year ago. Wheat by 17%. Soybeans by 54%. The price of metals has risen. For example, copper, which is used everywhere, has increased 43%. Aluminum has increased by 47%. Energy prices, as you know, again, have grown. The price of crude oil has increased by 70%. Gas prices are up 45%. In the automotive industry, prices for used cars rose 45% in the past year, 10.5% in June alone. Airline tickets are up 25%. The cost of milk is up 7.5%. All of this on the rise. At this point, the Biden administration continues to claim that the increases in inflation are temporary. I, along with others, believe that this could be the sign of things to come. We hope not. For instance, economists surveyed by the Wall Street Journal this month forecasted higher inflation for the next couple of years. Throughout the 70s, as you will recall, high inflation crippled consumers with rapid and sudden price increases. Many of those conditions exist today, such as loose monetary policy and significant government spending. If we fail to take inflation seriously, Mr. Chairman, I'm concerned that our nation could be faced with the same challenges of years ago. Yet in the midst of the increase in consumer prices, which I've just related, the Biden administration is proposing trillions more in government spending. The Fed's ability to maintain price stability is threatened, I believe, by actual or inflation or the expectation of inflation. Chair Powell, my question is this. Taking all this into consideration, which you have data that we probably don't have, do you believe that this nation, our nation, is facing a real problem with inflation? And if not, why not? How do you justify it?
I think we're experiencing a big uptick in inflation, bigger than many expected, bigger than certainly than I expected. And we're trying to understand whether it's something that will pass through fairly quickly, or whether in fact we need to act. One way or the other, we're not going to be going into a period of high inflation for a long period of time because, of course, we have tools to address that. But we don't want to use them in a way that is unnecessary or that interrupts the rebound of the economy. We want people to get back to work, and there are a lot of people who are not back to work yet. So, but let me say, very well aware of the risks from inflation, watching very carefully, and you know, if we come to the view that, or if we see inflation expectations or the path of inflation moving up in a way that's troubling, then we will react appropriately.
Are you concerned about all the things that I just related, all the price increases, unprecedented in recent years? Or are you just putting that aside?
No, I mean, we're you know, night and day. We're all thinking about that and really asking ourselves whether we have the right frame of reference, the right framework for understanding this.
Lastly, do you agree with the economists that I referenced, that the Wall Street Journal poll, who forecast higher inflation rates for the next couple of years, notwithstanding?
So that was the headline writer really got a little carried away there because the actual forecast showed that the median for 2022 was 2.3% PCE inflation, and for 2023, 2.2% PCE inflation, which is not at all different from the forecasts of the people on the Federal Open Market Committee. So those are higher than for the last years, but they're not that high. So that forecast was not really as problematic as the headlines suggested.
Thank you, Mr.
Thanks,
Chairman.
Senator Shelby. Senator Cortez Masto is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, welcome back. Let me follow up on this. Are you confident that you have the tools that you need to address any type of inflation, whether it's transitory or for the future, that we are looking at right now?
Yes, I am.
Thank you. And can I ask, in considering inflation, how should we compare costs to last summer when prices were well below their current levels because of the pandemic?
I think it's actually, in the spirit of your question, it's better to compare prices to prices where they were in February. And if you look at inflation since then, that captures both the decrease and the increase. And you get much lower numbers if you do that. There are a lot of people doing that right now. So you get inflation in the mid-2s, which is still above our target, but that sort of 16-month inflation on an annualized basis is 2.5% kind of thing, not 5%.
Thank you. And then for purposes of the COVID relief packages, all of them, including the most recent one, the American Rescue Plan, is that the sole cause for what you see with respect to the minimum increase in inflation?
I think a lot of things go into it. You know, the main thing is that we have demand rebounding very, very strongly. That's partly monetary policy. It's partly the fiscal policy. And what we see on the supply side is a supply side that just can't keep up with this demand and all these bottlenecks. And by the way, it's happening everywhere in the world. So it's a combination of factors.
And so unlike the last recession that we lived through in 2010 to 2014, would you, I'm curious, would you, and this is my interpretation of it, is that when our economy opened up from that, it was a gradual opening up of our economy again. And this is more of a kind of a light switching on with the economy opening up quickly. And that's why we see some of the concerns with supply and demand on so many different areas. And that's why we see highly concentrated sectors where there's a demand like you've touched on tonight or today. Is that accurate?
It is accurate, and I would add that the response, both from fiscal and monetary policy in this episode, is just orders of magnitude different from what has happened in the past. So we're back to pre-COVID levels of economic output, and we're on a path to be above the prior trend, actually, within a year if forecasts prove out.
Thank you. You know, in Nevada, our employment rate has fallen sharply since the pandemic last spring. Unfortunately, we are still fourth in the nation for unemployment. But as I watch our economy open up again, and particularly when you and I have talked about this, as tourism and travel industry is starting to rebound again, which is fantastic. Last month, more than 130,000 people applied for 6,000 positions at a new resort in Las Vegas. Part 5 of the Federal Reserve Monetary Policy Report notes that, and I quote, payroll employment increased by 3.2 million jobs in the first half of 2021, driven by a 1.6 million job gain in the leisure and hospitality sector, where the largest employment losses occurred last year. The May 2021 Federal Reserve research paper, however, found that the extra jobless benefits that were provided during the pandemic, quote, and I quote this, likely had little or very small labor supply induced impact on the unemployment rate. Can you elaborate on that?
So I think that was Reserve Bank research, and I think it was referring to 2020. It's too soon to really say what the facts are going to be here. In fact, we'll be able to learn something because many states, as you know, have stopped the additional benefits, and we'll be able to look and see whether that had any effect on people going back to work. It's way too early to say. There's not enough data.
And thank you for saying that, because that was my next question. You will be studying that data to see the difference between those states that cut it off early versus those that kept it going, whether that truly was an impact or not.
Yes, everyone's looking to see whether there will be a meaningful difference between the two. And again, too early to say on that.
I appreciate that. Thank you. And then finally, we touched on housing. We are seeing this home prices are up more than 15% since last year. How much of the rise in home prices do you think are due to the Federal Reserve's purchase of mortgage-backed securities versus the supply issues?
So I think that our purchases of treasuries and MBS are what is holding down, and also holding interest rates low. The overall picture of accommodative monetary policy is contributing to what's happening in the housing market. I think mortgage-backed securities are contributing probably a little more than treasury securities, but ultimately it's roughly the same order of magnitude. So, sorry, was that your question?
Yeah, thank you. No, I appreciate that answers my question. Thank you very much.
Thank you.
Thanks, Senator Cortez Masto. Senator Daines of Montana is recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, good to have you here today. And thanks for keeping a steady hand here during these rather tumultuous times. I want to start by joining my colleagues in expressing my concern with the inflation we're seeing in the economy. This week, we received 2 inflation readings. They were the highest increases we've seen in over a decade and reflect what Montana families are already feeling, and that is prices for everyday necessities, they're going up. At the same time, Majority Leader Schumer, Senator Sanders, Senate Democrats are proposing another massive, partisan, $3.5 trillion tax and spend package. I truly believe this is reckless. It threatens short, medium, and long-term prosperity of our country, and I sincerely hope my colleagues on the other side will reverse course. With that, I'd like to turn to my questions. Chairman Powell, the unemployment rate has consistently fallen since the height of the pandemic. Now at 5.9%, down from a pandemic high of 14.8% back in April of 20. I'm truly grateful, as I know you are, to see this rate fall, more Americans getting back to work. However, we're kind of digging into this and have concerns about the labor force participation rate, which now sits at 61.6%. It's remained in a narrow band between about 61.4 and 61.7% since June of 20. The current labor force participation rate is 1.7 percentage points lower than it was pre-pandemic in February of 20. A significant percentage of those folks who've dropped out of the labor force are over the age of 55. And recent data shows that they're not re-entering the workforce. A lot of those folks, as they are already nearing retirement age, may never re-enter the workforce. And my question, Chairman Powell, is do you expect the labor force participation rate for those 55 and older to recover to pre-pandemic levels, and if so, why?
So You very accurately described the situation. People, toward the end of the last expansion, older people were staying in the labor force longer. And as a result, for years and years, we were seeing higher readings on participation than we expected, which was a good thing, we thought. You know, we want the U.S. The U.S. has a low participation rate compared to our peers, surprisingly, but it does. So the question is, what's this going to, and then a lot of those people retired. 3 million people left the labor force, and it tended to be older people actually retiring. And the question is, what's going to be the equilibrium once the economy is going full bore again? Labor force participation tends to lag recovery, tends to lag unemployment recovery. So when labor markets get tight, we tend to see this. So I would just say, first of all, a lot of humility is appropriate here. We don't know what the trend labor force participation rate is, but you know, we went through 8 years of watching labor force participation be higher than we expected, and I fully took that on board, and I think the U.S. can do much better in terms of labor force participation. So I'm not going to close my mind to the idea that we might get back to those levels.
Yeah, well, thanks for the thoughtful answer. I guess if that participation rate for those 55 and older permanently remains below the pre-pandemic levels, how might you see that impacting the time it might take the economy to get back to full employment, and what impact might that have as it relates to inflation?
Well, so if there's less labor supply, then you'll hit full employment earlier. As you know, obviously, we consider a broad range of indicators, not just unemployment, also participation, wages, and those things. But you presumably, if there's less labor supply and lower participation structurally, then you would see that in the form of higher wages and higher inflation. We'd be able to see that.
Chairman Powell, thank you. I want to get to my last question here, and that's regarding the balance sheet of the Federal Reserve. It recently eclipsed $8 trillion, which is more than double where it was before the pandemic. When, if ever, do you think the Fed's balance sheet will fall below $8 trillion? And could you describe what the risks are if the balance sheet remains at this elevated level for an extended period of time?
So we have the last cycle as an example. What we did was we slowed the pace of asset purchases, and then we froze the size of the balance sheet for a period of years. And as the economy grows relative to the balance sheet, you know, the size of the balance sheet relative to the economy becomes smaller. So we did quite a bit of that. And then for a couple of years, we actually let the balance sheet run off and shrink. As securities matured, we stopped reinvesting them and we let the balance sheet shrink at the margin. We haven't made those kind of decisions yet. But it's a reasonable starting place to think that we might hold the balance sheet constant for some time and then perhaps allow it to shrink under $8 trillion. In the meantime, it becomes smaller as a portion of the economy, and that's the same thing as shrinking in a way.
Great. Thank you, Mr. Chairman.
Thank you, Senator Dane. Senator Van Hollen of Maryland is recognized for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Toomey, and Mr. Chairman, welcome. I've heard the term unprecedented used to describe the jump in inflation. I think what's truly unprecedented is the number of jobs we've seen generated since President Biden took office. 3 million jobs, the highest rate of job growth of any president in United States history, as we work seriously to defeat the pandemic and as we pass the American Rescue Plan to give confidence to people in the future of the U.S. economy. I do want to dig a little deeper into the inflation issue because you've made the point clearly here today that you believe it's a temporary increase, and if you look at long-term projections, they're closer to your targets, and that's also the expectation of folks in the financial markets as well. Isn't that the case?
Yes, broadly speaking.
And it's interesting how a short period of time changes things. I'm looking at remarks you made in May 2019 when people were afraid that the inflation rate was too low and below your targets. And at that time, you made the point you thought it was transitory, and you were right. And you used a different measure of trimmed mean CPI to describe your thinking. Can you just talk a little bit about what that measure is?
Sure. One thing that people do at times like this is they chop off the tails and just look at the middle of the distribution, because sometimes the overall inflation measure can be distorted by just a couple of categories. So if you did that here, this is the Dallas trimmed mean, and the Cleveland does a version of this. You know, it's going to show inflation that's in the low twos because you're getting rid of that small group of categories. you know, the risk is that you shop for whatever inflation measure that is appropriate at the moment. So we try not to do that. But clearly, trimmed mean is sending a signal that this is more idiosyncratic than broad across the economy.
Right. And isn't it the case that the increased prices of used cars rose by 10% in June alone and accounted for more than 1/3 of the entire increase in the CPI in June?
Yes, it is.
Right. So, I mean, those are the kind of anomalies you're referring to, right?
It's used cars, new cars, rental cars, it's airplane tickets, it's hotels, it's all things that have a story that's clearly related to the pandemic. At least that is what it is now.
Right. So, look, I think rather than rush to create alarm about inflation, I think we should all be together in focusing on important increases in job growth and wages that we're seeing. I know you said yesterday that you expect that we should be able to get back to 3.5% unemployment as we move forward. I know the Secretary Yellen's talked about maybe this time next year. I am worried, and we've discussed this in the past, about persistent long-term unemployment. And if you look at the June numbers, the long-term unemployed, and these are individuals who've been jobless for more than 27 weeks or more, increased by 233,000 to 4 million total. That followed a decline in long-term unemployment in May. So my question is there any way we can get back to 3.5% unemployment if we don't get this number down when it comes to the long-term unemployed?
Well, we saw that what a really strong labor market does is it pulls those people in and also pulls people in who are on the sidelines or keeps people from leaving. So there's just so much to like about a really strong labor market. And
well, I agree with you, Mr. Chairman. If you look even before the pandemic, though, in February before the pandemic, 3.5% unemployment, we had over 1 million Americans who were long-term unemployed. So yes, we hope that the growing economy will be a magnet, and I'm sure it will. It is going to bring a lot of people into the job force. I think all of us are concerned about labor force participation. I think a stronger economy will address that. But there is this group of long-term unemployed, and my concern is, as you well know, the data shows the longer you're unemployed, the harder it becomes to get back into the workforce. And then you get in at a lower wage, which stays with you throughout your career. Do you believe it's worth the Congress considering, I know this is not your domain to be specific about what, deliberate policies like wage subsidies, which we used successfully back in 2008, those kind of deliberate policies to make sure that the persistently unemployed, long-term unemployed can get back into the labor force?
I would, again, without trying to endorse anything in particular, we lag all of our peers in labor force participation now, which is not where we want to be as a country. And I do think that's a classic supply-side policy, is to try to find ways to connect people, to give them some help in connecting to the labor force, and then they need a strong job market to pull them in and keep them there. But I do think those things are worth looking at.
I appreciate that. Thank you, Mr. Chairman. Hope we'll do that.
Thank you, Senator Van Hollen. Senator Kramer of North Dakota is recognized for 5 minutes.
Thank you, Chairman Brown, Ranking Member Toomey. Thank you, Chairman Powell, for being here. First of all, let me add my voice to the chorus of people to thank you for your cool head through this process, particularly for resisting the pressures to lower rates when it wasn't necessary, so we had some room when it became very necessary. Appreciate that very much. Now, I was interested in a lot of the discussion going on. I was particularly interested in listening to your exchange with Senator Hagerty, where you used the line that I've heard you use many times when he asked a question about what Congress ought to be doing. You said, and I think this is a direct quote, "We are not in the business of giving fiscal advice to Congress either way." And again, that's similar to what you've said many times. Yesterday, thinking about this, I did a quick search engine review of the words "Fed Chair urges Congress." And this won't surprise you. And by the way, there's not a person in this room that doesn't have some sympathy over headlines that aren't quite accurate, or even quotes. But one report in May of last year says the Fed chairman asked Congress to consider more stimulus. October of last year, Jerome Powell is putting out the call to Congress, more money now. November of last year, Powell still thinks U.S. needs more stimulus for full recovery. Even in December of last year, Fed Chair Treasury urged Congress to give U.S. a stimulus bridge. In other words, you haven't always resisted the temptation to give us fiscal advice. And by the way, thank you for it. I think it was good advice. Maybe we look back and say, well, maybe we did too much, but we were in a crisis. You did what you needed to do. We did what we needed to do. And I don't think there's a lot of regret about that. Now, a number of my colleagues have pointed to what's gone on lately and what's being suggested going forward. In addition to the $3.5 trillion package, it includes a lot of tax increases, like 7 times more increase than the cuts from 2017 that built the foundation for this quick recovery, I might add. You add in the $1.9 trillion totally unpaid for earlier this year, the $0.6 trillion in new spending as part of the $1.2 trillion bipartisan package that's being discussed. It's, you get to $6 trillion plus really, really fast. What people aren't talking about is if we end up at the end of this fiscal year passing a one-year CR or something similar to a one-year continuing resolution, we're going to spend another $6.845 trillion, $3 trillion of which will be deficit spending. Deficit spending. Now, my question to you is very direct, and that's just simply, does the economy need another $6 trillion plus another $6.8 trillion spent this year to enhance the recovery? And is there not a detrimental effect to all of that, including the tax increases, when we are, in fact, in a, call it whatever you want, type of an inflationary time, but it is uncertain, and there's concern, if not alarm?
If I can answer that by saying, we did a lot of things. I did a lot of things last year that we'd never done before, and that one in particular, I had a lot of encouragement from the administration and leadership on both sides of the Hill in both parties. But I swore it off, and I do think we should go back to regular order, which is that the Fed doesn't play a role in fiscal policies. It's not a national emergency like it was at the time, and I've been trying very hard so far this year, succeeding in not getting involved in giving fiscal advice. So I'm just going to have to, whatever you do, we take it into account in our policies, but we don't come out then and comment on whether we think this is a good idea or a bad idea. Sorry.
Well, okay, I appreciate that. Maybe just one other quick question. We noticed that the Fed is continuing to pour some, or pumping some liquidity through the purchases, mortgage purchases, particularly, obviously, Fannie and Freddie. I mean, is that, do you see that as continuing to be necessary? Obviously, you do, or you're doing it, but why?
So, as you know, we're looking at that right now. We're looking at, my colleagues and I on the Federal Open Market Committee are having a second meeting about that in a couple of weeks. And we're going to talk about the composition of our asset purchases and the path to beginning to reduce them. And I wouldn't want to judge that, but this is something that's very much on the table.
I might just add real quickly, with regard to climate risk that you've heard a lot about today, whether it's political or true risk, I would just want to remind my colleagues that when we assess climate risk in terms of the U.S. economy or U.S. investment, do not forget that every time we don't invest in energy or climate manufacturing issues in the United States, another country that doesn't do it as well as us is going to do it as well. And this is climate change is a global issue, so let's think about risk in a global context. Thank you, Mr. Chair.
Thank you, Senator Kramer. I am going to go vote. Turn it. Senator Ossoff is next. A Republican, Senator Lummis, we think is coming back, or perhaps Senator Crapo, maybe, and then Senator Reed will go. But Senator Reed will chair, and Senator Ossoff is recognized for 5 minutes.
Thank you, Chairman Brown, Ranking Member Toomey. Thank you, Chairman Powell, for your service and your testimony today. Obviously, over the last 18 months, the COVID-19 pandemic has been the most significant shock to our economy and the financial system. But stepping back, what do you assess to be the most significant systemic threats to financial stability over the medium term, either limited to the U.S. or globally?
I'd have to say that the thing that worries me the most about it is really cyber risk. You know, it's a constant concern, and we spend lots of time and resources on it. So does the private sector, but that's the one where we have a playbook for, you know, for bad lending and bad risk management. We have a lot of capital in the system, but you know, the cyber, as you see with the ransomware issues now, it's just an ongoing race really to keep up, and we haven't had to face a significant cyber event from a financial stability standpoint, and I hope we don't. But that's the thing I worry the most about.
And in terms of threats to financial stability following cyber, what next preoccupies your attention or concern?
You know, the economy's coming out of this globally, coming out of this pandemic. So I would worry about if we don't succeed in vaccinating people all over the world. Really, we're creating time and space for the development of new strains of the virus, which can be more virulent and more difficult to fight. And I worry that could undermine the economy and ultimately financial stability. The last thing I'll say is, you know, we're at the point in the risk cycle where people are looking out 4 or 5 years and they're seeing pretty good economy. You know, we're heading to I think a strong labor market, highest GDP in 7 years. This is the time when risk takers can begin to forget that there's a bad state of the economy out there waiting for them at some future date and take too much risk. And so from a supervisory and regulatory perspective, we're very mindful that it's a time when we need to keep people focused on risk management.
That's a great segue to my next question, which is, given the extraordinary provision of liquidity, not just since COVID-19, but over the last 15 years, how concerned are you that credit committees at major financial institutions and others allocating capital are acting with sufficient prudence, given the easy access to capital?
You know, financial conditions are highly accommodative. People are getting things financed, SPACs and things like that are getting done. We see Bitcoin going up in value and down in value. So at times it's felt like a somewhat frothy market. You know, you do worry about that. At the same time, you know, we're very focused on the real economy. Our jobs are maximum employment and price stability, really, and also financial stability. But we've got a long way to go, so we want to be careful about you know, tending to our main mandate while we also think about, you know, financial stability issues.
What is your level of confidence that there are not risks lurking in the non-bank financial system, hedge funds, private equity, SPACs you mentioned, given the provision of all this liquidity and the reduced visibility that regulators have into some of those institutions?
So there's lots of risk-taking going on in the non-bank financial sector. Much of it can take care of itself. Private capital can absorb losses. We know from the experience of the last crisis and the one before that there are structural aspects of the non-bank financial sector that really need some, you know, need better regulation and better structures, and that's particularly money market funds, which twice have had to be bailed out in the acute phase of the crisis. I think we saw that the Treasury market really lost functionality, the most important financial market. It lost functionality significantly during the acute phase of the crisis, and we're doing a very careful analysis and thought about whether there needs to be some structural strengthening there and other aspects as well.
Turning finally to climate change. The Fed's most recent financial stability report cited climate change as a potential threat to financial stability. The National Oceanic and Atmospheric Administration, our country's foremost meteorological agency, states that impacts from climate change are happening now. They cite risks including changes to water resources, floods and water quality problems, challenges for farmers and ranchers, increases in waterborne diseases, rising sea levels that put coastal areas at greater risk. The Department of Defense identifies climate change as a critical national security threat. What is your assessment of the risk that climate change may pose to financial stability or to your dual mandate of full employment and price stability in the long run?
I think it has implications for all of those things in the long run. We're very focused on the risks that individual financial institutions are taking and working with them to make sure they understand the risks they're running and can manage them and address them in their business model. More broadly, in financial stability, financial markets generally, and non-bank financial institutions, it's much the same. We know that the transition, for example, to a lower carbon economy may lead to sudden repricings of assets or entire industries. And we need to think about that carefully in advance and understand and be in a position to deal with all of that. We're doing all of that work, as are other researchers and central banks and governments around the world. There's a lot of work going on this, and it's a high priority. But a longer term issue in terms of the financial stability. I mean, I think the manifestations of climate change are here now, but the financial stability issues are really coming.
Thank you, Chairman Powell. I yield, Mr. Chairman.
Thank you. On behalf of Chairman Brown, let me recognize Senator Loomis.
Thank you very much, Mr. Chairman, and welcome. Good to see you again. My first question, as you might guess, is about digital assets. You had testified yesterday in front of the House Financial Services Committee that one of the stronger arguments in support of a central bank digital currency was its potential to render stablecoins and virtual currencies unnecessary. But in March, you acknowledged that Bitcoin, Ethereum, and other virtual currencies are essentially a substitute for gold rather than the dollar. So I want to talk a little bit about the difference between the two. So it's pretty clear that Bitcoin, Ethereum, and other virtual currencies are investment commodities and not payment instruments. The SEC and CFTC have said as much in court cases and regulatory actions. So I think what you were trying to get at is one of the best arguments for a central bank digital currency is that stable coins could be rendered unnecessary. But legally speaking, stable coins and virtual currencies are not synonymous because stable coins don't increase in value generally and are used as substitute payment instruments, whereas Bitcoin, Ethereum, and other virtual currencies are investment assets. There's research from Fidelity, Deutsche Bank, and Credit Suisse, among others, that call Bitcoin an emerging store of value. Goldman Sachs has also said the same about Ethereum. And so my question is, because stablecoins and a central bank digital currency are more synonymous with a dollar as an instrument of payment, and Bitcoin, Ethereum, and other virtual assets are more an investment commodity like gold, when you spoke to the Financial Services Committee in the House yesterday, did you mean that stablecoin would be unnecessary if we had a central bank digital currency?
You're right. But let me say, though, with cryptocurrencies, it's not that they didn't aspire to be a payment mechanism. It's that they've completely failed to become one, except for people who desire anonymity, of course, for whatever reason. So that's why I included them. But I would completely agree. Really, the question is stable coins. And my point with stable coins was that they're like money funds, they're like bank deposits, and they're growing incredibly fast, but without appropriate regulation. And if we're going to have something that looks just like a money market fund or a bank deposit or a narrow bank, and it's growing really fast, we really ought to have appropriate regulation, and today we don't.
And I would assume, thank you for that. I would assume that you would agree that some common definitions and kind of a clear legal framework would help us understand the opportunities associated and the risks associated with financial innovation.
Yes, I can certainly agree with that.
Thank you. Thanks so much. Now I want to turn to monetary policy, and I'd like to draw your attention to this chart. Federal Reserve and Bureau of Economic Analysis M2 data shows that deposits and close substitutes held by households have generally averaged 51% of GDP from 1952 to 2021. But then data from the end of Q1 of 2021 shows that households are sitting on deposits and close substitutes of approximately 79% of GDP today. So that's roughly 28% or trillions of dollars above the historic average. So going back to 1952, there's never been a higher percentage of household deposits to GDP. Monetary policy also has been highly accommodative over the last 16 months to the tune of 32% increase in the M2 money supply. So I haven't heard anybody talking about this hidden stimulus. And when households start to spend this cash, combined with the enormous liquidity already out there, it seems there's real potential for inflation to continue to overshoot. We've already seen it this week, as the core consumer price index number was nearly double what economists had predicted. So here's my question. Is it really wise to continue to have accommodative policy when there's still trillions of household cash that will flow into the economy soon?
So this, I think the main factors driving this up are really that people have been sitting at home for a year and a half, not able to travel and go on vacation and spend money in restaurants and things like that, and also combine that with the major fiscal transfers that Congress made. So there's a lot of cash, as you know. There's a great deal of cash on household balance sheets, and that's what this is representing. You know, is it appropriate for us to continue accommodative policy? We think it is, but as you know, we're in the process of evaluating, you know, when it'll be appropriate for us to taper, which is to say reduce our asset purchases. We're having a second meeting that'll address that topic directly in a couple of weeks. So, but for the time being, the other thing I'd point out is there's still a lot of unemployed people out there. And we think it's appropriate for monetary policy to remain you know, accommodative and supportive of economic activity for now.
Thank you for your responses. Thank you, Mr. Chairman. I yield back.
Thank you, Senator. On behalf of Senator Brown, I'll recognize myself, and at the conclusion of my comments, I will yield to Senator Warnock, and by that time, I presume Senator Brown will be back to conclude the hearing. But I will ask first. So, first of all, thank you, Mr. Chairman, for your remarkable service over these many challenging months. I appreciate it very much. One of the aspects of the pandemic has been an indication of the potential for technological displacement of workers. I think we're all now familiar with Zoom. In fact, it's a blessing and a curse simultaneously. But as you look forward, how are you factoring in this notion of technological displacement in terms of the workforce and employment?
You know, we began hearing very early in the recovery period that companies were looking at ways to use technology really more aggressively in their business models. And a lot of the people who lost their jobs during the pandemic, of course, were people in service industries, relatively low-paid, public, customer-facing businesses, hotels, travel, entertainment, things like that. So I think we're going to see that, and that's, by the way, the technology coming into these industries has been a trend. I think we're going to see that accelerated, and you'll see more technology and maybe fewer people. And I think the implication of that is that we need to work as a society to make sure that people find their way back into the labor force, even if they can't find their way back into their old job.
And what I think that does is stress the need for improving human capital so that they can be competitive in jobs that they might otherwise not be. That's education, that's a lot of the things that, and I know you don't comment on fiscal affairs, but a lot of the aspects of the President's American Family Plan, preschool education, 2 years post-secondary education, significant job training, et cetera. But just in terms of the future, we're going to have to make those investments. Otherwise, my sense would be we're going to have a lot of people who want to work, but whose skills are not up to the new technological opportunities. Is that fair?
It may well be, and that's been a long-run trend. If people can keep up with evolving technology, that lifts all incomes and lifts their incomes, and if they can't, they tend to fall behind.
Let me change subject slightly here. Labor force participation. One of the other illustrations from the pandemic was that many, particularly women, were unable to continue in the workforce because of their child care responsibilities. Have you and the Fed looked at this factor as one of those inhibiting issues for labor force participation? And is it a factor?
It is a factor. If you include broadly caretaking, it's a big factor. If you just include children and schools being closed and caretaking at home and that kind of thing, it's still a medium-sized factor that's holding back participation.
So if there is reasonable and available daycare, that should contribute to increased labor force participation.
So I think it's daycare coming back, reopening, being available. It's also schools reopening in the fall, which should help as well.
Right. We've all, I think all of us touched one way or the other on the inflation issues, and some of these seem to be sort of one-off effects of the pandemic. Lumber went out of sight because people were sitting home, decided they redecorate and renovate. Lumber futures are down now, I believe, so we can see that leveling off, hopefully, in the future of prices. There was a chip shortage, and which caused new cars to be expensive, which drove up the price of used cars. My sense is, your view is that these are transitory effects that are somewhat related to the pandemic or other causes, but they don't represent a trend. Is that fair?
Yes, we can identify a half dozen things just like that, and they look very much like temporary factors that will abate over time. What we don't know is, are there other things coming along to replace them? We do hear of pressures across the economy. We don't really see prices moving up broadly across the economy at this point, but we're watching carefully for that.
And just a final point, in echoing something Senator Ossoff said, climate change every day becomes much more pronounced and much more obvious to all of us, and the impact on the economy is something that I think is not transitory. It will be with us. Simple things like food, when there's no water for irrigation, more complicated things like displacement of homes because of rising waters or a lack of water rather. And I'm pleased to see that you're beginning to focus in on that. My sense is, though, every day there'll be another challenge, and it'll be more. The news will be more upsetting. Let me put it that way. I hope that's a fair comment.
Thanks.
Thank you, Mr. Chairman.
Thank you, Senator Reid. Thank you for presiding. Senator Warnock from Georgia is recognized for 5 minutes.
Thank you so much, Chairman Brown, and thank you, Chairman Powell. I'm a strong advocate for working families and successfully pushed, along with Senator Brown and Senator Booker, Senator Bennett and others, expansion of the vital child tax credit program in the American Rescue Plan. The expanded child tax credit essentially provides a tax cut for middle-class families, cutting childhood poverty nearly in half nationwide, and is generally available to most American families with children, including families with little to no income. Today is a great day because many of them will see that tax cut hit their bank accounts today, and I'm happy to see hardworking families across Georgia and across the country see the benefit of this to help with the rising costs of raising our children. In my home state of Georgia alone, more than 1.2 million families will receive these payments, providing much needed relief to over 2 million children across the state. In previous remarks, Chairman Powell, you stated that, quote, the widespread vaccinations, along with unprecedented fiscal policy actions, are providing strong support to the economic recovery. With families now beginning to receive their child tax credit payments today, how does direct financial support to families help sustain an ongoing economic recovery?
Well, of course, we try not to comment on fiscal policy measures, particularly such as the one you've mentioned, but I will just say generally in the recovery from the pandemic that fiscal policy really did step in strongly and support people in their time of need, and I think the record will show that.
Thank you. I have another quick question about a housing bill I'm currently working on, which I hope will be a bipartisan bill. One of the other challenges that I've worked hard to address is the widening racial wealth gap in our country, a wealth gap that has been further exacerbated during the pandemic. In particular, I've focused on the persistent disparities that exist in the undervaluation of Black and brown homeowners within our appraisal market, which, as we all know, is a key contributor to creating generational and middle-class wealth. Most people's wealth is in their homes. This is directly tied to the value of their homes and thus their ability to pass on wealth to their children. I'm glad to see the Biden administration, the Fed, and other federal banking and housing agencies taking action, as well as banks, credit unions, the appraisal industry, and other stakeholders leaning in collectively together to help solve this longstanding issue. Now it seems to me it's time for Congress to join the effort. Chairman Powell, do you agree that addressing racial disparities within the appraisal market can help our economy and help close the racial wealth gap?
Well, I do think that there's no place for racial discrimination in our banking sector, in our housing sector, certainly in the appraisal. And there's a big focus now on appraisals, as you point out. And we will use the authorities that we have in supervising institutions, enforcing CRA to try to eliminate that kind of discrimination.
Do you think it will help close the racial wealth gap?
I think over time, I think a lot of the racial wealth gap is traceable to housing, as you point out. So that should be the outcome.
Thank you. In April, our colleagues on the House Financial Services Committee unanimously passed the Real Estate Valuation Fairness and Improvement Act on a bipartisan voice vote. Not only would this bill be a great step in improving appraisal practices and mitigating racial bias, it seems to me it would also help increase and diversify the appraiser pipeline and increase the number of trained appraisers in rural communities. And so I'm planning to introduce this legislation along with Senator Klobuchar and Chairman Brown here in the Senate, and I hope to do so with a few of my colleagues from across the aisle because I believe we can work together in a bipartisan manner to tackle this critical issue that impacts not only these homeowners, but impacts the economy as we close the racial gap. We all have a stake in that. One final question on a topic that I'm also very interested in. Chairman Powell, as you know, the Community Reinvestment Act addresses how banks must meet the credit and capital needs of the communities they serve. Back in May, I asked your colleague, Mr. Quarles, about the Fed's intention to issue a joint rule along with the OCC and FDIC. And he expressed that it was the Fed's objective to work with the OCC and the FDIC to issue a joint CRA rule that protects and strengthens our most vulnerable communities. Could you please provide us with an update on the status of this CRA rulemaking?
I'd be glad to. We are working through the process of reviewing a really quite extensive group of comments and now engaging with the OCC to go forward and try to sort through that and come out with appropriate changes to what we proposed. I can't speak exactly to the FDIC. I think they're considering whether to take part in this process. We, of course, would really like to get the three agencies together on a CRA proposal, and I'm very optimistic. There's a lot of work left to do, but I'm very optimistic that the work product will be a very good one.
Thank you so much.
Thank you, Senator Warnock. I understand the chair can't comment on the immense importance of child tax credit, but I can, and I thank Senator Warnock for bringing it up and thank him for his leadership, even in his first 6 months in the Senate, on an issue that's going to make a huge difference to 39 million families, 52 million children. 92% of children in my state will benefit from it. We don't quite have everybody getting checks today or direct deposits today, tomorrow, and Saturday. We encourage people to go to taxcredit.gov, that people that have not, that are eligible, and that's, as I said, 92% of the children in my state. So Senator Warnock, thank you for your work on that. Chair Powell, thank you for being witness today and providing testimony for senators who wish to submit questions for the record. Those questions are due 1 week from today. On Thursday, July 22nd, Chair Powell, if you would, you have 45 days to respond to any questions. Thank you again. With that, the hearing's adjourned.
Thank you.
Thank you, Jay.
Order! Order in the court. Order. He's like, yo, what the, yo, who, you trying to get lunch? Yo, y'all trying to kick it after? Yeah, oh, what's up, girl? Where you from? Okay, yeah, you know, I'm representative. You know, I've been doing this for a while, you know. Yeah, I know Jerome. Yeah, me and Jerome. Yeah, we go way back. Yeah. Word. All right, yeah, follow me on Instagram. Oh, you trying to go? Okay. Word. All right, yeah, all right, I see you. All right, yeah, we about to go over there. That's my office. Y'all got big ass office up there. Oh. How you feeling? How you feeling, son? Good morning. How do you know? Who told you? What do you mean, good morning? Who told you? What are you saying? What are you implying? Are you implying that I used that opportunity to put my ass to bed while the market was going to do nothing? Who told you that? Who told you that? That's not what I did, but it is what I did. Oh, there's the alarm. There it is. That was a backup just in case. I know Jerome, man. Me and Jerome, yeah, we go way back. Oh, Bradley Frizzle in the peach. Hard. No, I was, what's it called? I was still here, but I was just, I was passing out in between. I would lay down and stretch. I did pass out for a little bit. That's why I turned on an alarm just in case. But we good, baby. The Honeywell, I got mine, and this is yours, baby. God bless the cult, and God bless the mods. Hard. Amen. That Honeywell was nice. So I got to make those free. I think that one, DOW leader today, it held up a lot. I get my peaches out from Bradley. That's that frizz. He waiting for the meeting to be over. I know, that's beautiful. Look at just right on time, baby. Right on time. Yeah, no, that's what we used to do back in the day. When you get a good meeting, the market isn't too much. I even think the volume is a little bit lower here. Yeah, volume is pretty whack. 20 million almost. 2 hours. It's pretty encore. It's what we've been seeing, but it levels out. You can take a good relaxation. Y'all get the speakers. It's good. Today's volume right now is at 20 million. 20 million. Got my weedings. Good meeting, good nap. It's like not a nap though. It's just like a lay down session. I don't know if that makes sense. It does. You just get to lay down. You get to hear. You get to soak it all in. They said a lot of stuff, but most of it was after the first half. It really turned into the same kind of thing that you would see with any of the other meetings. But he did say the one thing I said right before. Mr. Powell, he's been very combative, more or less. I don't know if that's the right word. I think some people took that out of context. He seems he's not as he's having to push back a lot more. Even yesterday, he's kind of fighting to defend this stance. I don't know if you remember. I forgot who it was. The other lady or the other guy who asked. They started just listing what the other Fed chairs were saying. They were going one by one. It's not he's not playing the same. Okay. He's not just dropping one or two lines. Jerome Mayweather. Are more the questions are asking are more aggressive. They're not even questions. I agree. That's actually a very I think I overlooked that there. I agree with that they are, you know, some people politicize it a lot, obviously, but a lot of them were also very, you know, they are coming at him a little bit more. Google the minutes lady. Playing for Roblox, that one is just a more of a longer term swing, if anything. So I think it's going to have a good earnings. The only thing that's going to hurt Roblox is probably that the guidance will be higher. However, the fact that they have those 1 month updates, it's kind of already hit the stock a little bit. Hold on. Let me get a water. I get my peaches out from Florida. That's that frizz. When you read a book or paragraph, do you subvocally hear the word in your head? Or do you read it so fast you don't? I envy the second. I do both. So it depends, like, if I'm in reading mode or if I'm in scanning mode. So, like, if I'm reading something, like if I'm really like taking my time and like reading it, I can I talk to myself. Like I hear my voice saying hello. It says Scotiabank adjusts Devon Energy. But then if it is if I'm like scanning, I can read it without reading it, if that makes sense. It's weird. I remember I saw that video of somebody asking it. It was like, have you ever thought about that? Have you ever thought about, like, when you read a word, do you hear the word? Like, do you hear yourself, like, think about it. Like, when you're reading the chat, like, how does it come? Like, how do you process it? Yeah, internal monologue. That's what it's called. Internal monologue. I almost spit my drink out. Bradley Frizzle says, he's like, I get this Siri voice. Hello. What am I going to do today? I'm reading Maxine Waters so bad. Thinking about thinking. Jesus, Patrick. Jesus. Jeez, bro. Texting sucks. This way of communicating slow and sucks. I mean, texting is very convenient, but I do prefer, I prefer to talk than to type. Gold and silver. Let me see if I can find you the chart. There's actually a cool dynamic playing out right now. Is anybody, where are my gold people? My gold people and my oil people. Do you know that, like a lot of people look at like the gold to silver ratio. A lot of people look at the, they'll look at the S&P to gold, but I didn't even know people compared this. There's a gold to crude oil ratio. Yeah, gold to oil. Look at Lakshay. Ooh. Uh-huh. So that came up. Let me see if I can find it from, I think it was yesterday. Yeah, so like last time in like 2008, I think there's like a couple of peaks in like 2015. Let me see if I can find it for you. There's a cool, yeah, right? Is this it? No, it's not it. You guys hit it. Come on, give me gold to oil. There it is. Oh, I found this. You guys are lucky I found this one. This one, I remember, I saw this one after hours. I was going to put it in the watch list, but it just wasn't really, it's kind of more of an opinion rather than, like, it wasn't like a company news or event. I get my peaches out in Florida. That's that first. So right here, you can see it gold. And then this is also, this one's just there to kind of highlight the central bank policy. So if you see, you can see right here in 2008, the gold, this is the white line is gold to Brent crude. So you had one peak there, and this is what people are bringing up about here because it's looking like it might be time for a good run up. Again, 2014, 2015, this started to make a move. So it's pretty much showing, I mean, if anything, you have to really think about it. Like, why does the ratio look like this right now? It's because oil has shot up a lot while gold has pretty much stagnated or went down. So again, in the beginning of the year, 2020, you know, think about what, do you see why that shot up in 2020? You know, think about it. Oil went negative, and then gold, people were panicking. So as this is balancing out, though, but some people are saying this leaves a lot of room for gold right now. I get my peaches out in Georgia. That's that. Really just showing oil crashes. I guess. I mean, well, not necessarily. 08, 09. You see it ran up at this time. 08, 09, I think both of them are running. Pass me the yogurt cup. Yeah, everything's been good. The integration, we're still learning how to use all of our tools here, but we have we got a lot of good news. We got a lot of things fast. Even now, I mean, so far at the end of this, bull trend remains intact as bonds consolidate. Inflation might be transitory, but discretionary income is not. Ooh. Uh-oh. Oh, wow. That's scary. You guys want this one? Well, let me pull this out. No. Inflation might not be as transitory, but discretionary income is not. The recent trend surge in consumer and producer core prices makes the underlying real problem with the U.S. economy. Disposable income for inflation is cratering. There's a potential break on spending and a major threat to risk assets, equities in particular. Discretionary disposable income has not been this low since before the financial crisis and was only temporarily propped up by fiscal stimulus. When stimulus and forbearance end towards the end of the third quarter, the ability for consumers to lift the economy will be severely compromised. The first hint may come from this coming Friday release of June retail sales. If high inflation persists, transient or otherwise, consumers will have less disposable income. Slower spending means lower earnings and trouble for equities, in particular the companies that cannot pass along rising costs. The argument that inflation will eventually fall back will be a moot point if it doesn't come in time to compensate the drop in consumer income. This obvious outcome is that prices of risk assets will have to adjust to the new environment of stickier inflation. I'm reading this from a blog of the Newswires. So a blog of analysts on the Newswire. But here's what it shows. That's actually pretty crazy. So here's your average weekly earnings year over year. And then it's not, what's that? Core CPI. I don't know. Man, get that out the way. Core CPI year, month over month. And then, or core CPI and core PPI. Producer prices and CPI. But it has dropped. And apparently this is your lowest. So isn't that ironic there with the CPI hitting those 2008 levels? I mean, last time you had weekly incomes drop this low. That's pretty surprising. People were making bank during the beginning, though. Classic econ. No right or wrong answer. Some would say it depends. I agree. That's literally where we are at the end of this. And I mean, you're getting to really watch the battle. Even with Powell and everything going on. I mean, today's at least, it's good though that Powell has not, I mean, I don't know if you guys realize it. Powell doesn't even upset the market like he used to in a way. You know, he is, given the nature of the data and what he's been saying, he is not like back in like 2018, 2019, Powell had I think some of these events would have moved the market a little bit more. So, you know, it's not like, it's a very interesting, it's an interesting take on all of it, you know, and that's why I think we're really in the middle of everything. Yeah, the Powell put. Strongly agree with your conditioning statement. Oh, Powell is like he's like Caesar Milan. Powell is a damn dog trainer. He is trained, he's, the way he's artfully he's got us to accept it without accepting it, but still accepting it. It's amazing. He's not saying shit. Bro, that was just 3 fucking hours of Powell. He said, you have to he's opening, give the microphone to Janet Yellen for an hour and a half and see what happens. Let her be the Fed chair again. Let her have all the decisions and just go ahead and give her an hour and a half and watch what happens to the stock market. Bring in the closer. No, there's no news on anything overstock related, and that was one of its. Yesterday was the biggest drop in like 2 months, so very, very surprising there. Powell to be reconfirmed. Are you ready? Oh, I got tinfoil. I got tinfoil. Are you ready for it? I don't know if I want to say it. I don't want to put this into the universe. I don't want to do it. I don't want to say this out loud. I really don't. Y'all catching me? You know, I'm tired. I'm tired today. We got a nice little Powell session. It might slip. It might slip. Are you ready for it? I need you. Okay, then do me a favor, all right? Drop your shoulders. Chest to the sun. Relax. Okay, drop your, just for a little bit, just relax for a little bit. Take the tongue off the roof of your mouth. Drop your eyebrows. Relax your face. Relax your eyebrows. Oh, yeah, how's that feel? Good, good, good. Okay, are you ready? Are you ready? You feel good? Powell is not going to do a second term. That is my tinfoil. I've been subtly getting this feeling that I don't think Powell is going to do it. I mean, that's what I'm saying. Would you blame him? Like, come on. Would you blame him? Like, would you actually blame him? Look at the chat. Look at Powell loves the abuse. Honestly, I'd be the only way he'd want to stay. You got the Millie Rock out the Fed. You think he'll taper before he leaves? I don't know. I feel like he might just. I just feel like he could just walk out right now. If the next 4 years of just handling all of this, I don't think. I mean, he already has such a good legacy. I don't think he would want to, because you got to realize it. Anything happens, they're going to, if anything went wrong right now and you look back, Powell would get a lot of blame. You have to think about it. If there was, I don't think there was. I disagree. I don't think there was a real policy error on the Fed's part. I think Powell handled it like, I think we were blessed to have him in the position he was in. But if anything turned downwards and anything ended up becoming an overshoot or an undershoot, he would look very bad in that sense. And I don't think he's think about it. If it was actually not transitory during his term, and then you look back and then you would watch every Powell meeting like it was damn Ben Bernanke in 2008. We would be looking back and being like, look at this. He was clueless. He had no idea. But I don't think, I think he would bounce, honestly. I think he could walk away now, and he could walk away with no blame, with a the gold medal of what he did, and that's it. Just let somebody else handle this shit. I don't think so. You don't take LeBron out the fourth quarter. I agree. Believe me. But just, it's not like you could already see it too. That's what I've noticed. Have you guys realized in the last 2 weeks, in the last 2 to 4 weeks, you've had more calls for Powell to be nominated again. Like, even somebody yesterday even said it. They're like, hey, I think you should run again. You would be the only better one. You even had a statement from the Biden administration, I believe, and they said that they're not opposed to it, or they've been urged to keep Powell on. And I think that's a big shift. He knows what's coming, 100%. There's no fourth quarter. They just kick the game. Yeah, we've been in the fourth quarter for a long time with the Fed. And SPY's coming down now. See, Powell's not talking. You haven't moved much. This is going to be I guess we're getting a little bit of a statistical anomaly halfway through the day, but I'm sure end of the day run won't hurt us too much. We'll see. They want it back again. You don't think he would get blamed for recklessly printing trillions of dollars? I mean, with all due respect, he saved your fucking ass. So I don't think it was recklessly printing trillions of dollars. You have to realize there's two sides. There's fiscal and monetary policy. If you look at the budget, if you tell me, fiscal policy is reckless. If you look at monetary policy and what he's been doing, I don't think it's, he played the card he was dealt, and he did it in the last 5, if this was like fantasy Fed chair, and you took and you drafted the last 5 to 10 Fed chairs, and you all put them in that game, they would have all blown up everything, without a doubt. I really think, Powell, how do I say this without sounding like a damn fanboy, to a crazy degree? Powell is a gift from God. I know some people are going to hear that right now, and you're like, what the fuck? This guy just in love with Powell. But no, honestly, if you had anybody else at that moment, I don't even want to forecast. I can't even. He was literally, he's Tom Brady. He's a gift. He was a damn gift from God, of the financial gods, to give us somebody with the knowledge and Powell, he didn't cave once to anything. If you really think about it too, during all of it. It's crazy. SPY picking up now. About to sell off. That's a very interesting effect, that we got kept up during Powell, and then right away we're selling off after Powell, but it looks like bonds did switch gears. What about Jim Cramer? Fuck no. I love the guy, but no, not for Fed chair. It's not. No. I wouldn't know, so I'll take your word for it. You should go look. I mean, please don't take my word for it. Go look up every Fed chair and just go watch their interviews, and you could kind of get a different vibe. SPY's about to hit a new low. Wow. That's surprising. Surprising, yeah, because what's it called? It's usually during Powell you would get more of the move. Disney Black Widow grosses $100 million domestically. See how many out the money SPY puts are expiring on the July 17th. We have a lot too. We have a lot of different plays expiring tomorrow. It's Friday. Today kind of already feels like Friday. It was an okay movie. I didn't see it yet. If you like Batman, I love Batman. I could do it. Volcker did what he needed to be done. Yeah, and even then, though, the legacy of Volcker was shitted on. So Volcker, he did what needed to be done. It was aggressive, and he was the guy in the 70s. Volcker is the one who, after after we had the first real inflation in the United States, Volcker was the guy who raised the rates to 15%. Imagine that. Imagine if Powell just one day, every month, Powell just started raising the rates like 2% a month. Be crazy. But Volcker, even then, Volcker got fired, actually. Volcker was the only Fed chair. Oh. I was like, what the fuck was that? Is that brrr? $17 gas in the 70s. Achievement unlocked. That scared the shit out of me. But yeah, Volcker was fired. I'm pretty sure. Joel, you're exposing yourself, man. You know a little bit too much about how that works. I'm just saying. Okay? I got you, though, G. I got you. Save that money. Oh. What happened to Amazon? Jeff Bezos got bullied. That was the saddest thing ever. That's so crazy. There's a lot of same names in here. Can you blame Greenspan for 08? It depends what you want to blame, right? You could, is it policy action, being late or early? That could take blame. But then another one is communication too. So a lot of them really, they were just late. That's it. They didn't want to be too early. Like, that's what I'm saying. Like, Powell did something a lot of people wouldn't do. He acted fast and he acted quickly. And then after the rates were cut once, he cut again. And it wasn't Greenspan, it was Bernanke. Bernanke was the real numbnuts. But even then, Greenspan wasn't really like, they again, all of these guys were just really they were not really qualified. I hate to say that. Like, I think Bernanke was an economics teacher. Like, I really remember we went over that. Like, I don't think he was it wasn't anything crazy. Knock ahead, forget about it. So, fun fact, guess trend doesn't protect you against the Southwest. Being clapped for 20 hours. Bro, I feel like I got Southwest today. I feel like I'm tired. I was tired as hell. I still am. That's what I call it from now on, because they're going to clap me. I just call it Southwest. You know what I'm saying? You feel me? My econ professor loved Bernanke. That's crazy. We're Roblox. No, I'm not. No caffeine. No caffeine. I didn't even have caffeine yesterday. I don't think I did. Coinbase gonna break through. You said, girl got it, and then now you did. You said, trend doesn't stop this. Had way too much caffeine this week. It's good. Take a little. It's good. You'll feel a little tired, but it feels good though. Like, it feels nice. Have you heard about people that benefited from '08 real estate? Yeah, there's a lot of people. I mean, my family was devastated by it, but there was at the same time, there's a lot of people like we had a friend, and this guy, he when it was all happening, he became a millionaire in '08, '09 while everybody was crashing. He made a program to get people their homes, to give their homes to the bank. So he made he would charge them like $2,000 to allow them to just dip out of their house with the banks, and he would do all of it super easy. And then everybody would do it. NetApp, Microsoft collaboration. What's the ticker on that? NTAP. Yeah, NTAP popping. Microsoft collaboration. NTAP. How did you bounce back if your fam got clapped in '08? Well, we didn't choose death. I mean, that's it. But if I look at it in retro, my parents never bounced back. I mean, it was just me and my family who actually got back to work, and we started, we got into other. I was young. I was a child. So by the time, a couple years later, I was an adult, and then that's it. And then we were able to we stuck to the game, but we got to learn what errors were made. But I still kept doing real estate and all that other stuff. But yeah, that's. But now if I do think about it, my parents never my mom has never purchased a house since. Neither my father. They've never got into it was just they lost everything. We almost lost the house that we were living in. So, but it was kind of us. The children who, we were able to have success by getting to work. But we worked in the same stuff, stocks, real estate, all that. We're in California. California knows how to party in the city. Who was at fault for that? Everybody. I don't know. It's just a different I don't know, though. I don't care. If that makes sense, and it's all going down. We never wasted, and I'm thankful for that. We never wasted energy on, that's just not how it works with our family and how we, it's just, it doesn't matter who to blame. You don't waste your time pointing fingers at anybody or anything. And that's it. You react to it, and if you could look back in retrospect and see what you could have done better, you look at your own actions. That's why, when I look at how I was able to change some of the trajectory there, I look back at the mistakes that my parents made. That's it. And I'm saying we don't want to make those mistakes again. They were very, very over leveraged. They just didn't understand. They didn't, think about it. At one point, they had a fuck ton of houses at one point, and they didn't even know what CNBC was. You think about that. They had a whole real estate business, and they knew nothing about financial news or the information. You think my mom or my dad knows what the damn Federal Reserve is right now? Even today, if I asked them. Think about that. So they were very, they were just going with what they knew. They real estate. Someone got my dad into it back early in the years, back when my dad was. This was maybe in 2003, maybe, or 2001. No, maybe 1999. I think somebody at church was a real estate agent, and he got my dad into real estate. And then from there, my dad slowly did it, and he was working at real estate. He was doing pretty decent with it, just as an agent, broker type thing. And then he would, typical, always buy cash, own the house, get it rented. And then it turned into, the market got hot. You know what I'm saying? Imagine if you were just how it was right now. You were doing what you were doing, then the market just gets hot out of nowhere, and then they started just ramping it up. My dad started leveraging a lot. He didn't really understand it, but then he, they were not aware. They were not financially aware. They had money at that point. We were rich for like a year. That's how it worked. We were rich for 1 year. That's it. It was like a year and a half where it went from like we didn't have a Plymouth Voyager anymore. That's it. We had to pile in a van. It was crazy. We had a year and a half maybe, and then they lost everything. But they didn't understand. They didn't have the financial news. They were not aware of the financial situation. They did not really understand economics. So, those are some of the mistakes that's why when I look back at it, it's just, we could do better. That's what I've always looked at it. And that's why, as I, just like I tell some of you guys, make sure you could own the homes. Even in the middle of it, they would have been able to keep the houses, but they made the mistake and they panicked. They didn't really know much about it. And it does get scary. I think that's something I could give you guys all a reminder here, is that you all have a plan, and hope that's why make sure your plan is a good one and really be honest with yourself and understand what it could look like on both sides. Because at one point, eventually, it was bad. Like, you had to really, like, once one thing starts clapping, the other one starts going, and then you have to deal with it. You're gonna deal with a lot. How they keep the houses. Some of them were, what happened is that they had they rented them out. They weren't, so they had a lot of leverage, but then they rented them out and then everybody left. So they had vacancies, and then they didn't, my mom didn't want to go into her savings and start, she's like, wait a minute. That's what my dad would say. He'd say, I wanted to keep it. He'd say, your mom, she panicked. I'm like, y'all both pay. I had no idea what was going on. And yeah, then you have kids, and then all of that, and then shit starts going down. So it's one thing after the next, and that's where it kind of, they eventually just backed out. They could have waited, and then once they could have got the houses re-rented, probably in like 3 to 6 months, took the burn, but it wasn't really, it didn't do much. I hope it didn't shake his faith. Oh no, not at all. No. My dad he'll even tell you. He'll even sit there and he'll even say, he was like, I got greedy. He's like, he knows a little bit. He doesn't know about leverage and understand it, but he was like, we focused, we got excited at that moment. That was the first time they had money. That was like the first time my foreign parents from Egypt ever, like, think about it. Go make a house flip and make $100,000, make $150,000. They've never seen anything like that. How old were you? You could have done something. I was young. I was very, I was not like, I couldn't legally do anything. Your parents owned houses and had savings. Sounds like they were better off than my parents. I think you missed half the story. We could start when they came from Egypt with $20. We could go down that list, but that was because they were just doing real estate, and then it took off, and there was a year where they were able to buy houses, where they were able to we only had a year of that in our life. I've never seen my parents for more than a year and a half have that, and then they lost it all, and then it was 10 times worse for the next 4 or 5 years. And yeah, this isn't about a comparison. I mean, it's not. I'm explaining it here. I forgot how we even got into this conversation, but it's just even, I think it was with the Bernanke stuff and everything else, but a lot of people with 08, it was a different situation. How did they get out of the situation? They didn't, that's what, how come they didn't get out of this situation? They lost everything. We lost everything. Like, there wasn't a situation. We just had enough to live, and then I finally got older, me and my brother, and then that's it. And then now it's a different situation. We worked. That's it. Like, they lost everything. Like, I don't think you guys realize that it was bad. It was really, really bad. Listen, Linda. I don't understand why people think everyone was spoon-fed. No, I mean, and I agree, but and even then, I think the fact I live in the United States of America. And if you were born here too, you are spoiled as well. At the end of the day, it's not whether we had a little or a lot. The fact that we had the opportunity here, that was the real big difference. And my parents will say that still to this day. Still to this day, and I agree. But that's why, if you understand, think about what I just told you, right? And now you want to ask why my young ass, when I was young till now, why do I know so much about economics? Think about it. I just told you a story where my whole developmental years was witnessing calamity from poor financial decisions and lack of education. And now you see I could go break down the whole global market to you right now. Why? Because I wasn't going to make that mistake. That's why I was saying you had to learn to do it better. That's why there's no one to blame. I didn't want to point a fucking finger at anybody. I never saw my parents point a finger at anybody. I saw them pray. I saw them read a Bible. I saw them say it's still God's plan. And that's it. Get right back to it. That's it. My dad went from owning multiple rental properties to shit. All right. He went and got a job. He went and just started working a 9-to-5 job after 2008. There was no other way. As simple as that. And that's why, to this day, that's why I've learned what I've learned. And there's a real passion behind it because there's a lot, it's very important. And I really got to witness, wow, it's a game changer. It's a game changer with what you know. And even with what little they know, with the amount of opportunity, they had an opportunity to grow something. And then it got taken all away. But that's where education comes into play. What would you do knowing what I know now? I would have saw the yield curve. It would have been from a mile away. If I knew what I knew now in 2008 and you put me back there, oh, man. I would have been like, Mom, look at the yield curve. You see the yield curve and what they've done. And now, look at the delinquencies. I would sound like everybody sounds like today, but they're not looking at the same underlying facts. It was obvious, especially when I'm like, damn. Hindsight is 20/20 though. I'll be like, Ma, this is crazy. You have the opportunities. You have to have not have your head in the clouds. I think you have to have a good attitude about it, and that's why. It is too. That's why. What are you around? You know what I'm saying? That's why. Again, I do not take it with a grain of salt that I've never seen my mom or dad point the finger at anybody. That's it. And I think that shapes your attitude a lot. There was no such thing as coming into my house, a problem happens, and you blame somebody else. That just doesn't exist. That right, and why? It's because, again, they'll even say it today, it's the opportunity. There was real shit they were complaining about before they came here. There where you could really point out a grievance and say, wow, there. And it's not to say there's no problems, and it's not to say that other people, you could blame. You rightfully could have blamed the banks. You could have blamed a lot of people, but it was just never the first thought, nor was it ever really given that much energy or attention, as much as figuring out the problem or getting back to work, really. GM charging stations. Stock isn't moving on that. Hits might have that one early. Let me check. Or it may just be a no reaction. Yeah, they announced new fleet charging service. It's coming out. It's hitting the wires now. BrightDrop announced Ultium Charge 360 fleet charging. Mm-mm. Mm-mm. Check charge point. Are they with them? It says, what is it? Ultium? Or BrightDrop? It's National Gummy Worm Day, apparently. Wow. That's crazy. I haven't had a gummy worm in a while. Charging to power commercial EVs. Gunlock says CNBC, he tells CNBC the dollar may be doomed for the longer term. That explains the stores loaded with gummy worms. I feel like I haven't seen a gummy worm in a while. I feel left out. What time is it? 9:32. Still pretty early. And ladies and gentlemen, we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you subscribe. You're on mobile. Press hide chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts Boot Camp and Real Estate course. But ladies and gentlemen, we've been here for about 3.5 hours. You got some Powell. Some of you may have gotten a nap. But I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1. Get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then, optometrist recommendations, stare at an object 10, 20, 30 feet away. Blink a few times. Relax those pretty little eyeballs. Blink, 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 blink. Blink, 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 blink. Oh. Feels good. Wow, neck. Drop your shoulders. Drop your shoulders. Fix the nerd neck. Relax them. Drop them using your back. Relax your eyebrows. Yeah. Relax your eyebrows. Chest to the sun. Tuck the hips in. Flex the core. Good. Drop your eyebrows. Why are your eyebrows? Do you feel that? Why do you have so much tension in your eyebrows? Isn't that weird? Like, think about it. Like, focus on relaxing your eyebrows. Isn't that crazy? Oh, man. That's crazy. That's crazy. Legs in front of you. Not wrapped behind your chair. This man projecting heavy. Get your ass up and do a push-up, okay? I rebuke you. Okay? You then take your tongue off the roof of your mouth and drop your shoulders. Okay? With your little selfie ass, I know your shoulders are stretched, okay? Relax. It's fine. Okay? I'm going to stop it there before I get Yash. You know, Yash, I'm yawning. I'm tired, though. You know what I'm saying? I'm tired on it. Don't let me get it. I'm going to just... Okay, legs in front of you. Relax the jaw. Go, breathe in really deep. Breathe out with your tongue out. Do the dragon breath. Go. Mumu, do your damn push-up. Stop LMAOing. Fucking Mumu, you have a selfie with a fucking filter. Are you kidding me? Fix your damn posture. This guy. Mumu trying to laugh. Mumu, that guy who laughed at a dude getting a speeding ticket, and he gonna get this guy. You got like Anastasia filter on your picture. Literally, you sound like that, bro. Come on. You got Anastasia filter, and you hunched over crazy, and you're like, look at my box computer. Ah! That's it. Let's go, man. Let's go. Let's go, man. Get the body moving. I need to stretch. I need to stretch. I need to stretch. It's all love. I love you too, Brandon. I was just messing with you. I'm glad. Glad it's good vibes, bro. Glad it's good vibes. See, I could only troll Mustafa hard. See, Mustafa knows what comes with it. That's why we give Mustafa the spotlight, but he has to get flamed. You see, because a lot of everybody, you know, some people people want the attention, but they can't handle the negativity with it sometimes. It's not even, and I love Mumu. Mumu's just funny. Mumu's a good guy. Good guy to make fun of. No, I'm kidding. Facebook pop. Do I respect Mumu? Yes, I love that question because that's why I have more respect for him than more people than you would think. More people than you would think. Do you trust Mumu with $3,000? I mean, not if he put it into a brokerage account, but like if I was like, yo, hold this money real quick, I'm going to come get it back. Yeah. But like if he was like, yo, let me get $3,000. I got this new off-white business. He's like, we could buy them and flip them. So like we buy them full price and then we sell them on Afterpay and we collect 18% interest. It's good. It's good. It's crazy. I'm up 54% on the year. Now I'm negative 20. Let me ask you this. What were you going to do at 50%? Like, did you plan to sell at 50%? Hear me out. Hear me out. Seller financing close. Huh? It's a wave. We could do a lot with it. We get 17% interest. We could give them close. We'll do the Oh man, you might be onto something. Bank of America went red. I had $60 in profit. I think we're still good for now. I still have $60 in profit. But no, like think about that. But like, what were you gonna do with the 50%? It's a serious question because I had a cool talk yesterday. Somebody asked me. They were like, they're like, are the stocks gonna go back up? And then I was like, well, yeah, eventually. And then they're like, okay, in 10 years, is it for sure going back up? And I said, yes. I said, okay, because they said, if not, I'm gonna sell. That was the logic. So they said, if you're not really, and I was very impressed. I loved it. Because I was like, well, okay. I was like, well, then you're fine. You're like totally fine. But they were saying, if it wasn't going to go back in 10 years, then yeah, you should sell. But that's what I'm saying. Like if you were up 50% and you didn't sell it, right? You didn't do anything. Think about that logic right there. You're in the same position as down 10%. You just emotionally feel some way, but you own the same shit. Open Door offered to pay $585 for my house that I owe $380 that I bought in 2019 before COVID. I paid $420, so you owe $380 on it. If Open Door will give you that much, you could probably sell it on market and get $600, low key. Unless the company goes out of business before then. Well, duh. That's why it's based on what you own, you know. That's why you need good companies. But for the most part, like, you know, most of you guys have decent portfolio. I mean, if you are 80% EV stocks, what I'm saying does not apply to you. Because, you know, I mean, maybe one of them will hit, but it's more or less just, you know, a lot of people do, especially in here. I know a lot of people have some good quality work. Upwork, or no, Slack. Slack is popping. Check news. No news on it. It's just popping. There's no news coming across the wire. Check Twitter. Oh, yeah, they have an old buyout. I forgot about that, huh? Wait. Yeah, isn't it? It doesn't look like they got sold. Oh, no, it did. Yeah, a while ago. That's weird. Don't get caught up on that one. Unless they're backing out and getting a higher offer. XL. Hold on. They have a. CRM popping. A little bit. No, Slack isn't halted, but be careful on that. Yeah, they sold this. Something's going on with this. What do you think will help small caps? Rates going higher. That's it. The key takeaway from Powell's testimony, that there's a lot more. The friction is there's more friction between the questions he's being asked and what he's saying. Again, I mean, I made my judgment very, very early, even from yesterday. Again, even with China and what we have in the next few months, I think it's very spot on. And you have the Fed in 2 weeks, so this is only going to be so actionable. But there's a lot more friction between the questions and answers on both ends of the coin, and I'm starting to lean that Powell will not be running for a second term. I don't think he's going to be in the game. Excuse me. And get yourself out of the hole. Options have been working long term. Well, options is going to be finicky. Your long term, if it's down, I mean, it's going to come back up. I mean, you do, I hope. I mean, again, I don't know. We could do a long-term audit if you'd like, in the sense that I think a lot of people, you know, it might be a good time to look at your portfolio. It doesn't mean you're going to sell anything, but how are you balanced, right? What type of companies do you own? Let me ask you this. Let's try this. You guys want to do an audit real quick? Can I give you guys an audit? Let's do an audit. Let me open up my long-term. We're going to do something. I'm going to do a little game for you. I got a couple questions for you. Can I ask you a couple questions about your long term? And then you could note down some stuff and see. Damn, why I got to update? Okay, hold on. Let me load mine up, and I'll ask you some questions here. Ooh. No, work is not halted. It's not going to be, again, it's not, I'm not, I can only get to the specifics. I'm going to be very, very broad. We could start with the first one. Very, very simple. Very, very simple. How are you doing today, sir? Hopefully, can we take a look at your long term? What we're looking for today. Let's start off with anything, again, one, are all of these assets, are you planning to hold them for at least 10 years? Yes or no? That's a simple yes or no question. Please note your answer. Are you planning, is everything in this portfolio that we're looking at intended to hold for at least 10 years, minimum? Okay. Okay. So that right there, that tells you something. If there's a no on that one, you get a point. Okay. Next question. How many stocks do you have total? How many companies? So let me see. Mm-hmm. 17, 12, too many. So let me ask you this. There's going to be two sides of you. If you have more than 20, and again, well, let me ask you a better question. How long have you had this for? How long have you been holding the long term for? Because that will determine it. But pretty much, you wouldn't want to exceed 10 stocks a year, I'd say. So if you have more than 20 in less than 2 years, that could be something. So we're at 18. We're at like 9 a year. Well, think about it. What's it? That all means what? You have more stocks. You have more companies. You're spreading it around. Free shares, no. You don't have to count free shares. Any money added to. Free shares are free shares. But even then, though, that if you have free shares in your portfolio, you already violated the first question. That means you didn't plan to hold it for 10 years because that means you bought something and sold out for free shares. You see what I'm saying? So give yourself a point on that one. So if you have free shares, you already failed step one on the long term. That means you sold something. And this is only long term. We're only looking at assets that are being held for 10 years minimum. And again, none of this is a financial recommendation. Options trading is only risky. You can lose almost financial revenue, lose financial rights because no purpose, only thing all day. So then no more than 10 companies a year. Okay. Now, let's do another one. What, out of all of the companies in your portfolio, out of the said 10, 20 companies, how many companies do you engage with on a daily or weekly basis? Or are you, or maybe we'll start simpler. How many of these companies have you actually used their product or service or have a personal experience with it? So look at that. Thank you for the honest answers. If that number is below 50% or even at 50%, you get a point. That's a danger point. All the points, you don't want points on this. I'm marking your test up. So think about it. You sold in 10 years. You went from an A+ to a B, right? You have more than 20, 25 stocks, 30 stocks in less than 2 years. You're down to a C. Now, half of the companies in your portfolio you don't even know about or have actually used, you're at a D right now. You like to... So now, what would be the last one? So points are not good for you, no. Less points is good. There's golf. It's golf, yes. Now, finally, what is your growth ratio? Dividend to growth ratio. Are you weighted more or less for audit's sake, stress test? Are you weighted 90% on growth or dividends? Even 80%, but if you're in the more immature, the less time on the portfolio, you could justify it. Are you more than 80%? 80%'s the limit. You see what I'm saying? At 80-20, you could do 80-20 growth dividend, 80 for the growth, but even then, anything above 80 now, you're starting to push the envelope. That means and then now, think about it. If you have more than 25 stocks, right? And now you're weighted 90% in one direction, that's saying something right there. What if I'm old? That's fine. I mean, even then, even if you were 70 years old and you're 80% dividends, 20% growth, I would even say, why are you at 90% dividend? You don't need that. You see what I'm saying? Usually anything above 80 is you don't need that at that point. Does that make sense? Because think about it, that 20% extra gives you wiggle room for whatever you want. You could do 10% for options, 10% for growth, 20% all growth. You could fluctuate that. So now, ask yourself this now, depending on how many points you have, look at your percentage. Chances are, the more points you got, your portfolio is going to have less stable results. And then if you have less points, you should still be positive for the most part. So, best part of all now, all of those things that we just discussed, whether you failed the audit or passed it, whether it says a lot about anything, ask yourself this now, where can I go better? You see what I'm saying? Some of you now could, now here's the next question. Here's the next question for your next, this is a follow-up, this is guidance. Any corrections that you want to make to your long-term, do you plan on selling out to correct them? Yes or no? Good. Some of you don't want to fail the first test again. So no. And this is my plan, this is my strategy. But essentially, you need to we need to offset everything. So if you're 90% growth, you need to be focusing on value with all of the future deposits until you balance it till you get 80% below in one. You see what I'm saying? If you have stocks you don't know about, you have to go buy stocks you do know. But it doesn't mean you sell the ones you don't know. Because then we are not going to violate Rule 1, because not selling is a big part of it. But now what is going to happen? Think about it. The answer to adjusting is going to lead to something. What is it going to lead to? Let's see how critical thinking here. If our strategy now to balance the portfolio will be offsetting with our future actions, it's going to cause something to happen, though. It's going to cause you to violate a rule. Or not really a rule, but it's going to violate another one thing that would have gave you a point in the earlier part. Think about it. If it depends how you do it. Not sell. We've already established. So you're not going to sell it. You may have failed this. You could have had an F or a D. Right? But you're not going to sell. But then how do we get the portfolio back to, qualifying? We're going to change the ratios, do all that, but you could do that by buying more. But what is it going to? It's going to affect one part, and everyone's overlooking this. There it is, Jamar. You might have to add more stocks. You see, now this is where digging your ass out of this hole, I will tell you right now, getting multiple stocks is not going to, think about it, if that's a rule that gets violated, if your answer is to offset by buying 10 more stocks and not selling anything, that doesn't make sense. What do you need to do? You either have to average down and build out a position, right? You have to build out a position to however it's going to get you to where you're at. Or if you are going to add any more stocks, you have to limit it. I realistically do not add more than 1 or 2. You see what I'm saying? Because then now you don't want to add 10 more stocks and now boom, now you're at 30 stocks. You still haven't built anything out. The way to balance out the growth, the companies you know, start buying more of the company you know. If you're down on it, average down on it. Go again on there. You could focus on stocks now. But then if you are going to add stocks, do not add more than 1 or 2 more from here until we get everything in balance and then let it take care of itself and then we could go from there. So, with these simple 5 questions, do you see, is it telling, I would say? Or did you guys learn something from this? And do you now, when you look at your portfolio, can you see where you could do better? Again, and the best part about all of this, it is not to highlight any failure. You are going to fuck up at one point. You may not execute perfectly. The point is you did not fuck up because you still have time, my friend. You see that? Everything is clapped, but I would be hard-pressed if you're saying you own less than 20 stocks in 2 years, more than half of them are companies you own, right? And you have an 80 to 20 max ratio on any, it would be very difficult to have 100% of everything clapped. You see what I'm saying? The market does need to, again, granted, you are looking at the market now as it is going against you. Yes or no? I mean, take a look. This last couple months here this has probably been your most least favorable quarter for the long term since we started. So think about that. The point is, and that's the big point. You do not want to make a change in the middle of pain. You see what I'm saying? The last thing you want to do is try to find a new God when you get on the plane. Oh shit, it's not raining. Let me go do the rain dance. I need to change this. No, that's why I'm saying anything moving forward, it is focusing on stabilizing what you have and not using a lot of addition. We are not trying to change too much here. Okay, when you have a plan, and especially when it's worked for you very, very well, and then it starts to not do as much, we don't want to change too many variables. You see what I'm saying? Because then we don't want to buy this stock, sell out this one, sell that, buy this. You're literally taking the cards and just throwing them up in the air. We don't want to do that. That's why small, good decisions, exactly, a tweak. That's all you need. You need to tune it up. If the music is out of note, you don't cut the string. You have to tune it. So that's that's where I'm saying little movement here. You only want to change really one thing at a time, but then use your time. But that's where I'm saying this is just a little audit coming into it because you still have time. You are not pressed right now. If you're mentally pressing yourself and feel like you need to sell and you need the money for something, that's different. But quite frankly, you don't. If you built this long term, you again answer the first question. Are you going to hold this for 10 years? Excellent. So there right now, then we have a lot of time. You're 20% the way through. That's why the biggest point is we need a good foundation. That's what we're trying to do. That's why everything I've audited you with, it is all foundational. That's why some of you may have been disappointed with me that I am not shopping around and telling you how to decorate your penthouse. And, that's why people want growth. We need the foundation. And that's what all of this is. Your ratio, the basic knowledge of the companies you're holding, your basic overall plan. You see what I'm saying? This is stuff we already know. So that being said, though, depending on your results of this, I would go through and I would not make too many new additions, but then go look at what you have and build around what you are holding. You know what I'm saying? You could easily now, with whatever you have, look at, if you're down on anything, these are opportunities to build. But now you have to really ask yourself, hey, do I know about this company? Do I like it? Is it growth or dividend? What else am I holding? So you have to use those questions to say, well, I can't justify this. And then if you are going to add something, it better meet the criteria. It better if you're too much growth, it better be value. If you're going to add a company, it better be something you want to hold for 10 years. And if you're going to add that company there, you better make sure you're not, what's it called? You got to make sure, hold on. I thought I read something. If you're going to make it, though, you want to make sure you hold that company for 10 years minimum, that you're going to like it, and that it's just overall just something that you genuinely know about. You see what I'm saying? And that's part of it. The whole idea with this is now, after this audit, after your performance, after going over all of this, you have to you do realize one thing. I could tell you something based on your audit results without ever seeing you. You've made too quick of decisions. And what I mean by that is that you did not act as if you couldn't change your mind for 10 years. Because if you notice, that's what this audit is based on. That's why if the balance goes out of whack, you're buying companies you don't know. That's why when they come down, if you do not know them how you should know them, if you do not really think, okay, if I only get to pick one or two more stocks now. See, some of you are in the doghouse. If you're failing that audit there, you could only make a very small tweak, and it better be something that you are sure about on this next move. It better go double down on something you know and love, but don't let the emotions get in. I don't care if you love EV. I'm saying that's why I know a lot of people, depending on how I word it, but you haven't used EV. You see what I'm saying? It's great. It could be growth. Guess what? You already got some in there. Anyways, that's fine. But you got to go with something that in the next 10, just don't change your mind. That's why this next pick to balance out, it has to be simple. You see what I'm saying? So we do that, we're going to be good to go. Everything is still looking up pretty well for you if you are at least still in the game. So now we got a little bit of time. You got a couple more months ahead of you. Use this to balance. See what is in your portfolio. And guess what? It might go a lot better for you. You know why? Because this is just a temporary period. It's dipping against you now. The market's acting a certain way. That's awesome, but that's why we don't want to change too much. It's already worked. But now this should highlight, let's expose the budget essentially and see where some of these holes are coming from. Ideal ratio in your low 20s, it doesn't matter. You see what I'm saying? Just don't fall, it's like a coloring book, right? I could give you a stencil right now. That's the stencil, the chair. You could paint it pink, you could paint it purple, whatever color you like. Just don't go outside of the lines. That's it. You shouldn't be 90% on anything. 80% is your max on anything, growth or dividend. See what I'm saying? Just stay within the lines. You're buying 10 companies that you don't have no shit about, that you've never used. Stay within the lines. You see what I'm saying? That's all it is. So, make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press high chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch. This is the main channel. First link for the Scream Alerts Bootcamp and Real Estate course. Follow me on Instagram at the Trading Fraternity. I'm going to go to the bathroom. How do we fix it if we bought way too many? 93% UWMC. I mean, that's your money. Yeah, I know exactly how your performance is doing. I have UMC too, but that's, I never added that to the long term for a reason. And I go big on it. That wasn't my long-term plan. And then if you bought too many stocks, you must suffer. Okay? I'm sorry. I'm sorry to sound like this is my culture. You must suffer. And what I mean by that is you can't sell them. We cannot violate rule number 1 to solve problem number 2. You see what I'm saying? So you have to hold those and and why I say that, because we don't know what's going to happen. It might change in the future. But now your future deposits now must be towards the good, the stuff that meets the criteria that you like. That's it. So let me go to the bathroom. Follow me on Instagram. Please hold. My voice is clapping. Hey, Carbo. Ba-da-ba-ba-ba. I'm in a coat. Oh, yeah. Docu Pop. Looks like a call suite. So, as, Docu, Motley full pick and option sweep. Mod spam alert. Nice, bro. You got it. Yo, are you trying to be a mod? We could use someone on the team like that. I like that. I like that. You see that? So like the mods will find the news, and then you find the mods posting the news. You see what I'm saying? I like it. Let me know if you need a job. I got you. Spencer? Spencer back? But internal affairs mod. EV Go open IPO. This, I don't know, this ticker just brings back a lot of negative feelings for something. I don't know why I feel so traumatized looking at this stock. EV Go sounds so familiar. I don't know why I feel like throwing up. It's weird. I just can't put my finger about it. You remind me of a stock that I once bought. See, I got it on a IPO at open. You would see all of the things it put me through. This is why I just can't buy you too. You remind me of a stock that I... Anchor. But you must suffer. I'm sorry. I hope that wasn't too bad. But to close out the audit, I think it's very simple. It's very, very simple. It's think about everything, and I hope you know you have time. And I really hope you guys are just wise with it and use it to your advantage and keep it slow and simple. But really, it's ARCAD. It's richest man in Babylon. You either were ignorant of the laws of wealth or you chose to ignore them. This long-term plan is very simple. At the end of the day, the question was, did you not know you could not go above 20 or 80%? Did you not know that you should half of your stocks, you should probably own them? You see what I'm saying? Go through this, and it's it shows you something. It's either you were ignorant and you didn't know, you had no idea, or you did know and you chose to ignore it. And that's why the real difference now is either getting educated or making a better decision. And that's it. And from there, you could follow it or not. I did know, and that's fine if you know. That should get you excited. Why? Because it shows you that the laws work. That's why people like laws, if you think about it. Because you know where the lines are. That's why if you follow the law with wealth, the laws to building wealth, you will get wealth. If I do this, I will get rich. It's that simple. If I don't do this, I don't know what's going to happen. It may be fleeting. It might come up and down. Spies getting clapped, yeah. Ooh, that's pretty big. Nothing's coming across the scanners right now. Wait, what? Why do I have two of the same accounts open? Ding. TLT and dollar flying. That's why. TLT should benefit some of the bigger tech ones, but we'll see. Evans, tech firms did do much more. Let me see. I don't see Fed Evans. I mean, it's pretty bad. I mean, 0.5%, almost 1% on tech. This is statistically, this was the day it didn't go up. Unless we get a crazy bounce here. But it is, I mean, that candle was a little bit freaky. It could have been bigger, but it wasn't that crazy. Evan, slightly more inflation would be bad. Biden talking taxes.
To patients, which is I recognize that each patient that I was blessed to care for is an individual, regardless of what their political affiliation or their past may be. They're an individual, and my goal was to understand what their needs and desires were, what their values were, and then to help.
I don't think that's it's. I think Biden's going to come on from that. He was already on? Yeah, this is the news briefing then. That's why it could be part of the. It wouldn't be him talking about taxes clapping the market. It was what you got yesterday, that budget. It's like I was very surprised, the budget reconciliation. So they could pretty much, if all the Democrats agree to that 3.5 trillion, it's passing, and it's all based on the past tax plans and how they plan to fund it and all that. So it is very a lift on the low. That would be it, if anything. This is why I just can't have it with easy go. More inflation. Nothing. I mean, again, it all after Powell talked, and then it looks like this was Biden speaking with the tax stuff. But again, I think anything just added to the fact that they have a loaded gun. Essentially, they have a loaded budget. Just that's it. If everybody agrees on it, you have to realize that a budget reconciliation means they could essentially pass it without approval, meaning that Republicans it doesn't even matter if they agree on it or disagree. It's just once the Democrats agree on it, it gets passed. But we're coming down again. Low ticker definitely picking up here. I mean, you're coming back down to this level. What was this? What was last Thursday? Was this the first time we saw the rates go crazy? Yeah, it's flip-flopping here again. That's why we're coming. The rates shouldn't be doing this. How is that possible? It's kind of like a unlimited money glitch right now. So until it gets patched, you just had a very unique opportunity where they had the blue wave and Democrats have swept the House and Senate and then the presidency mixed with the timing for the budget and everything else. So that's why they're pretty much, it's a budget reconciliation. They don't need to vote on anything new. They just change the current. They reconcile the already existing budget. Well, do you guys see it? Look at what I just showed you here. You see this? Like, look at this 10-day on the SPY, and then look at the bond. What do you notice? It's a simple majority. No, I mean that's not what the budget reconciliation is taking advantage of. It allows it to happen, but you have to really think it's not a traditional bill. It's not like, so that's why how it's getting operated is just different in that sense. Gym time. So, but do you see what I was just showing you there with the bonds? Look at the 10-day. It's exact opposite, but it's coming back. That's why you see this big drop. Look at the 3-day lead up. And then we started going up as the bonds brought us back to the level, right? But now it's creepy. It shouldn't be going up right now. Yeah, this looks like 20. I was going to say, I've seen this before. So I was like, when was the last time you very rarely see the bonds top out in what do you call it? You guys call it a double top? Rarely do you see it hit a top like this and then come back 3-4 days later. Kind of did it there. The Schiller PE. I'm not too sure what you're talking about. TLT, I mean, realistically, this could, if bonds keep going up after this, it could, TLT might be, this could be a flight to safety. Because that is not, it just doesn't make sense. No, it's not people believing Powell. Well, it could be because you can't have, bond yields do not go down if you have fucking 5% CPI. That's like mind-boggling. That's not like, that's like water into wine. Not really, but it doesn't make, there's something else there then that people are reacting to. But naturally, if you're saying inflation, you should not have bond yields go down. Remember when everybody was freaking out about, remember the first time you gave a shit about inflation? Yeah, you motherfuckers. You didn't give a shit about inflation until 2021. Let's be real. And then remember you started hearing it? And everybody started saying inflation. And you're like, oh my God, inflation. And Kathy Wood said inflation. You're like, oh my God, Kathy. You're like, oh my God, Kathy. You're like, oh my God, that's crazy. And then what started happening? The bonds, the yield shot up. So that whole 3 months of everybody worrying about it, then you like, oh my God, lumber. Oh my God, Bitcoin. Oh my, inflation. I can't even buy a graphics card. Oh, my used car. Used car 10 sale brought to you by Qualcomm Stadium. You know, everyone was freaking out. But that was, you see it here. This was, the bonds yields went up because that makes sense. That's natural, both expectation as well as actual data. Whether people are expecting inflation or getting the data, the yields will rise. So the fact that you are now getting your CPI double than what it was in February. Let me say that again. CPI is double what it was in February. And now the bond rates are reversed from February. That is very, so that means there's another actor, and there's possibly, I would say at this point, if it breaks out from 150, that means there's something else impacting the demand for bonds. And it means that the big money overall, the prevailing attitude is that there's not inflation because the rates wouldn't come down. That just doesn't make sense. That's why I'm saying. So again, it may not make sense, but we see what happens and we go from there. It could. It does hint economic slowdown, 100%. Of course, that's that because why? Lower rates spurs the economy. Higher rates when the economy's getting hot. People are like, and that's what was happening. Everything was shooting up, house prices, everything, beginning of the year. Rates start going higher and higher. That's heat, right? You lower rates if you think it's cooling down. They want cheap, low rates for borrowing. Why do they want cheap, low rates for borrowing when Powell gets grilled for 3 hours about why that's fueling a bubble this, bubble that. You need it for this. They don't. That's the last thing they want. They're supposed to take. That's the bad part. That's the thing, because if you think about what I said yesterday on the watch list, do you guys remember the 3 factors with Powell? He said we need employment, inflation above 2%, and we need to know inflation will stay above 2%. They know it's going to stay above 2% now. That's why everyone keeps saying, some people are saying, no, it may not be transitory. That just highlights it's going to stay high. It's already above 2.3 on the average. It's at 2.3 right now on the 12-month average. The only thing there that's missing is the employment number. It may have hit expectations, but you're still down like 7 to 10 million pre-pandemic. So if you think about it, inflation is higher pre-pandemic, right? And then it's going to stay there for the next, at least till 2022. But the jobs, you still have people not going back to work. So that is the last metric he needs. But like Eli just said, they are supposed to take away the punch bowl and taper before it gets crazy. So think about what's happening now. If we run into any situation, oh man, you have 2 of 3 metrics met. You already have this inflation. But if employment doesn't go up and now the rates turn or China or anything and the market starts dipping and now they need to spur more stuff, they're really about to get put into a corner. China snitch, not quite yet. It's part and part China, but not after one reserve requirement. It probably wouldn't do it too much, but we have a lot going on here, and we have earnings too. So I wouldn't. At the end of the day, we will see. I think you're about to get a fucked up earnings. I think the Grim Reaper is about to show his face this earnings. I was saying it more last year, but because that would be the only thing I could think of where big money is piling into bonds and protection. If somebody knows, a Grim Reaper, that's not as bad as it sounds. What I'm saying is that one of your mega cap stocks might get a what's it called? They will get a bad earnings, and then they'll drop like 10, 15%, but not the whole market, just one individual. That's what the Grim Reaper is. It's a failed earnings, essentially. Are you hella edgy right now? No, not at all. I mean, my plan is, I've said it. I think I've been trying to make it clear, and if I can't make it clearer, I am preparing for, by the time we see the Fed correlate with China, or if China makes another action, that is when I'll get edgy. Until then, I'm still fairly, I just think it's just going to be the same bullshit we've been seeing. He said, nah, man, literally the Grim Reaper going to be on the earnings call. That's crazy. How you get on the board of directors? Long time, do you want more? Brooklyn Mall. I think I just closed it because I had to restart my other thing. I don't really want to log into it again. Grim Reaper had to backstab people to get here. All the good news has been heard, including infra. The bad news is to come out yet. Market getting ready, big tech breakups. Yeah, and I mean August after earnings though. That's the thing. You don't underestimate the earnings move, I would say. And you're reacting to earnings today too. Earnings are coming in and estimates are coming in too. That's where some stuff could be changing. Would the Fed do an emergency rate increase? No, it wouldn't. It would hurt right now. That would be the worst. Emergency rate cut would not it would not cause any positive reaction. SPY going down again. Just take us back here. This is where all the bond shit went crazy. Yeah. But that's still weird. The bonds are too high. Like the yield are too low. TLT is too high. Very, very, very fascinating. Let's see what's about to happen next, okay? Psaki, the majority of price hikes to Biden are expected to be temporary. We should listen to Psaki. I've tried, but everything is red. I know, but it's the interpretation of TLT. It's when you it's what the bonds are like. Again, why the people with all of the money freaking out? But it's not like a freak out just yet. Like somebody's moving. It's either the Fed or it's somebody or a collective group. Like that's where I'm saying that TLT is just, and that's why please take everything with a grain of salt. I mean, this is like a little mini anomaly, more or less. Because again, I sold TLT calls. I'm telling you, it was very, after that little freak out there, I was like, okay, that's going to, rates operate in a way with how they bottom out and top out instead of range. And it's still in there, but I'm very, after 2 days of Powell and for all of that to go up, it's interesting. Yeah, like exactly. Why would anybody buy a bond right now, especially after the biggest rally in 20 years? And then the CPI highlights the highest inflation you've seen. Could be the Fed is already a buyer. They're part of that. But that's why it's moving like it is, because the Fed is the baseline. And there's someone, it might go back to it could be the shorts. It might be a short squeeze, honestly. Low key. I thought that was ruled out the other day, but fair enough. It could just be a lot of shorts on there. Is that hinting recovery? No, it's reverse. Higher rates says recovery, believe it or not. Because higher rates means it's heating up. The money's not freely floating around. Yeah, Joshua was talking about that, Mr. Moore. I think your short squeeze theory might come back here. That's the only, again, and everything is just going to be speculation until we get, and then next week, like I'm saying, by tomorrow though, I also do not doubt that we could blow all of this. This could all blow over by tomorrow. Lots of people getting out of bonds right now. Well, that's the point. If people are getting out of bonds right now, it wouldn't look like this. So TLT going up means people are buying into bonds. The yields are going down. So that means there's higher demand. That's why TLT goes up. This is showing you TLT goes up, people are buying bonds. TLT goes down, people are selling their bonds and buying stocks or real estate or anything else. Oh, shit. Maybe. Low key, it could be real estate. I think that's the only thing tied to bonds that we're ignoring. So we'll find out in a couple days. It could be related to real estate. Yeah, the lumber is dropped because, I mean, think about it. I'm trying to think. I'm like, what else would they be, like, what would they be buying? You know, or what if you stopped, that's what was happening in the first 3 months. Why were, you know, think about it. If I told you that in the beginning of the year, people were taking as much cash as they could, selling out of bonds and buying real estate, would you believe that? You see what I'm saying? That would make a lot of sense. So then if you either sold houses or now, depending on whatever the situation is, why would that money be coming back into bonds? And then inventory has been picking up a little bit. It could be related to real estate. And they keep talking about housing bubble, something like that, but that's the only mention that's directly tied to bonds, but it's not. That's the only thing I'm missing from trying to figure this out. But again, we're very premature. So anything I'm talking about right now, I'm just reacting to this counterintuitive move. That's all. I'm trying to see what it is to get some. I'm trying to look for clues right now, but I'm not really looking at 100%. It's not like, okay, this is here, this is that, this is going to happen. I'm just trying to figure out. I didn't really care about it as much here because, again, it was already, we were waiting for Powell. We had the data coming in, all of that. There was catalyst behind it. So the only other things here that need to be factored in is earnings. We haven't had that yet. We're starting it. You have Powell in 2 weeks, and then there's the real estate market, and then commodities, gold, silver, oil. Yes, this is a thought experiment, exactly. So I hope none of you freak out or go too crazy or buy something or, you know, we're just talking about this right now. It's that confusion. That's what I've been saying since the beginning of the week. Absolute confusion. And I agree. I'm showing you right, and this is why I'm trying to run through this to see, okay, what is there? Because you have market functions operating very weird in the last couple weeks, or especially this last week. Let's see. By MBSs, I feel like I'm missing something to grasp it. The Fed, so you know how I told you I would sell them, right? I would go fund a loan and then we sell it to a hedge fund. So to support the real estate market, you could sell to the Fed. So depending on the type of loan and everything, you could sell the mortgage bond to the Fed. So pretty much the Fed is a backstop. They're literally saying, hey, we'll buy $30 billion of mortgages a month. So you fund the loan. Once you have it funded, once it's all out there, you put out your money, collect your fee, do whatever you want to do there, and then they'll be a guaranteed buyer. So it's like if I can't sell it to a hedge fund, I can sell it to Jerome. You see? So now it's making sure that the back end of real estate financing is always on the gas. So that's why as mortgages are getting funded, you know there's going to be a buyer for most people. But it has to meet certain underwriting, Dodd-Frank, all of that. So that's what they're doing. They're making sure it meets the standards. They fund the loan. But then you have a big bank with the Fed willing to buy those mortgages. And then the Fed just holds them. So pretty much Jerome Powell owns probably about like 30 to 40%, maybe more, of all of the mortgages in the United States. The losses on the MBS, they don't lose on them. You don't lose on an MBS. You have to think about it. The Fed is collecting interest on you living in a house. Remember, you fund that loan at 4%, you're paying a company who's collecting it. You're getting interest. Whoever bought the loan, whoever bought that MBS, it's like a bond. It's literally a bond. It's a 30-year bond, but instead of backed by the full faith and credit of the United States, it is backed by a property. Mortgage-backed security. MBS. Yes, I'm using Jerome owning it as a joke. It's the Federal Reserve. You didn't catch on to that one. That's why people think the real estate market is up, because the Fed is buying. It's not as if the Fed is going out and buying them, but the fact that the Fed is willing to offer that demand for bonds, right, MBS, more people are going to keep funding and buying and buying and buying, and then the rates are really low. So it's fueling demand. You see what I'm saying? You are just, it's gas. That's what they're not saying. It's not that the Fed is fueling the real estate bubble. They are just throwing gasoline on the flame. There's already a little spark, right? So then now all it takes is a couple smart people who are greedy, and then they're just like, hey, let's go buy fucking 10 billion. Let's go buy all these houses right now. And then you have a guy who works at the bank. He's saying, okay, you buy the houses, I'll fund the loan. We know we already have a buyer. So it could just spur that demand, and it's gasoline. Walmart getting a little pop. Today marks the first year with the cult. Blessed to have found this in my life. Thank you for everything you do. Josh Chester, the son. Sipping Goose, I love you, bro. Great seeing that name every day for a year. Amen. Hard. Amen. Real estate with rates lower however, is the best lowest risk asset. Yes, and that's why. So it's not as if some people will criticize the Fed, but the Fed is making a very good investment. I would again, it's not to go and buy mortgages, buy real estate or an MBS, especially under today and the standards. I would take it. It's one of the best investments right now, and it is not moved. You're telling me you're at 2005 highs. That don't make any sense. Of comparing it to what else you could have bought. So could regular people purchase mortgage-backed securities? Yes, if you wanted to. You could find a way. It's not easily traded. It's not like there's no mortgage-backed security ticker. You can't purchase it like a bond in that sense. It takes a. I'm pretty sure. I don't know if it's OTC. I think it might be OTC. But you can. A normal person, if you had the money, you could buy it. But it's big money, right? You can't buy a mortgage-backed security without buying it. So if that house is a $100,000 loan, you need $100,000. SPY's coming down again. Are we going to do PHILO? I have a PHILO. I want to. I'm kind of debating because I know if I break out the PHILO, I could stop the market from dropping. But I want the market to move naturally so I could determine what's happening with the bonds. So let's give it. So we still got time. Yes, there's no fractional MBSs. We want the volatility. Down 0.7. NASDAQ down over 1. I don't think the Dow Jones has fell over 1% in like 3 months. Fantasy sports license, DraftKings. It's selling off heavy, and you're getting a news pop. So that's interesting. So that one could be watch that one. Canada to allows cruise ships from November. Man, why are you going to go on a cruise in November? It's going to be cold. Lending Tip said you could buy his mortgages if you like. You just need the cash. And we've had that. I've had that before. I've had one guy, I had a friend of mine, and he just he was really rich, and he wanted to make an investment, and he would buy our loans for some time. He had an extra couple million laying around. I know that sounds weird, but this dude, he's balling, and he would buy the loan. He bought the loans for I think a year. He would just allocate some money every year, and he would just buy houses by buying the MBS. So I could sell you some if you want to buy them. You just need the cash. We'll fund the loan, and then you buy and then hold it. It's honestly the best way to own real estate. You have to think about it. You get to own. You're the one on the title, or you're the one on the deed. Again, there's the mortgage on the house. So you essentially have first position on that property, right? You're collecting minimum 4%, and then you don't pay any taxes. You don't have to maintain the property, and you don't have to do anything. Get a guaranteed 4% on hundreds of thousands, millions of dollars, and it's backed by the house. So if anything happened, you would get the home. So it's literally the best way to get a high yield with safety without ever doing anything. You literally don't have to maintain the property. Sounds familiar. They're not owned by strippers. No, even then, even if it doesn't matter, they're putting 20% down. So $1 million house, the person puts down $200K, right? You're funding $800. You're collecting 4% on that $800. After 1 year, 2 years, the house price goes up. Or even if it comes down, even if you have to foreclose on it, you don't lose anything below $800, and then even then, you could just take the house and hold it. Why no tax? Yeah, no. You get taxed on the gain, but you're not getting taxed on property. So then you could qualify it differently, again, with your strategy, and then you could get other things. You don't get the depreciation the same way as real estate, but you don't have to pay property taxes. So think about it. The person who buys that home, who's paying the mortgage, they're paying for insurance on the house, they're paying property taxes, and they're maintaining it. That's all the things that you are obligated to do if you own the property. So you get to be first position on the house. You are the first one on the title, and they manage and take care of all of it. That's it. If they pay off the house, you don't get it. But then again, you get you'll triple your money over 30 years. You guys, you know that, right? So if anything defaults, you keep the house, and you don't have to pay for any of that other stuff. But now let's see on $300,000. Why not? So $300,000. What's going to happen? They pay you $60,000. You fund the $240,000. So if they pay it, you're collecting that 4% every year. But then look what happens over 30 years. If they pay off the mortgage and keep the house, in that time frame, you've collected back $238,000, and then you make another $113,000 in interest. So you loaned out $260,000, $240,000. And you collect back $350,000? That's actually awful. No, you should be getting 4%. Yeah, there you go. Yeah, see, this time you'll walk away with you'll walk away with like 402, 410. So you put down $260, collect interest, don't need to manage it. And then if they do pay it off in 30 years, you're walking away with 400 G's. You get all your money back plus your 100% on your initial investment on 6-7 figures. Can you buy your own mortgage-backed security? It's frivolous, pointless. You would own it. That's just buying a house cash. You see what I'm saying? Because either way, the owner would have to maintain the property. So if you own it, then There you go. You're still, it's different. And if they don't keep the house, if they sell it, right? Let's say just like you get your money back. That's it. So if they own it for a year, you get the fees, you get the interest rate for a year, and then if they sell it for $400,000, they pay you back what's owed on the mortgage, and then that's it. They move on. And then that's it. You make money the longer they hold it, the interest. But you see what I'm saying? But if that's the beauty of it. It gives the people that's what you could do. That's why I could go buy a house. Somebody will buy my MBS if I get a loan on it. I can hold it for 2 years. I only paid $5-10 grand in interest, maybe less, and then you could write off all the interest. So it works for both parties. You could either make a lot of money being the bank, or if you know how to hustle the bank, you're able to get away with both. You see, because again, you could hold it for 2 years, pay a little bit of interest, house goes up in value, you use it to flip it, you use it to leverage the other money, whatever you want to do, then you could pay off that loan. That's it. You clear the title, they get their money back, no more obligation. You take the profit, do whatever you want with it. Unless you get clapped with inflation. Fun fact, inflation actually helps you if you have debt. Momentum gauges, -201, +8. I thought it was backed by the house. It is. Are you speaking on being the, which side are you on now? Are you saying if you sold the mortgage-backed security? If you buy the mortgage-backed security, it's backed by the house. So that if they fail to pay that mortgage and they don't pay you at all, you can foreclose and take the house. You are the first one on the position. But if they want to sell the house, all they have to do is pay you back the money that you got loaned. So if you loaned, if they borrowed $250 and they want to sell it, they have to pay you back $250,000. So if they sell the house for $300, they're going to get back $300 grand. $250 goes to the bank, whoever holds the note, and then the other $50 goes to the owner. How does it help you if you have debt? Because your debt is staying the same. So if prices go up on everything and prices increase and money is flowing through the system and there's a bigger supply, right, and it's easier to get your hands on dollars, then the money supply and value of money and prices and goods are changing, but your debt is fixed. So if you borrow $200,000 today, and then 5 years from now, there's 100% inflation, and everything costs double. Food, gasoline's at $50 a gallon, anything of that nature, that $200 grand you borrowed on your house, your payment stays the same. That's why people think you're in a real estate bubble right now. You're not. Because anybody who saw their house balloon in value, their payment has stayed the same while everything else has went up in value. Oh, I got muted. But I was saying, if the payments don't go down with interest. Bro, SPY's getting clapped right now. I'm even getting clapped. Whew. This is a clapping. Ooh. Woo. No, it's a bad clap. You're getting, because now a lot of things, that's so crazy to think about, because now you already have the growth. This is, I think, some of the bigger caps coming down. Snap below 60. That's not. It could be a lot worse. It could be a lot worse. It's good. Get the motion of the ocean. It's good. Vibe with it. Just vibe with it. Don't worry. I like it. We got a good year. What a start to the next quarter. It's slow though. Slow and steady. Could be a lot worse. Fastly on the low. Or no, that's F45. E. No, I'm making on some old puts and other plays like that. They're coming up a little bit, but it's not. It's overshadowed by the equity getting clapped. Everything is getting clapped. No fucking way. The bond move. Powell is Republican? I think so. I don't think he really, he doesn't really identify too hard with anyone. But he is, I'm pretty sure prior to his Fed chair, he was there. Yeah, he's not allowed to identify, but I think prior to his chair position, he aligned more Republican. Obviously, he's Republican. I have tinfoil. I don't know. It's political tinfoil. Some of you might get mad. It's not my opinion. It's something I heard. Can I share with you a story? Can I give you guys something to discuss? You know, you could fight with each other. Just don't fight with me. That's all, you know what I'm saying? That's all. I would love, I could give you I could distract you a little bit here with the market, but y'all just don't fight with me. Y'all fight with each other. That's fine. I'm not trying to beef. I'm just telling, I'm a news source here to just, get it to you. So, this is tinfoil that I've heard. Some people have said that if the Cuba situation, why people aren't really responding to it, and why some, again, they've already issued a warning telling Cuban people not to come here. And, just the reaction you would think from immigration and all of that. But what some people have said is that they don't want to help the Cubans, because if they came into America, who do you think they would vote for in 4 years? That's what they were saying. They're like, who do you think they're gonna vote for? So I was like, wow, that's an interesting, because you're not gonna leave a communist country and then vote for anything like it. Cuban, my family is red. It is. I mean, it is whatever it is. I mean, my personal opinion, I'm just surprised that it's not being. That genuinely shocked me. Because I was like, man, I feel like this would have been the fuel for the flame that everybody in 2021, with everybody getting, that's a civil rights, come on. I really thought everybody, right? I didn't even see the politics of this whole situation. I was just like, that's sad, that's why it's crazy. But yeah, that's the tinfoil. That's the tin. That's the word on the street. It's not that Cuba belongs to Russia. Yes, 100%. That's part of the issue. Because, it's not, you're not getting a protest in Cuba right now. Like, do you realize every single person there is unarmed? They are funded and backed by the Russian military. So whoever's, like, you're seeing a protest you will never witness in Cuba. You're not going to see it pop off like you've seen. They're not, like, what, maybe they could light stuff on fire, but it's every single person there is unarmed. Musk says Cybertruck might flop. What? He said it might flop because it's a new concept. This motherfucker. This motherfucker, man. Yeah, the tweet. Here it is. To be frank, there's always some chance that Cybertruck will flop because it's so unlike anything else. I don't care. I love it so much, even if others don't. Other trucks look like copies of the same thing, but Cybertruck looks like it was made by aliens from the future. Is Ford moving on that? No, I mean, the market is sedated. It's like it's doing something right now. Yeah, that tweet wasn't that bad, honestly. It comes off a lot. The summary of the tweet sounds awful. How come he didn't have this idea when he bought Bitcoin? I don't get it. He wasn't like, okay, I like this concept. I wonder what the environmental, and I was like, he thought that 4 weeks later after making a couple million, 100 million or so. I was like, why? It's good. I don't know. I'm just, Elon, yeah, he's a good guy. Good guy. He seems very in tune with this. He seems like he thought this one through. That's a critical thinking on his part. That's why I'm like, wow, he didn't do that with Bitcoin. News will run with that for the next month. Oh, yeah. Oh, wait, when are the Olympics? Gymnast Simone Biles, she's arrived at Tokyo. That could be part of it, too. I don't know. Because remember, we were freaking out last week on the Olympic announcement that nobody will be able to attend. Yeah, that was actually a pretty good marketing play on Elon. BBIG popping. Think about it. You're right. For the next month now, everybody's going to talk about the Cybertruck because of that tweet. I say W. Actually, I think that's a smarter tweet. It was realistic, said the right way, sounds bad and good. A few buzzwords. And then he said, I like how it's designed. He said it's designed by aliens. That was actually a pretty good tweet. Yeah. And he said it the right way. Like, he didn't just say, oh, I think it's too high. It's this or that. He literally just was able to say, I think it's going to flop because it's so unlike everything and it's a new concept. That comes off. That's a $2 million tweet right there. That's a good one for business. Never thought I'd hear that tweet was good for business. Again, in the I hope you know, too, I would be the first one to tell you Elon's fucked up. So it is a good tweet. Again, the stock didn't react too much, and then when you look at it, and then kind of, everyone's going to talk about that for a while. So, and it wasn't too, shock. I thought it was going to be bad when I first read, when Hits posted that. He's always been good at getting free advertising. Well, yes and no. It depends. That's what I'm saying. If it's more, what's the word? If it lacks discretion, it's not good. You will get that. He gets the free advertising, but sometimes it comes at a pretty big cost. That's where, he's not spending dollars, but, what he did with Bitcoin cost him a lot. A lot of money. Again, think about it. You went, lending tips went from Elon fanboy to fuck this dude. You should have. You know how many people I saw talking at the supercharger about the Tesla? I haven't drove my Tesla since. But I think it's the discretion. Again, fake buyout, stuff like that. That's where, it comes with costs. But that one, he was able to not hurt the stock, say the car is unique, all of that. It did pretty good. Did he buy the car before the stock? Yeah. Cybertruck price is too high. Tweet will make people feel like losers for buying generic-looking trucks. Honestly, I don't think the guys with F-350s are even on Twitter. I don't think they might not get it. I think it's gonna get the kids on the fence who are like, what car should I get? Well, I don't know. The guy, man's like Luke Combs in an F-350. He's not. He don't give a shit. Yeah, you remember Ram 3500? Yeah, he ain't getting rid of that. If it ain't diesel, I don't want it. Okay, let me go to the bathroom. I'll be right back. Make sure you're subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press high chat. X out the chat. Hit the thumbs up button. We appreciate you. Smile today. Drop your shoulders. Follow me on Instagram at the trading. That's how you're supposed to do that in that order. Smile, drop your shoulders, relax, and pull out your phone and follow me on Instagram. Just like that. Honestly, I don't even know why I tell you to follow me on Instagram. I don't even use that shit. Honestly. I had a sad revelation. I genuinely like TikTok more than Instagram now. Because that's it. Instagram is like, there's people and like pictures and like it's the interaction. Like TikTok just gives me random shit that I could just watch and then that's it. It has discovery. I just watch random shit and then that's it. And then I'm just like, okay. As a consumer, It just gives it's just so much. It just gets straight to the point quickly. That's all. And it shows me just a random, it's a random news channel with a bunch of just random stupid shit. Reddit's cool. Reddit's too, I like Reddit a lot, but I don't like interacting on Reddit in a way. Everybody is just very pretentious, I feel like. But Reddit is the OG though. I value Reddit and respect it highly. I know. If you're like overly Reddit, it's just like TikTok. If you do too much TikTok, it's like nah G. But like then the same thing. Reddit is like some people on there get really, really aggressive. Or like it's all very what's the word? Like just pretentious. Reddit reminds me of San Francisco. That's it. I like Reddit more than San Francisco. But Reddit is just like that's the same vibe. Pretentious is definitely the word. Pretentious. My sister loves Reddit. All right, let me go to the bathroom. I'll be right back. Oh, my bad. I forgot the side bowl. Oh, we out here. Should I do it to him? We could do it to him. I was going to read you something. I'm going to save it for you. Should we? If y'all want it, we could do it. I don't want to make anybody uncomfortable. You know what I'm saying? That's good. Some of y'all follow me on Instagram right there. I see you. Now you may unfollow me after this next segment. I don't know. It's a good one. Do you want to hear it? It's an intense one, honestly. It's like intense and not intense. How did you like yesterday's PHILO? Did y'all feel yesterday's PHILO? What's this one about? I could tell you, and then you could tell me if you want me to do it or not. Oh, you liked it? Are you sure? Are you sure? I'm making sure. I feel them all the time. That's why I got to make sure, because it connects with me. I want to make sure you are on the same page. No, I did not. There you go. I appreciate that. That's good. That's what I'm saying. Every different strokes. So today, if we did do it right now, it would be about being chosen. Ooh. I don't know if you want it. It could be a little intense. I don't know. Does that sound like something you're interested in? Sounds very culty. Oh, yeah? Is that a good one? Ooh. Blue fake, baby. Ooh. Like 144,000 chosen. Very culty. Very culty. Oh, Diddy vibe. Oh. Bro, you have to hear Mustafa do it. You have to hear Mustafa do it, man. Hold on. I think my phone's going to die. Damn it, my phone's going to die. Mustafa, answer your phone. Hold on. Answer your phone. I just want to hear it. I just want to hear it. Go. Let me. Just do it. Just do it, please. I need to hear it. Go. Hurry up. My phone's going to die. Take a deep breath. You got this. We're about to get... I already sent PHILO alerts. Hurry up. Oh, he's blushing.
I can't even do it now because you're making me laugh. I'll call me just to do a blue face impression.
Sorry, I'm hanging up on this guy. He's sounding like a chick on the phone. Stop! There, you're making me laugh. Stop. No, stop. 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 It's just, I can't do it. Stop. Oh. Oh. All right. Nike Pop. Yeah, a little bit. So, ladies and gentlemen, boys and girls, it is now time for your PHILO. A little bit late here. As you can see, the market chilled out. We got a little bit of what we were looking for. But I got a good one for you. I encourage you to listen. I don't care what you really believe. Because this is for everybody. Like everybody. When I say you are chosen, I really think everybody is chosen for a specific purpose. And a lot of people may think I'm going to be speaking religious and this and that, but this is philosophy, I want you to see every side of the coin with it. And every single person in here is chosen for something. So you may, honestly, if you don't vibe with this, you were probably chosen not to vibe with this just as equally as somebody may have been chosen to vibe with it. Oh, y'all don't feel me. That's how we're starting. Do you feel that? Do you get that? Did you hear what I just said? Think about it. Oh, you got a little bit quiet there. Does that make sense? Oh, I believe. This is the thought I had. That for everybody chosen at something, even chosen good, there's an equality or opposite of being chosen, but in its same right. Well, let me explain it a little bit to you. So, oh man, my phone is going to get clapped. No. Oh wait, I have this written down. Damn. So, what I'm really going to talk about here, this sucks. I need a, what's it called? We got to... I wrote down something, but my phone's going to get clapped. Plug it in. I don't want to go plug it in. I don't want anybody to... That's it. This is prepared. No. I write down like bullet points of stuff, and then I just go. Then I just go. That's it. It's very, very simple. Yeah, man, I don't got a phone charger. But the point of being chosen. So really what it comes down to, I do believe all of you are chosen. And when we speak on some stuff, some of you are chosen in the spiritual aspect. I really believe so. Honestly, if you vibe with certain concepts, do you guys realize that? Like when you say certain things, like when I say God, when I say faith, when I say attitude, you become what you think about. Do you realize not everybody vibes with that? Like, think about that for a second. That is what it is about being chosen, honestly. Like, for real. Spiritual stuff in general, and there's a lot of stuff in this world. I mean, it really applies to some things. We could be talking about math, dude. We could be talking about sports. You could be talking about finances. Everybody is chosen at something to a degree. It's like, dude, does the math do you get it? Some of you look at numbers and you're chosen. Why? It really just, you understand it. That's it. You picked up a book on math. You started getting that pencil, calculus. It's just that you were chosen. Like, think about it. Some of you picked up a basketball. Some of you started playing sports, football. That's it. You knew you get that ball and run. You were chosen. Same thing with stocks. Some of you got it instantly. So same thing even with spiritual concepts. So think about the concept here. It is biblical to a degree. This same concept backtracks even back to Jesus. That's why he said, you are my followers, you are chosen. Because not everybody was chosen. At that time, a lot of, like, even if you look at ancient mythology, gods were gods. You knew who they were. If a man was walking around and it was a god, there was no question about being God. That's one thing that's very interesting about the story of Jesus. Not everybody unanimously agreed. They just literally, they were confused. And that's what he would even say. No, not everyone knew who he was. And few actually cared. But for some people, it clicked. That was it. They just saw this dude and it clicked. They're like, whoa, I feel that. Some of you to this day, you see something, you said something clicks with you. So, you're chosen. Honestly, I hope some of you like this. You should feel good in every aspect. You were chosen, some of you for different things than others. And that's the big point I want to talk about today, because I hope really this doesn't go over everybody's head, because this is for everybody. I hope your personal opinion, I hope you're feeling, just because I said the J word, I'm a Jesus, oh my gosh. No, this is literally for everybody. To be frankly with you, just because you don't get, God, or you don't recognize that, you may have not been chosen to ever understand God or spiritual shit. You know that? I'm sorry, I believe that. Some of you will never know. You were not chosen for that. However, you were probably chosen to understand something in that same equal capacity. Like, if I wasn't chosen, I would say, to understand what I understand, I would have probably been a really good atheist. Think about that. Do you see what? Or maybe I would have been a worse atheist. I would have probably been a shitty atheist. Or I could have been a very good one. I'm a very analytical person. I really do. I question a lot of things. I like to hypothesize. Maybe I would have been chosen to understand that, but a little better. Do you see what I'm saying? Some of you may have been chosen equally, your capacity of what you may not understand something in this area, but in a whole nother area, there is an equivalency. Just as much as I know about God, you probably are the same equivalent to not knowing God. And that's okay. You were chosen for that. You see what I'm saying? So it may be equal, opposite. You could have been to understand numbers, whatever it may have been. But it is just something to just realize this fact. And that's why I'm saying this is for everybody. You are chosen for something. Oh, come on. See, this is where some people won't feel me on this. That's why it's even funny. Some people may not even be chosen to accept that message. Or how you view positivity, how you view development, to understand money. Like, honestly, I feel I was chosen. It's ironic that I told you this story earlier. I don't know how we got into it. And I'm telling you, yeah, this is like, why do you think I know what I know? I had a reason, but I do think I was chosen to, I don't know why, when I open up a financial book, it makes sense to me. See what I'm saying? Same thing for some of you. Like I said, you pick it up. Some of you, it's a different language. But some of you, you got it instantly. Have you ever thought about that? Come on. Why did some of you get the long term? Oh, y'all don't feel me. Y'all don't feel me. Like, imagine watching that video the first time. Then you come in here to the chat. Have you ever noticed that? Like, for real. Like, think about why, were you ever in the chat, and some of you got your long term right away. You didn't hesitate. It clicked with you. But then what happened? You would notice other Chads would be like, oh, I just started today. And there's nothing. Do you see what I'm saying? Think about what I just said. There's nothing wrong with when you started. But honestly, I wish everybody starts as early as possible. But that's just not the reality. You were chosen at a different time. Some of you never in general. Or maybe you did it, but you never really understood it the same way. But the point is, you were chosen for something. So really, I don't know what I'm trying to tell you with this. I really don't. It got me hyped and excited, and it gave me a little bit more clarity to understand myself and other people. And it's a very positive one to be able to love everybody too and realize that everyone is different from you. And you all have a different path, but more so a different special thing that you were chosen for. And I hope honestly, one of the big things I don't want to be missed, like I'm saying, is that I would hate for somebody, just because they don't believe in God, feel like they weren't chosen. Because that's not what I'm saying. I'm actually saying the opposite. Even in not choosing to believe, you were chosen to be that. And you could say there's no free will, and you could say it's all like this, but that's not what I'm saying. I'm saying you all were given a certain gift. Something clicks with you or it doesn't. So my question is, how are you paying attention to that? So really what I'm asking is, what have you been chosen for? Because I really think everybody in here has a purpose. It would contradict a lot of my belief if that wasn't true. And even some people's purpose is not to be too purposeful, believe it or not. Who am I to question what the pot maker has made? I'm just the pot. So, really, coming into Friday, coming into the weekend, I will ask you that. What were you chosen for? And there is no limit on this. Do you realize what I said? It's for anything. Yeah, you may be chosen for multiple things. And when you realize what all those multiple, that's what I'm saying, just think about it. Exactly, that's beautiful. It's exactly what I want. Just think about it. And think about all the things that click with you. And the stuff that didn't click with you. You might find an overall pattern. Yeah, CCL, Little Pop. I was chosen to be here with the call. Amen. But guess what? Some people were chosen just to be here. But it doesn't mean everybody was chosen to understand it. Some people, they understand what I'm dropping sometimes. You get it. Some people, a fucking 2-hour analysis on TLT boils down to what's the play. It's a big difference. And yes, on the same respect, you are all chosen for something. You will find that pattern, but on the total opposite, you were just as equally unchosen for something else. And that's the key to kind of understanding it. You were chosen and guided in a weird way with your talents and natural gifts that you just have. You didn't realize it. I hope that's why I want you to think about it. Because you could have been something else, but it would have been different. This is a really weird concept. Like I'm saying, like I'm trying to imagine myself, and I see it. I was like, would I have been a better or a worse atheist? That's literally what I was thinking about. Because I'm saying, why? Okay, I get some things. And then I even realized maybe I wasn't even chosen enough. I was only chosen enough to understand a small sliver of what I think I know about God. Because I know there's some people more gifted. I've talked to some people spiritually. I've listened to some people, and they get it. I'm like, well, that's a different level. And that's why, too, before you think you are the only one chosen, no. Because there was a literal opposite of you that exists in some way. Do you realize that? So just as much as I get stocks and helping people and God, there is a version of me essentially out there somewhere in the world that was chosen to the exact same capacity, but the exact opposite. It's a weird concept. That's what I'm saying. You could get real deep with it. It is weird, but what is it? It did bring out something from me that I appreciated. At least I did get chosen for this and what it was. And that's why I hope some of you don't ever underestimate what you were chosen for. I'm trying to get rid of this. Again, that pretentiousness, that attitude, where some people, I'm chosen. Some people think they're chosen, but they do not look at the other side. See what I'm saying? They think they're chosen just because they have God and a cross and they go to church, so they're chosen. No. That's not what it is. Because some people, some people are only chosen to understand the surface. And vice versa. Yeah, it's a chosen distribution. Amen. Exactly. That you said it perfectly. Because that's what I'm saying it comes down to. And I hope you think about that. And where your chosenness was distributed. And how it was. And the opposite. But realistically, I hope you really just think about what you were chosen for. Because you will find your purpose within there. And I think a lot of people haven't tapped into it and have taken for granted what you naturally are chosen for. Dude, why do you get it? Like, come on. Why do you understand the numbers? Why when I say God is good, God's plan, amor fati, you become what you think about? Why does that click for you? Saving money, why did that click? Shit, drugs, the stuff you like to do, anything. Think about why. And have you realized what the purpose is in with that? And honestly, some of you be like, well, wait, what if I was chosen to do drugs? Like, that drugs click with me. They're like, how would I find my purpose in that? That's why I'm saying, think about it. It might go deeper than you think. You have an experience that's different than a lot of people. And you've probably seen something that a lot of people haven't seen. And it probably gave you something very unique. But this is what I'm saying. I was chosen to lose. Look at that. Look at that. Look at the chat. I was chosen to lose money. And then a random person right under it says I was chosen to take L's in the market. Think about that. That's very ironic that you both typed out the same thing at the same exact time. Interesting. So where's the opposite now? Great. If you were chosen to take an L, that naturally, in a zero-sum game like the stock market, that means somebody was chosen to win. But they may have been chosen to win in stocks, but they lost in everything else, and you might be a lot better at other things. And there it is. And whatever you're focusing on and thinking on, it says a lot. And then let me ask you this. How many of you are wasting time on shit you weren't chosen for? Sorry. I wasn't supposed to say that one. Because I know how sensitive people could get. Some people could be a certain way. But honestly, I just want you to think about your damn purpose. This is what I've said many times. The segment, everything. Are you focusing on what? But you have a gift. And I just genuinely think a lot of people are taking it for granted what they've been chosen for. And they're missing it. And then I think some people are walking around feeling like they're not chosen just because they think chosen is some stupid religious concept. False. There is a chosen evil for the chosen good that has been produced in the world. For everything has equal and opposite reaction. Why wouldn't it apply here? Some of you are too apprehensive to accept that you are chosen. You will say, oh, it's too religious. I don't believe this. I've never done this. I only lose. You see what I'm saying? That's a lie. You may not have been chosen for something, but you were definitely, there's something you were chosen for. Are you paying attention? Again, are you slowing down? Are you listening? That's what it's coming down to. So, I don't know what to tell you. I think it's exciting and kind of a little bit scary. Because some of y'all are going to have to think about some really deep shit. Some of you are going to look left and right. And you're going to have to face some ugly truths. What were you chosen for? What were you not chosen for? Have you been living up to what you've been chosen to or not? Why are you ignoring what you're good at? So, think about it. And even just really, really think about it. And this is why, too. Be careful. If you were chosen, and everybody, not if, everybody is chosen. The real question is, what have you been chosen for? What is the danger? The danger is conformity. The danger is looking at somebody else. That's why y'all trying to be like, I want to be chosen what he was chosen for. Why? You didn't get it. It doesn't make sense. Honestly, I wasn't chosen to see the world in a certain way. I see it a different way. I know there's an opposite of it, but that's just not what happened. Why you want to look like that dude? Why you want your life to be like that? When you definitely understand something way different, you don't know anything about that person. When you look at the videos, you go on TikTok, you go on Instagram, why? Think about it. That's the problem people are having. They're throwing away what they're chosen for, ignoring what they're good at, ignoring what they've been chosen for, and they are choosing something that they don't get. So I really want you to just think about what you have and what you've been chosen for. And I tell you, I rebuke it. I encourage you to fight off anything telling you you are not chosen. Because that is society, that's social, that's people trying to pull you from left to right, religious, non-religious. No. Everybody was chosen for something. That's to everybody. You can see it. That's why we all like certain things and don't like certain things. That's why there's so many occupations, professions, hobbies, talents, artists. Because everybody in this world was chosen. Some of them, it could be, I don't know the extent. As much as it could be deep, it could be shallow. But the point is, have you thought about it? And I encourage you don't shy away from this thought for whatever is the quick thing that comes to your mind and says, nah, I'm not chosen. I'm not this. Why would I be? Nah. It's just life. It is what it is. I just gotta, that's it. Nobody's been chosen. What do you mean? That's just not true. It's just, it's a crazy concept. But I think it's a good thought. And I hope you could hear it with what I'm telling you, so where you could just take a minute there and think about this today and tomorrow and coming into the weekend and really, really hone in on it. Because at the very least, some of you may realize, some of you thought you were not chosen. You thought this was you thought you had to be a psycho, egotistical person to walk around and say, I'm chosen. No. I'm saying you probably get math better than I do. I'm saying picking up weights at the gym and health and fitness might come easier to you than it does for me. You might understand the stocks better than this. You may understand people and emotions better. You know, honestly, some of you are probably great with people and you want to be a money man. That don't make sense. Why are you ignoring it? So just think about it, okay? But all of you have been chosen. And I really hope you could take and recognize that and what it really means. That shit didn't come here for no reason. You are not who you are for no reason. You could try to blame it. Oh, this is how I was raised. This is how I was conditioned. I don't care. All I'm saying is it exists. You have it right now. You are you, and you are thinking how you think for a reason, and you are chosen to think a certain way. So use it. But coming into Monday, if I asked you this question, I would expect some of you to have a little more insight. You know, and some of you want to get deep. You know, some of you want to do all this. This is what it really introspection. Like, really just think about this. And think about the opposite of what you would have been chosen for. You probably wouldn't have been as good at it. Maybe you would have been. Who knows? But just think. Biden to aim Hong Kong warning at investors shrugging off risks. Uh-oh. But it's simple, ladies and gentlemen. I hope you really find your path. And honestly, I would just, like, shame on anybody who has told you you don't have one. Shame on anybody who has made you feel that you don't. Because I think this is very simple and commonsensical. You did not acquire the affinities in mind that you have for no reason out of nowhere. And it doesn't mean you cannot get better. It does not mean you could grow. That's why I'm saying some of you were chosen in a direction. And that's why I'm saying really take all the things you were chosen with, figure out what you weren't, but you'll notice it's in there. You know, a lot of the things I do are all very similar. It doesn't mean, okay, I was chosen for this, so I can't do that. No, it's like, look at those factors. You were chosen to have understanding in something. It came there, and it connects to something else. And that's what will usually lead you to your progression. You know what I'm saying? If something is using your voice, probably follow that path. It doesn't mean you were chosen to talk on this area and not there. No. Some of you understood stuff. Some of you understood the gym. You might be a doctor. Y'all don't feel me? So it gets really deep. I could go on this forever. But I really just want you to think about it, okay? And I really hope, and every single person right now listening, just everybody still, like, you were chosen. And even if you weren't, even if you were not here. And that's why I'm saying, now be careful. Do not conform. And do not get arrogant. And do not get pretentious. Because that's how you were not chosen. It doesn't make sense to be chosen and look down on somebody who was chosen for something different. Being chosen is not exclusive. It is just segmented, more or less. Distributed. So I hope you're excited. You got some introspection to do, baby. Woo! So, amen. But that is your philosophy, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Wait, no. Make sure you subscribe. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hide chat. X out the chat. Hit the thumbs up button. Second link for the nightly Watchlist and main channel. First link for this Scream Alerts boot camp and real estate course. Follow me on Instagram at the Trading Fraternity SPB. SPB Pop Spectrum Brands. Big volume. It's a little liquid. Phenom. My man. My chosen man. All of you. Chosen. Oh. Y'all don't feel me, huh? I hope. I think everybody should feel me after that one. Some were chosen to her. No, I'm just saying. Don't let me go crazy. Don't let me go crazy. Spectrum Trans ways selling hardware unit. So again, you guys remember Lumen. It had to pop on similar news of selling a unit. So you have to just depends on the continuation. ES pop again. That was yesterday, huh? Oh, no. Yeah, was it Eversource or that was like Energy something? I am who I am. The Peach. I was screaming yesterday. Y'all kind of clapped me a little bit yesterday. I'm thinking ET. Yeah, not ES. I was remember that there's a lot of those yesterday. Stop it with the talking, I ain't got no animosity. Called it when I profit, you could say that shit a prophecy. The topics that you talking make me think you doing comedy. I shop it on the market every morning like the shopping spree. Yeah, see, I love it when they doubt it. Ain't rub it in their face, they could read up all about it. Can paint a perfect pic, I don't need the perfect palette. They be coming at me sideways, but still I kept my balance. God gon' get the glory in the story that I'm brewing. Sorry, I'm not sorry, I believe in what I'm doing. Yo, guys, I'm pretty godly, let me see him, let him prove it. I got mountains that need moving, round them lions and they drooling. I've been through a lot, these the lessons that I taught. See, I got a lot to teach, cause I had a lot I lost. You tryna eat with me, I'ma ask you what you brought. Nothing in this life is free, everything still got a cost. At your party, what's on my face? It's a coat of sorry. Fuck your gang, everybody want the money, but don't want change. You don't gotta love me, I'll be okay. Yeah, they talking and they barking like I care if they believe it. Honestly, you right, bro. You thinking you gon' be it? I'm not trying to fight, bro. I'm on the turn to cheat shit. Hold it, go the light bulb. I win if I'm defeated. Yeah. What's the plan without the work? What's a blessing without curse? Been depressed and I've been hurt. I've been stressed and I got burnt. I've been tested and I learned. I've been tempted, I discerned. Love them blessings but hate church. I've been knows a lot. Thought they supposed to help the flock, but they always talking guap. Thought they supposed to show the lies. Just because I say it, fuck, I can't believe in God. That sound fucking crazy, like they teaching Islam rhyme. Saying bombs is jihad. Don't use peace, use your arms. Use my speech, I disarm. Words stronger than the sword. Learn the mindset from the Lord. Man, define him by his wars. Progress ain't the final score. If you hate this, bless you more. At your party, what's on my Uncle Baby. Somebody I forgot about that song. Somebody posted that one. That was a good one. I like it. I like it. Uncle Answers, all streaming platforms. Ooh, I'm hungry. I need protein. I need protein. How about at your party? Whew. Docu's still going. Docu's second pump. It had the first one earlier. Uncle have any heat? Uncle has everything. It just has to, he's still recovering from surgery. So we have to, it has to sound a certain way. It's just not sound. He's ready to go, but it doesn't sound like Uncle. Uncle's he's struggling out there. Everybody want the money, but don't want change. You don't gotta love me. I'll be okay. Protein Wolf. Elgato event. Is Elgato publicly traded? What do you mean by protein? Like, I don't know the chemical compound, but like protein. Mike Stud. Yeah, bro, I listened to Mike Stud when I was like 18. He's OG. I think Logitech owns them, yeah. Logi. SPB still going? Interesting. So that's having a continuation. Thoughts on Bretton Woods? It was a long time ago, but it's That was one of the, somebody asked me a couple of months ago, you remember? Somebody asked me what economic event what was single most important thing that you would study? And I said Bretton Woods, because that was your latest change in modern monetary financials since what we have now. So people say MMT, and people talk about that, but when you really look at it, the last adjustment we've had to the financial system was in the 70s. That's it. We are still operating on the same global trade financial exchange system from the 70s, and that started with Bretton Woods. The city of Bretton Woods. Well, yeah, it's a city, but it's that was where they held an event to that's where they got rid of the gold standard and they made global agreements and floated exchanges. It led to a lot of pacts. There was a lot of politics before and afterwards. Very, 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 very big event. Bretton Woods Agreement is what you want to research if you're interested. Yes. Bretton Woods Agreement. Some of you are like, why should I study this city? You like, Josh, what does the groundwater have to do with the economics? I don't get it. You're like, this is crazy. You're like, okay, well, Bretton Woods vacation. Or not necessarily Bretton Woods Agreement. Look up Bretton Woods system. That's how they established a system of payments based on the dollar, which defined all currencies in relation to the dollar. Damn, is Bretton Kathy's sister? Shit. I never hear you talk chart technicals. I don't really use technicals besides like certain trends, like average volume, support and resistance. It's not a big factor to my equation, and I don't day trade as like a day trader, if that makes sense. I did do a lot of day trades the other day, but we're doing a little bit of everything. But I don't need immediate exit entry signals all the time. My approach and strategy is a little different. It doesn't really fit my needs as well. Yeah, like some overall like bigger moving averages on like longer term, but I don't weight them heavily too much, but it's not really, some people, they don't really, that's one thing I've noticed. Some people, they really look for that when they come here, and they get really confused on that, but it's not really my approach. Oh, Finra. What's up, baby? What's up, baby? How you living, baby? My guy. Most technicals are lagging. And even that, I'm not, it sucks because I don't want to discourage anybody from it. And I don't want anybody to, don't get caught up. It's not a jihad, okay? There's no like holy war between technicals or not. Like, it's just, I want people to learn and really just get an understanding of it. And the technicals will come at a certain time, And it's just not like, but some people, that's what they really are looking for. And it does simplify a lot of things. But it's just not, you can do well on both ends of the coin. And I would even argue there is, there's a lot more you could take without it. But more knowledge isn't going to hurt you. And then especially once you get to know how analysts and other people use it, it's good. Yeah, Patrick says, fuck lines. I'm blind as hell. So there you go. There you go. That makes sense. So this for Patrick, I mean, technicals really wouldn't be his thing, but that's why we got him on other stuff. Amen. Amen. Patrick. It's not even, and even then, it's like, quite frankly, we're just at a hybrid of technicals, momentum, and price action. And a little bit of fundamentals are basically news, because fundamentals is dog shit. I could honestly say at this point, like, if we are not doing real fundamental analysis, like fundamental analysis died before 2010, and then even by 2015, it was very, very struggling. But you do have to, when you're making long-term investments, some fundamentals are key. You have to know what it is, but like using fundamentals like technicals is dead. Like, you can't, like, comparing some PEs and all that, there is relative value, but it's just different. What about tape reading? If you're doing a lot of active trades and you're trying to make a big trade at the moment, and you're going to be getting, you can adjust the model. Yeah, we'll talk on that. And that's what I'm saying. That's relative value comparisons. That still exists fundamentally. But like back in the day, they used to say like anything above a PE of 20 was fundamentally unsound. That's false right now, But the tape reading isn't going to be, it's good for scalping. It's not going to be like, so like, think about it. It's like, if you are trying to get in and out and do something quickly, like if you're trying to change the oil, you don't need an engineering degree. You know what I'm saying? That's where I think some people, like tape reading, if you're using it to scalp and you're really like actively learning how to read it to see the supply and demand, buy side, sell side, and kind of get an idea of how it's trading, or you're looking to make a certain trade and get into it, then, and like, or on the ask or the buy or sell, and you're trying to see where the orders are coming in, that could help you. But not if you're, most people, you're not going to be making a quick move like that. So it's beneficial if you use it at the right time. P under 20, always something attached to it. But that's how it was back in the day. Like, back when I started trading, like, that's how I learned. Like, when I made my first stock purchase, like, it was back in the day, it was like anything below a PE, anything above a 20 PE, you don't buy it. Like, for a long time, that was like a fundamentally no. And like and then viewing margins and all that, it's just technology has really changed. And now, a price to earnings above 20 can actually happen. You know what I'm saying? Like, it's actually like companies have made 20 times their earnings in a 10-year period. So that's the key. Yeah, Apple's at 33 now. So any opinion on this strap? I'm not quite familiar with that. Like, I just don't know what that is in reference to. Tesla's probably at like 600. Power hour. You have to look at more than PE these days. Back then you didn't. Or you did, but you didn't. But that's what I'm saying. Like, pure fundamentals has changed. You still, like, fundamentals of a company, knowing the fundamental business model, how they make money, the difference between subscription, usage, like all of that. Like, that is fundamental. And that is still alive and well. But, it's not like, again, to not buy something because of the relative valuation or something on the balance sheet where, it's just not how it was in the last 50 years. That's where I'm saying there's the changes there. That's what I'm saying. It's just like we really have a hybrid of everything. Yeah, Amazon changed that. Facebook, Apple, they all did because they genuinely made a lot of money. They were making crazy numbers. The scalability through their fundamental business model, it superseded the fundamentals of their balance sheet. GME did not change. GME is the conundrum. GME was supply or supply and demand. That's it. So like GME is the conundrum, because now you have this world where people can accept those price to earnings, and you genuinely had a bunch of people believe that the fundamental business model of GameStop would be able to achieve 600 times earnings. It's not true. You see what I'm saying? Like that's the problem with it. But people were willing to buy it at that valuation, but fundamentally on the balance sheet and the actual fundamental business model, it just wouldn't be achievable. But again, who knows? But it's not like, that's what I'm saying. Nowadays people say who knows, but if you compare it to like other business models, it's just very, I don't see Apple in GameStop. You know, you don't get the same vibes as a Facebook where they're selling a physical product. That was the problem back then, is that fundamentals were based off of real trade. If you think about it, up until 2010, there wasn't that much technology, and to a degree, iPhones came out in 07, 08. So up until, like, let's say around then, so most business models fundamentally were limited based on commoditization or the service side of it. Services was where you got growth. You were able to have growth, and that, like, service side, you could maybe scale higher because it's a service, but then you were still limited by output of employees or whatever it may be. But now once you have this ability to send stuff across the world and access people and sell digitally stuff, that changed everything, because now you could actually sell 700 times what you own if you're online and it's a digital product. But you couldn't have done that back in 2010. There was nothing you could have done. Like, what were you going to sell? How would you grow 700 times without buying 700 times more? And that's why your margin was so important. That's why price to earnings and everything was so important, because you couldn't scale without your margin. So then that way, it's like if you're going to buy millions of products, you have to sell it. So that was the big fundamental shift. But again, there's still fundamentals is alive in the model. But some of the fundamental metrics that people used to strictly go off based on the balance sheet, it wasn't really, it's not the same thing today. Finra said that he went out with the girl who worked at Abivai, and she pronounced it Abivai like I pronounce it. Imagine working for AbbVie and then you're like Abivai. Yeah. I bet Buffett is confused. No, I don't think he is, because the PE ratio and those valuations didn't make sense to him, but the fundamental business model did. That's what I'm saying. Understanding, like, we should probably have a lesson on that to understand the different business models, to understand why commodities are limited, to understand the difference between usage model versus subscription models, a SaaS, and you know what I'm saying? And then services versus actual products, and then industry, and then retail, brick and mortar, and then we factor in transportation too. You know, that's why it's all really connected. But Buffett understood a lot of other stuff in that sense. I think he definitely had a period where he didn't, but you know, the man gets business. He knows what is scalable, and then again, he is conservative. That's why I bought Amazon 500% cheaper than Warren Buffett did, because of that reason. You see, he got once the business he is the king of what I told you. Better to be late than wrong. He'll pay the premium. He didn't give a shit, because now he was able to understand the business model, see the longevity, and then understand what he was paying price to earnings on. He waited till they kept earning earnings. So even though he was paying a high PE, it kind of made sense. So that's where, he was just a little later on stuff, but he's still, like, there's some older people who just totally they're dinosaurs. They died. You know what I'm saying? When the shift came in the last 10 years, some people got left behind heavy. They couldn't adapt. They would not be able to do it. He was still able to keep his hand in the cookie jar, and his overall initial strategy did a lot. PayPal limits purchase of crypto in U.S. Oh, wait, raised to $100K a week. What? Who buying $100K a week of... Man, who the fuck is out there on their damn PayPal like, I think I'm going to go buy some crypto on my PayPal right now for $100K? That's crazy. Rappers. Money laundering. I mean, you wouldn't launder it on PayPal. PayPal is the government. BBIG tweets about short interest. It's moving. Xi Jinping. Xi Jinping? Where's LT at? I can't tell you. He disappeared. No, he was in the chat like 2 hours ago. Roblox day. Keep it, be easy. Sorry, China, I had to do it to him. I'm a hard country to get along with, get on a song with. When crypto going right, I just flip it to the wrong shit. The party I belong to, the people I put on with, can never ask for nothing, cause what? Yo, we need the Lil Wayne Ransom, the CCP remix. Ow, man. Gotta go listen to Ransom. Good song. Did I finish Manifest? I don't want to answer that question. I feel very self-conscious. Josh, can you be honest? Are options it? Like, what do you mean? Like, to make money and, like, have a successful life? If it's solely on options, the answer is no. If it is supplemented, options is one of the greatest modern inventions, and especially for people with not a lot of money. It's one of the best. I've never made big checks like I have that fast without that work, without options. The point is, that's why I've never advocated doing options individually without anything. It's a supplemental tool, and having the knowledge with you throughout the rest of your life, it will take you a long way. Because you don't know, I mean, quite frankly, a lot of you are just stuck in today. You know, do you really see it? This is, why do you think I tell you to stay in the game all the time? Like, really think about it. Like, you're focused on today, whatever happened last year, whatever's going to happen based on whatever happens with your account, honestly. But what's going to, like, think about, like, 5 years from now, something happens, right? Like, think about how long 5 years is. You know, something's going to happen, right? But you will have the knowledge and capability and ability to leverage that and do it the right way with the small amount of money and make. So again, I've always said, if you hit just one or two good, that's what I'm saying. If you use it to supplement, it works. It's the best thing ever. But to go and do it as a full on, that's all you're going to do. No long term. You're not going to work anywhere. You're not going to get any income from anywhere. It is just, it's tantamount to becoming a professional poker player. So a lot of people can do it, but there is going to be a select few. But yeah, that's what I'm saying. There's nowhere in the world where you could get $300,000 of leverage for $1,000 on an asset and have the right to $1 million of stock for pennies on the dollar without a credit check or qualification. I've said it, my theory, in 20 years, they are going to change that. In the next 20 years, you will not be able to buy options without a credit check or some sort of background or qualification. Yeah, 100%. It's too unreal. But then again, if they wanted to change it, it's something to think about. But that's why I'm saying it's one of the greatest inventions to have. But it's not something that, it's not if you found a good well, right? This is your well is what I'm trying to tell you. Stop. You don't need if you're going to dip into it every day and try to, you see what I'm saying? It's going to have a limited capacity to the degree of how good you are at extracting the water. But if you know that you have this tool and you could literally once a quarter even, or again, like we're saying, once a week, or if you have a good discipline, that's the poker strategy, then that right there will give you a lot. So it does work. Being honest with you, it does work. But if you are going to be just ignorant to the fact that it's only one thing, it's not. It's going to be challenge. You're either going to have a skill or a gift or not. I would say. But doesn't it have an extensive option? Yeah, but I'm saying the total dollar amount of leverage is, again, in 2015, I made a $2,000 bet, and a week later, I have a letter from the SEC saying I have access to over $100 million of leverage now because of what ended up happening. Nowhere in the world would that happen. There's no other financial market or anything where that exists, where you could turn that little amount into that large of leverage. That just wouldn't. But then again, that happened 5 years ago, 6 years ago. So that's why I'm saying at the little events every now and then, it is going to be good. And what I sold for? No, I walked away with $60K. I was up 250 and I said, fuck this. I said, I want 100 mil. I let 200 ride. I got a down payment and I was out. That's it. It was a great one. Well, that's the net on that trade. I walked away with 60K. I was up $250,000 and I rolled over the 200 grand because I wanted the 100 mil. I said, fuck. I said, when am I going to get this chance again? I said, fuck that. I said, run it. Pigs get slaughtered? Oh, fuck no. I would take that bet today again, any day. Any day. I probably would have ghetto spreaded it and got another 100K, but do you not understand that? You mean to tell me you put down $2,000 and it turns into $250,000 in 2 weeks, and you have an opportunity where you're getting letters? You're never, bro, that's a once-in-a-lifetime opportunity. Let the Lord determine how that dice falls, baby. Let's go. Roll it. I'm crazy. I'll take that any day. You said 100 million, yes. Because if the stock market dropped 1% the next day, my contracts would be in the money, and I would be in the money on $100 million worth of SPY puts. So that means every dollar for dollar after that would be like having a $100 million position. So essentially, every couple of percent, I would be making 10, 20 million bucks on a levered option with time. That's why I'm saying, you mean to tell me I put down $2,000, I walk away with the down payment, 50, 60 grand cash, I pulled that out, have a down payment, and then now the free money I have, I put $200 to potentially make $10, $20 million a day and have access to $100 million of puts in the money. I'm going to take that. And that's why I'm saying options are insane. Do you still have those letters? I still have to file with the SEC. We have to file forms for our trading. I didn't do it on stream, but I did do it live in front of a group of people. That's when we were private. We weren't public on YouTube. We had a private group. We did everything I give you here today. We did it privately with a small group. They all made money. They all hit the same trade. Some of them more or less than others, and some of them gambled in a different way. But I do have a recording of that. I have those all in my archives. I have video recording of all that. I've recorded for ever since like 2015, 2014. I've recorded every single trading day that I've ever had. I love it. That's why I was going through the watch list the other day. I was so excited. I was like, at the very least, man, it's good for what we could do for history because we have all of this recorded and documented. No matter what, every trading day with an analysis of it, a recap, the live view of it, down the road, I think that'll be very, very useful. I was young think about it. I was 5 years younger, 6 years younger. I had a lot less experience. It was kind of crazy to think about. Very, very crazy. I was still, at that point, I still had almost maybe 7 or 8 years in the game. But it's crazy. I've double that experience now. But that's why it's like, I've watched the video before. I watched it like a year or two ago. And I posted a clip on it. I have a clip of it on my video or my YouTube on the main channel. But, I was like, man, you could hear it. I sounded young in the video. And it was such a different time. It was so crazy. It was a blessing. Much tougher now. No, it's just different. I would say it's the same level of difficulty. That's it. Did your heart sink when you had 100 mil in your fingertips? No, I went full tinfoil. It was not what you thought. I mean, come on. How did you feel when you hit TLT? Were you like, oh my God, thank you, God? Oh, you were like, God, thank you for TLT. Oh my God, this is such a surreal moment. You were like, what's going to happen next? Holy shit, what do I got to do with this? I got to do this. I'm going to do this. There has to be another one. There's going to be anything. It's going to be another one. And now we got to see this. And now this happened. And then if this happened like that, and then that happened like that. Oh, my God. I know it. Oh, my God. I can't believe they're hiding this from us. And they're hiding this. And then you see that. And then they did that. Oh, my God. Oh, no. I'm doubling down on this one. This one is no. Uh-huh. Yeah. Oh, no. Why can't I can't sleep right now. Did you not see what happened? Oh, man. Tomorrow's going to be exciting. Oh, this is manipulated. They manipulated it. It's a bull. How do you not know the debt? Look at the national debt. This isn't. So, yeah, you're never going to appreciate it. I appreciated TLT a lot. I mean, that's why I told y'all. I said do something with it. And even then, we didn't make moves after. But I know a lot of you went through that. Everybody does. That's why I'm saying whenever you hit a big a trade like that, that's 100% what's going to happen next. It's very hard to. So I said keep it. I said cash balance, keep it. Go buy a house. That's it. Pre-market, I did. I mean, that's why I was saying that's like the beauty of experience because I got to be there. So that's why if it ever happened again, I'm thankful that I won't. I will still make mistakes. Probably, I'll deal with something new. But at the end of the day, there's a lot of stuff where I have a good background of how I've just lived through it realistically. I will flip off everybody at work that told me I'm not going to make it. Maybe. But I would get that out of your heart, and at the end of the day, you probably, by the time when you do make it, that desire probably won't exist. But I was thinking about that the other day. I was thinking, man, some people, I was like, they want to be like what's like being evil, like in a way where it's just like, I know some people, like, they really expect to, like, they want to, like, make so much money and they want to be so successful, but, like, they don't want to do anything with it. They, like, I've talked to people and they just want to be, like, mean about it, and, like, they don't want to, like, help anybody in any, it's like, it's so weird. I'm like, you really think, like, you were gonna advance to a level, and you're gonna do it just being bad, like evil, just like, and you might be able to, but, like, I don't know, it vibes in a different way. Where I was just like, some people, and that's why I'm saying it makes sense though, because if your attitude is very negative in that way, you may not even get to that point to a degree. What if you're naturally an asshole? There's a difference. You know, I think naturally I'm an asshole. That's why I tend to offend some people from time to time without knowing it, or I'll say even then, that's why me and Mustafa get along, you know, but I think there's a difference between being an asshole, like, you know what I'm saying, just being like a little dickhead from time to time, versus, you know, just like negative and evil, like malicious, or like you don't want to, like, just like people who want to get to a high position and then take it out on people. You see what I'm saying? Like, I'll be an asshole. You say some stupid shit. You know what I'm saying? Well, I'll come at you on that, but not to, like, I would never want to use my power or my money to bring somebody down, or to take it, or to use it to attack people in a way, you know? That's my old boss. Yeah, some people are like that, though. I know. That's what I'm saying, but I caution you to you know, because even then you will be able to advance if you don't have that attitude a lot easier. That's like Earl Nightingale said. You'll notice people at the top of the corporate ladder and people at the top of an industry, they usually have really good attitudes more often than not. But then you'll notice, like, that negative attitude, it belongs in its own tier. That's what I'm saying. It's like stepping on ants. Exactly. That's exactly what I'm saying. Like, I was thinking about that the other day. I was like, why are some people really like that? They really want to make the money to step on ants. And it's like, it's so crazy. It's crazy. But it is what it is. I mean, you know, to each his own. You were all chosen for something, so use it however you please. So you're saying you don't want a 51% attack ETC? I mean, that's like a financial thing. I would, like, if I could do a hostile dude, I'm so mad. There was a company I wanted in 2018. I was gonna do it with Olivier. We were gonna hostile takeover a company, and I was gonna pull a bio trick. There's a biotech trick. It's Skrelly has talked about it. You guys this is a good one. You guys want to hear this trick? This was we ended up not buying the company. He didn't go through with it. My boy, I needed him to come in on the other half, and we that end of the day, we could have made money on I'll explain it to you, but there's another the stock has quadrupled. We would have quadrupled our money even if the trick didn't work. So what you do, we were gonna hostile take over a failed biotech company. So there was a failed biotech company, and if you work on orphan drugs, not drugs for orphanages, but drugs that are not like rare diseases and rare, like things that are not where people aren't putting big money towards, the FDA will give you a fast track approval coupon. So like if you say, I'm going to go study, we're doing an FDA study on the effects of mosquito bites in poop, or I don't know, or people get like a certain disease that affects a small group, and we're going to research it. So you get a fast track approval from the FDA if you do it, right? But then what you could do with that people don't know, it's transferable. So you could sell that coupon. It's like a coupon for the FDA to give you a fast track to FDA approval. So the coupon cost, you could sell that coupon anywhere from $25 to $100 million just for that one coupon. So to hostile take over the company, it would have cost us like $7 million or $10 million. So that's why I was saying we buy it, we use no, it's not illegal at all. This is totally legal. This is playing the biotech game. And then you go in, you could go and advance the study that you have because you already have everything set up through the company. And then you'll get the fast track, and then you go sell the thing. AbbVie bought a fast track approval for, I think, $50 million before. So AbbVie has bought one of them from somebody. So, yeah, we ended up. My buddy, he was a little bit worried about it, and there's a lot that went into it. We were worried about a couple things, but even then, the stock shot up a ton. Yeah, it was actually Berkshire Hathaway. So you just have to buy an orphan. Okay. That's... Could that get into legal issues? No. I mean, the only issue you would have would be hostile taking over the company. That's it. The only real issue is getting the actual company, because you're about to go in there, take it, fire the board, and then instruct them to... It's a very weird concept. That's where you would run into issues, or if somebody caught on to our plan and then we're 30% through and then they bid that shit up, we're fucked. Corsair webcam news? Excuse me. Yeah, that's all. It's just, dude, that's literally just business and deal making. And it's just knowing that's extracting value from the company. You see what I'm saying? I see a company with a market cap worth $10 million, but I see that they have access to an orphan drug. That's extracting $100 million in value from a company that's only worth right now at $10 million. That's just a value play. Priority review batches. Why wouldn't the company do it? That's on them. Who knows? Some people don't know. They may not think they have a shot, but it's not. It's a process. Like, it's just like building a house. It's just like taking over a remodeled house. It's like when I see a house worth $2 million and I could get it for $1 million, but then it's like, okay, you have to put in this. It's going to take this long. You have to go through a step-by-step process. I don't know, man. We got 30 minutes. SPY getting some steam. NASDAQ's wrecked. Oh, no, look. Damn. Come on. Don't play me. Don't play me. I set it on the watch list. It's there. I didn't even notice it. The Dow. The Dow is green. That's, again, yesterday's watch list was all about Honeywell, but the Dow is green. That was the one that was consistently positive. So S&P and NASDAQ, not so much. Bonds hit, and the Dow. I didn't even see the Dow was green. That's crazy. I thought because I was like, NASDAQ is fucked. Laggers and leaders. You got 15-15, split evenly. You just got Honeywell and UNH leading on the upside, and then HD. The leaders are outpacing the more neutral ones. And then CRM clapped. $30. I can't believe this month is. I know. Doesn't it feel like July just started? July started and we just got thrown into a torture chamber. And you're like, I can't believe we've been here for 2 weeks. Everything's been going crazy and it just flew by. I'm just, wow. Hold on, let me turn on the AC. Yeah, I'm in a coat. God bless you. There was maybe one day on stream where it was actually Josh's birthday and nobody knew. Actually, you want to know a fun fact? I don't want to give it away, though. I don't want to give it away. It was actually hilarious. It's actually hilarious. It was like I can't stop laughing about it. The day that it was actually my birthday, not one person said it. It happened. It happened. The market, and not one person that day. I was laughing so hard. I was like, oh yeah, I swear I could pull it up on stream. We have it all recorded, baby. Nope, the market was open. We had a full trading day. And nobody said anything. That's a stream. I can't tell you. I mean, that's it. I forgot. What was the PHILO that day? I don't know. No, it's funny because I had somebody over. One of my friends was with me. They came down for my birthday, and they were laughing the whole time. They were watching the chat. They're like, I wonder if anyone's gonna. They're like, what are you gonna do if someone says it's your birthday? And I was like, they're not going to. Watch. It's not Mumu. My birthday was not last week. No, that wasn't my birthday. That was a holiday. See, that's the irony I like. That's good irony. I think it's good. Sit right. I was just standing. I'm sitting there now. I just moved the desk. I was around when I went to Tulum. It was not. It's good. It's good. You were not chosen. Dude, Mumu loves the philosophy. Yo, Mumu is really thinking about the PHILO. Everything he's like, was I chosen for that? Was that chosen? He gonna be at Chick-fil-A today. He be like, I think I was chosen to choose the Chick-fil-A Chicken Deluxe. Oh, y'all don't have Chick-fil-A sauce? That's what I was chosen for. That's fine. It's all everything is chosen. Some people were not chosen for the stocks. He said, Josh, I was not chosen to get a long term. It makes so much sense to me now. He's like, wow. This is crazy. It's like I was chosen to Off-White. I was chosen. Some pretty big Tesla bull sweeps came in. What's the reason to telling people who you are? I mean, it was really like genuinely, I'm not going to lie to you. Like, it was part of like a big troll. Like, I just wanted to I just thought it was funny initially. And like, why would I do that? And then people started getting a little weird. And then everything, my background, the people I work with, my family, all of that. And I was like, all right, I guess it has some positivity. And then after I started streaming, oh man, I'm so thankful. People just got really fucking weird, dude. And now it's like, it's kind of it's a blessing in that sense. But there's many reasons for it. But initially it was just like, it was just fun. Like it was hilarious when you really think about it. But now, like, the fact that I see how I've been treated with some stuff, and I'm like, oh my God, thank God. Because it is like, is very, very different. Yeah, Dow Dow gave up right when we said it was green. Dow was just up 0.1%. So Dow is still in there. Is it worth not telling them? I mean, it goes both ways. Like, again, I have to even answer that question. Like, when I genuinely don't give a shit, like, again, I meet people all the time. And like people on stream, if any of you have seen me in person, I mean, I'll go get lunch with you. Like, I'm not really like, that's why I'm saying it's a blessing and a curse in the same sense. But it's like, you're not, it has its drawbacks and it has its advantages. If you had your face in stream, channel would be bigger views and all that. Oh yeah, they prioritize that. So part of the new algorithm change on YouTube, they prioritize, like, they want to show individuals in their face. Like, you will get I would get priority if I turned a webcam on. And we got cool shit. I could show you it'd be a dope setup. You would see a lot, but it's not like, at the end of the day, it's just like, I like it how it is now too, though. It's something, I like what we got. So, but it is like, it's a different type of, it comes off differently. The ones that are chosen. Why don't I show my face again? Just explain that, but it's still with all the different. Again, it's not that serious, is what it starts out with. I hope you know that. That's why. But now, I mean, it's lately over. I'd say more towards 2020, and it's in the beginning of the year. It's proven to be very beneficial. Like, you guys would be surprised. Y'all don't, and I don't like to talk about it. Like, all of the shit that happens, like the emails, and sometimes, I mean, it does affect me. Like, you guys will see it. Like, I'll be in certain moods with people, or I'll be a little bit more jumpy because it's like, it's insane. Like, I'm honestly, like, coming for, like, there's some shit that I would never, like, that would never come out. Like, I cannot even fathom some of the behavior and shit like that. He who remains. Amen. Amen, baby. What do you think is the reason? I just don't think about it. It's not really, I just pray for people. That's all. But I've learned a lot that I could take the positive. I've learned so much from people. That's why I'm saying it's funny, like, because I was young when I made any online profile. I was young. I've been on social media since like 2013. Like, I was young. And that's why I was like, wow, it's crazy to see. I've learned, like, that's why I'm saying it. What started as me trolling, it's just turned into I've got to learn a lot. DVA, we have a play on DVA. Yo, we got an old one. Do we have puts or no? We have calls. Damn it. DVA getting clapped. Shit. I'm lagging on this. I don't know if there's news. Come on. What was that DVA? DeVita and former CEO indicted in ongoing investigation of, it doesn't say the thing. Department of Justice, former CEO indicted on ongoing investigation of labor market collusion in healthcare industry. From the Department of Justice. So here's the source. My wife works for them. My neighbor. Y'all know a lot of DeVita. Yeah, they're charged on labor market collusion. Put options surge. They're down most in 9 weeks. Honeywell Boo Boo. Honeywell Boo Boo doing good. Your mom. Why does everybody work at DeVita? Yeah, I've never heard of this place. Everyone's like, oh, dude, my neighbor fucking is there. My wife, my mom. Damn, everyone fucking works at DeVita. The fuck is this shit? Oh, it's dialysis? Oh, that makes there is a lot of people on dialysis. That would make sense. Some of you might know it through that or through medical. You know what my mom told me the other day? I forgot. So my mom used to work as a dialysis. That's what my mom did. So my mom used to do, like, she loved it. She would help a lot of people. She would work. She was a nurse at a dialysis clinic. And she was like, my mom was very like, you know, you've heard Mama answer stories. Like she really gave a shit comparatively. She told me some of the stories, and like a lot of her patients loved her. Remember, I told you my mom missed out on Amgen in 1999. She said all of the doctors quit. They just bought Amgen after Neupogen. They quit, and then the stock went insane afterwards. And they said that the doctors just quit and put all their money into Amgen. But then the story she told me the other day, she said she had one guy, and he was dying, but he loved my mom. Like she said, he would always like give her advice, and he did stocks. What stock do you think he was telling my mom to buy in the early 2000s? She told me this the other day. I was like, what? She's like, he would always tell me, go buy this stock. It was cheap. Netflix. She said this guy was telling her to buy Netflix. I could only imagine how cheap it was. And she was like, I was always so safe though. I said, no, it's gambling. She said, why? I don't. No. This was back when they were selling DVDs, like shipping them to you. She hid the game. No, bro, she got so many stock tips. Bro, she literally, and then that's why y'all better be healthy. You know how many people are on dialysis and they made a lot of money? Oh, y'all don't want to hear that. Oh, they don't want to hear that. Uh-huh. You don't think there's a lot of people out there making millions of dollars, and then by the time they get old, she had a lot of stock tips. She said a lot of them were in finance, and she said they always try to get her to do stuff, but she was just too conservative. She's like, no. Haram, Habibi, haram. Mm-mm. 10 minutes is been rigged. Netflix doesn't plan to charge for games. Are my parents as patriotic as you? Bro, I'm not even that patriotic. I mean, I just have to give credit where credit is due. I mean, like I say, like they came from Egypt. There's nothing for them to complain about. And I'm speaking of my own, and they will say the same exact thing. You know, my dad went to jail for choosing a religion. Just process that for a damn second. Like, they fled from Egypt. Like, it's not, like, it's a whole different, and, like, even then, I was thinking about it, like, you know, your guys' reaction with, like, remember we were talking that, like, college, like, the college and, like, being from California. Like, you do the Pledge of Allegiance, you mean you're not that patriotic? When I do the Pledge of Allegiance, who do I salute every morning? Just think about that for a second. These are the veterans, baby. It's the people, no matter their color, creed, religion, anything. People who have gone out and sacrificed and done stuff to allow the certain opportunities. I do not accept all of the negativity and bad things that have happened, and I'm not ignorant to any evil that has occurred. I am saluting my veterans and the people who have even died and the people who have family and are related to it, and the people, because I know a lot of veterans and they don't always agree with everything. But they still go out and put in more work than all of us ever will. And y'all will thank me for coming here, spending 7 hours sitting down. They're spending 10, 15, 20 hours spending time away from their families, doing all of that just to get shitted on when they come back and not be appreciated. Like I'm saying, I got to give credit where credit is due. So it's not, and even then I was even thinking, like, come on, like, it's just the experience I've had with the people I've known, my family, again, the opportunities that we wouldn't have had. It's fun. My dad told me that yesterday. I was talking to my dad yesterday, and he even said, he said, imagine if you were born in Egypt. He said that to me yesterday. He said, you think you'd have this nice little car? You think you'd have this house? He said, bro, you would not. He said, if we stayed in Egypt, regardless of everything going on, even how America is today and anything, he says, if you think, And that's what he said. He said, it's very humbling. He said, always. He said, don't forget that. But like I was saying with the Cali thing, where's the Dow? Dow's up 0.1%. SPY struggling. Not too bad, honestly. Dow going positive is a good sign. In the midst of all this, Dow with bonds highlighting more value, but it's only a little bit. Yeah, man. Bradley Frizzle in the peach would have a whole different meaning if I was born in Egypt. I say, oh, Bradley Frizzle in the peach. Let us trade. You have peach, I give you apple. Okay, very good. Bradley Frizzle, I love the peach. How many peach for harvest? Yeah, that's the reality, my friend. But no, I was like, when some people say, like, I mean, again, based on my experience, like, I grew up in California. Like, I grew up in one of the most places where lack of patriotism and all of the craziness of Cali, the thing, think about being born and raised in California. And that's why some people are like, you are so conservative. You are so patriotic. I'm like, I just have to give credit where credit is due on some areas. That, like, when you really think about it. Egyptian people very good. We love Egyptian people very nice. We're very, very, Egyptian people very good. I love them. I love my Egyptians. You deal with them, you'll usually have a good experience. Egyptians are great. We're great. They're funny too. They're funny. I don't know how Mustafa's funny, but he's funny. They're usually funny. Have I dated an Egyptian? Nah. My mom is so mad. I think I've only went out with two Middle Eastern girls in general. I'm not really like, I tell my mom, I say, nah, Mom, I'm sorry. Yeah, I'm not really, it's just not I don't know, it's like, it's weird. It's a weird story. I don't know why. It's just not my vibe. We are in America, Habibi. I love. Yeah, I feel like they all just remind me of my mom. And no shade. If you are a Middle Eastern woman, I love you. You're honestly the best type of woman. I would say I love my mom. Like, it just reminds me of my family, and I've been shamed into so many things. I'm like, I can't do this. This brings up a lot of, I'm like, I just can't do this right now. All right, ladies and gentlemen, we're making our final approach here. As we make our final approach, if you guys are holding on to any bags, please stow them away in the overhead bins above or firmly beneath your seat. We'll be coming through the aisles with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal in the description. That's going to be our nightly Watchlist and main channel layover, and then we're going to be taking off promptly around 6 a.m., 6:15 out of sunny San Diego, California. As we come in here into San Diego International Airport, it is about 84 and sunny. Nice weather outside, looking like a good day as always, and great views. We are still under COVID guidelines, so please make sure all masks are worn and exit one row at a time. As always, we appreciate your guys' business. If you're interested in your Cold Rapid Awards program card, please fly down your flight attendant, and we'll get that to you as soon as possible. As always, thank you for flying with the Colt, and hopefully you have a wonderful evening. Oh, yeah. 1 minute! Woo! That one, I don't know. I almost lost it, but it felt like it hung in there. That was a weird one. That one was a weird one. I don't know how that one, I felt like I lost it, but none of the... Woo! Woo! Let's go, baby. Let's go. You got 26 seconds remaining. Wrap it up. The Dow is a strong green. Dow is a strong green, baby. Not really strong, but decent. Decent considering what we got. It's looking good. It's looking good. 10 seconds. Oh, man. Tomorrow's Friday, July 17th expiration. Oh, shit. Oh, shit. Oh, shit. Uh-oh. Ding, 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 ding. On. Let's go, baby. We did it. We made it. We did it. We made it. Woo. Wow. That's it. It's over. It's over, honestly. Not as much hype today. I think I caught Southwest, so I'm working on it. But either way, 1.5 thousand likes, baby. They showing out. Look at that. Look at that. Look at all the opportunity. Opportunity on both sides. And that's what I came to thank you for, baby. I hope you had a wonderful day. God bless you. Thank you for being here. Whether you liked me or not, you gave me an opportunity, baby. And that's all we need, man. That's all we need. You gave Chad the opportunity. You let them get in there, get some questions, post some news, keep it positive. We actually went over a lot of different stuff today. We got to hear Powell, all that. So I'm grateful. I'm thankful. Thank you for all the people who chose to show love and positivity and keep up the environment that we have here. We love it, and you are appreciated. I hope you realize that. Shout out to all the members, baby, rocking the badges. They supporting the channel. They keep it going, man. They show love. They show love. The stream alerts, first link, they get to show love. Some of them get the info because they can't be here. Either way, we love you, and God bless you, and thank all of you for being on there. And the ultimate group is everybody, whether you are a member or not, stream alerts or not. If you come in here and you show love and you come in here genuinely looking to learn, contributing and facilitating what we got here, I love it, and we're thankful for your time, baby. We never expect anything out of you, so hopefully we got to give our shout-outs to the people, man. There is a lot of people who do put on, and they support this channel. They support everything. They support me mentally. They are there. They got my back. They got the positivity, but there's a lot of people, whether you're a lurker or not, whether you got a membership badge, anything, we do not care, man. We did not expect anything when we started this, so everything is just a beautiful blessing. But we don't expect anything out of you except for a good attitude, man. That's it. If you could come in and put in the work, we love you, man. And you show up with some respect. You show love to your other Chaz, baby. We love it, man. That's it, you know? So God bless you all. Thank you once again. First link for the free launcher. Again, this is us for you. I paused there for a second because I had an idea. I was like, I think I might put in I might include today's audit into the free long-term. So I hope you guys have the long-term alerts. But ultimately, you know, you guys know I'm here for you, okay? I love you all. I want you to have success, especially when it starts to get a little rocky. This is where your knowledge comes into play. And if you had that long-term, if you got to go through the audit, I want to make sure you really took that seriously and look to build what you got. There's nothing wrong with what you got. It's all about how you're going to be moving forward from here. So make sure you are getting an idea of what you're holding. Do not let the emotions get the best of you. Have a plan and stick to it. Thankfully, we have very simple rules to follow, and it's all right there. So again, don't throw it away. You've came so far, and you've gone so good with it. So this is what you got. Just focus on building and maintaining. At this point, for some of you, there's maintenance that is required, and that's what we're coming down to. Some of you still need to do it. Some of you need to get it. You need the long-term alerts. Some of you, we got a maintenance, oil check, oil change, right? Check engine light. And that, what do? Let's see. So let's see. Hopefully that audit helped. I will try to include it in here. But first link, baby. And keep it going, man. Keep it going. Remember, you're only on year 2. Colt maintenance package, baby. Amen. Free 99. Free 99. You bring it in. If you're willing to bring it into the dealer, we got you. We'll take a look at it. We'll let you know what you could tweak yourself. You know, free 99. That's it. Just maintain it, baby. Maintain it. That's it. It's okay. You're going to, ooh, It's beautiful. But second link, baby. Second link for the Nightly Watch is the main channel. If you have stream alerts, you don't need the long-term alerts. Everything's covered in that, so you'll be good to go. Second link for the Nightly Watch is the main channel. Third link for that membership badge. God bless all the members. Fourth link for the merch. God bless all the people rocking that positive merch, baby. You gotta put a smile on your face, okay? Okay? Check out the new channels. Colt Real Estate, Colt PHILO, Colt Cars, Colt Music, Colt PHILO again. Follow me on Instagram at The Trading Fraternity. Shout out all the people on there, even though I don't really use it. I love y'all. I just love y'all. Y'all show love. God bless you, man. God bless y'all. Let's go. I just love y'all. That's it. How option? That's it. That's it. Everything else, that's it. You know what it is. Okay, prayer request wall. I love y'all. And mama loves y'all. Everybody does. Y'all got the whole Answers family rooting for you. And we rooting for your family. And hopefully you taking care of your family out there, you know? That's it. You realize that? A lot. You know how many people got confused today? They're like, wait a minute. If your parents had a house, how the fuck did you? I don't get it. You know why? Y'all don't feel me. Because one person, all it takes is one. One person can change the trajectory of everything and everybody around you. Do you know that? You get what I'm telling you? I'm not here to beat my own chest. I'm here to tell you that you could change everything and everybody's lives around you. Oh, y'all don't feel me. Y'all don't feel me. That's you, baby. I told you, I'm just you from the future. I just came back to be the voice in your head to tell you this. And that's all you need to remember. That's it. Because some people are going to be like, how do you do it? It's going to be you. That's how. That's exactly you. You as an individual. Ooh. 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 Y'all don't feel me. Y'all don't feel me, huh? Mm-hmm. I don't think they feel me on that. They were confused. They didn't get it. That's why I hope you know that. One man can change the world. That's for you, man. Y'all gonna change. Y'all gonna change your families. One good decision on your part. That's fine. Everybody around you could do something different. But you, if you put in your hard work, you do something well, you do it good. You don't give up. You focus, keep your head down. Don't point a finger, ever. Don't point a finger at anybody. Just get to work. Oh, yes. Oh, yes. Mm-hmm. See what I'm saying? That's it. So let's go, man. Pray for everybody. Wish blessings. If it can't flow through you, it won't flow to you. Bless them. Pray for everybody. You want everybody to change their families. You want everybody to be lifted up. So let's go. Let's go. Being focused, being mature, concentration. Amen. 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 So fill it out, baby. We don't care what you believe in, okay? I don't care what you believe in. We're going to root for you anyways. We're going to pray for you anyways. And honestly, some of y'all, you're getting prayed for regardless. That's it. Any negative comment, you're getting prayed for. We love y'all. That's it. That's it. That's it. Y'all don't feel me. Y'all don't feel me. Uh-huh. Yeah, that's it. So we love y'all. Pray for your brothers and sisters out there. Pray for me. Pray for my family. Pray for the world. Pray for the people in Cuba. Pray for the people in South Africa. You know, everywhere, man. Just pray. Just pray and slow down and relax and get ready and maintain that long term. That's it. That's it. That's today. We did another 7 hours. Honestly, my voice is clapped. I don't have any hype for you. I need the hype from you. Honestly, you've already given it to me. Honestly, I feel the love in the chat. I can't get hype, but it's not responsible. If I go spaz out right now, it's going to clap me for Friday. So I'd rather get clapped on Friday. I'd rather get clapped on Friday. We still in the game. We still in the game. And we going to go to the gym. You still going to wake up and drive. I can still give it to you. This is me on easy mode. I'm on easy mode right now. Ooh! I could get hyped. I was just thinking about the PHILO. What are you going to walk away today with? Can you walk away with something? If you could walk away with something to tell you yourself today, what is it going to be? Huh? What are you going to walk away telling yourself today? Please. Please. Come on. I'm waiting. I'm waiting. Oh, nobody? There you go, baby. Amen. I'm chosen. Say it. I don't care if you say it. Saying it does something to you. But you got to believe that every factor, you are chosen. You were chosen to be good. You were chosen to be bad. You were chosen to be an asshole. Isn't that? This is for everybody. This is for everybody. They don't feel me. They don't feel me, man. You better take that's enough. That's enough to walk away with today. I'm serious. You better think about it. Think about the duality, the dispersion, how it has been dispersed, of how everybody has been given a measure equally of chosenness. Y'all don't feel me. Every single one of, everybody chosen for one specific thing. Not even specific. It goes deeper than, it's a deep concept. So y'all better think about it. Y'all better think about it. Stop ignoring what you were chosen for. Why are you fighting it? You haven't even thought about it. You going in, you living like an animal, instinctually. Instinctually. You see what I'm saying? Sometimes we don't think. We just go by. You live life. You do this. You do that. You got an idea. You don't know why you're doing it. Some of you don't even know why you are doing something right now. Oh, you don't feel me. So figure it out. Y'all are chosen. Oh, man, this is the cultiest shit you'll ever hear. But this is for everybody. Some were chosen to be in a cult. Some weren't. Some were chosen to understand what we really mean when we say cult. Some people were chosen to only see it at the surface. Some people were chosen, oh, man, I could keep going. Let's go, baby. Let's go. So that's it. Take it. Wake up and drive tomorrow. No chameleon. Wake up. You're going to wake up. You may be tired, but you're going to wake up. And you get to choose. Or you can say, I'm tired, I feel bad. Or I'm tired, but I feel good. Woo! Woo! Just like that. Just like that. Fubo? Oh, yeah. Blueface, baby. Oh. I love it. But I love all of you. I wish I had more energy to give you right now. I really did. I really do. I wish I had, but that's good. That's it. Y'all need to give me the energy. I already got enough. Y'all keeping me going on this. I'm ready. We still got a watch list. We still got the rest of the week, but take it. Take what you can. See, because the days like today, you are going to realize you have more energy in you than you thought. You are going to realize you have more power than you thought. You are better than you thought. And you are more chosen and have way more purpose than you thought. Do you feel what I'm saying? Because some of you might feel way more hyped than I am. Woo! They don't get it. They don't get it. I hope they get it. God, let them get it. Please, Lord. Please let it connect. Let it connect. Please. Please. Amen. In Jesus' name. Amen. Please. Thank you. I hope they get it. I hope you get it right now. Because not everybody's here. It's like some people were chosen. That's crazy. That's crazy. So, ladies and gentlemen, go read Richest Man in Babylon, Proverbs New Living Translation, and The Strangest Secret in the World, and Lead the Field by Earl Nightingale. But that is it. I love you all. Don't ever forget why we keep going, why we excited, why we ready to go, why the attitude stays positive no matter what the body tells you. Ooh, ooh. Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Love you all. I hope you enjoyed today as much as I did. I will see you tonight on the watch list, and I will see you in the morning. Peace out. Oh, hey, Josh. Wait. I want an earnings pony with his clap. Okay, love you. Bye.